OBS. Yes. Please give me confirmation about audio and video clarity, then we can start our discussion. Yes. Please give me confirmation about audio and video clarity, then we can start our discussion. Very good morning. I think now we are in chapter 6A reductions. Some of these series related sections are already over. I think if you remember ADDTA, TTB related to interest from the deposits. One is saving deposit, one is covering all deposits related interest. ATU, if any person having the disability, he can get the, sorry. Some of these series related sections are already over. I think if you remember ADDTA, TTB related to where it is playing there. Deposits. One is saving deposit, one is covering all deposits related interest. ATU, if any person having the disability, he can get the. If any person having disability, he can take ATU. And ATQQB RRP related to royalty income related to books, royalty income related to patents. Then 80G series concentrating totally on donations. The purely donation, 80GG deduction with respect to rent paid, 80GGA donations related to scientific research as well as rural development. 80GGB, yes, donations given by the domestic companies to the political parties as well as electoral trust. 80GGC, donations given by the other person other than domestic companies to the political parties electoral trust. Then we started discussion related to 80E series. In 80E we are concentrating interest on loans. This is an educational loan, these two are housing loan, this is an electrical vehicle loan. Now we can start the 80D series. Very important in exam point of view. In every DTAA question mostly we can get the 80D series adjustment. Okay, in 80D series how many sections we have? 80D, next 80DD, remember series 80D, 80DD, 80DDB, totally how many? 3. These 3 sections are very important, so that's why I'm not at all completed these things in the yesterday's session. Okay, now how many sections we have? 3. Section 80D, 80 super DD, 80DDB. Now we can start one by one. 80D, D series totally related to medical. Okay, but first section 80D, you have to remember these four types of an expenditures are covered in 80D. Now we can take 2 minutes time and we need to know the what are the 4 points. If you are taken the medical insurance policy, you have to pay medical insurance premium. That is an expenditure for us. That medical insurance premium you can take it as deduction in 80D. Now, second one, if you are contributing some amount to the central government health schemes, simply it is like a contribution to central government health scheme, not state government. Just you are giving some amount to the central government health schemes. That is also eligible for deduction under 80D. Next, preventive health checkup. If you are doing any health checkups for you and your family, that preventive health checkup expenditure also covered in 80D. Last one, medical treatment expenditure. So if any expenditure you incurred on the medical treatment, that is also allowed as deduction in 80D. What are that 4? You have to remember 4 in order. First one, medical insurance premium. Second one, contribution to central government health scheme. Third one, preventive health checkup. Fourth one, medical treatment expenditure. Okay. These 4 expenditure we can take it as deduction in 80D. Now, who is an eligible SSE for this section? Individual HUF. Resident also okay, non-resident also okay. Next, sir, for whom we have to incur the above 4 expenditures? Okay. If you are an individual, you can incur any of the above expenditure for yourself, for your spouse purpose, for your dependent children. D, 80D, dependent children. Please remember like that. Not all children, sir. Dependent children. Next, parents. Brother and sister covered? No. If you incur any of the above expenditures for your brother, sister, even though they are dependent also, this section will not give the deduction. Remember, for whom you have to incur any of the 4 expenditures, sir? First, for you, for your spouse, for your dependent children, for your parent. Parent may be dependent, independent, but children must be dependent. Next, sir, HUF. HUF can incur these expenditures for any member of HUF, whether dependent or independent, that's okay. Understood? Now, sir, what is the mode of payment? How to make these payments, sir? Any mode other than cash. Remember here one logic is there. Any mode other than cash means cross check also, bearer check also, anything also okay. Okay. Other than cash, in any mode you can incur. But preventive health checkup is there na. For this, you can incur in the form of what mark? Cash also. Preventive health checkup purpose, you can pay that amount in cash. The remaining definitely other than cash. These points understood all of you? HUF can incur this expenditure for any person. Sorry, any member of the HUF. So if you are an individual, you have to incur these amounts only for yourself, your spouse, dependent children, parent. How many expenditures are covered? 4. Please tell me. Medical insurance. Remember. Medical insurance, health insurance is one and the same. Life insurance is different. Life insurance is covered in 80C. Here medical or health. Second one, contribution to central government health scheme. Third one, preventive health checkup. Fourth one, medical treatment expenditure. Now, listen for 5 minutes carefully. Very important. Very important. Now, eligible SSCs I am classifying into 2. One is whom? Individual. Second one, HUF. These 2 fellows only, but I am writing separately. In individual, I am classifying this set of eligible persons into 2. So, above line, this is my family. Okay. This isn't my parents' family. Separately, I am classifying for this section limits. You, yourself, as well as your spouse and your dependent children, one family. Your parents, another family. Okay. I will explain you HUF related after some time. First, concentrate on the individual. So, individual related persons I am classifying into 2. Individual wife or husband, dependent children. Second, parent family. Parent means nothing but mother, father. Here I written only three expenditures. What are the three, ma? Medical insurance premium, central government health scheme contribution, preventive health checkup. That is covered in A point. Okay. Individual is incurring the, remember, individual is incurring the medical insurance premium on his family or parents' family, he can get deduction. Tick mark means what? Deduction he can get. Central government health scheme, if he contributed for his family, allowed as deduction. For parents' family, if he contributed, does not allowed as deduction. Third one, preventive health checkup, ma? Yes, for your family, okay. And your parents' family, if you are invested also, okay. All these things together, maximum how much deduction you can get? 25,000. Sir, I paid 45,000, sir. These three things together, but I can give what is the deduction maximum? 25,000 only. For your parents' family, another 25,000. Totally how much? 50. Understood? For your family, 25,000 limit. For your parents' family, another 25,000. But for your parents' family, one amount is not allowed as deduction. What is that? Central government health scheme. Next. Sir, in your family, any of the person is a senior citizen, or in your parents' family, any of the person is senior citizen. Now we want to provide the more deduction. That's why this limit of 25,000 got increased by the another 25,000. When additional deduction we will provide, additional deduction also another maximum 25,000 when any person is a senior citizen. In your family one senior citizen is there, then deduction will be increased. Totally how much? 50,000. In your parents' family, if any person is senior citizen, yes, another 25,000. Altogether how much? 50,000. Now how many how many expenditures related deduction we discussed? Medical insurance premium, central government health scheme, third one preventive health checkup. For your family, how much limit? 25. For your parents' family, 25. But any one of the person is senior citizen, limit will be increased by another 25,000. Altogether 50,000. That means totally you will get what? 1 lakh limit. How much limit? 1 lakh you can get. Now, which expenditure we ignored as of now? Last one. What is that? Medical treatment expenditure. Here twist is there. I will explain you the twist clearly. Medical expenditure means nothing but if you are going for a hospital and if you are getting any treatment, that is only medical expenditure. But the medical expenditure related expenditure, you can take it as deduction if you are a resident senior citizen. Sir, example, our age is 35. We incurred some expenditure on medical treatment for ourselves. We can't get any deduction because we are not a senior citizens. If any senior citizen taken medical treatment, that expenditure you can take it as deduction. But one more point you have to remember. And medical insurance premium not paid for such a person, whoever is taking the medical treatment, on that fellow, medical insurance policy if not there, then only you can take. Example, my father 65 years is. So we are incurring some medical treatment expenditure. He can take it as deduction? Yes. 65 years, we can take it as a deduction. But provided if he not having the medical insurance policy premium. Sir, already we taken medical insurance premium, sir. That means premium policy will cover the medical expenditure. That's why we can't give any deduction. Remember, what are the two conditions? Condition one, he must be a resident senior citizen. Second one, medical insurance policy will not be there on such a person name. Okay. What is the total amount we can take? 50. Here, for your family, 50. For your parent family, 50. Sir, example, my father is non-resident, sir. This 50,000 is restricted to 25,000. That is only MCQ, very important. If my father is a resident senior citizen, 50,000. My father is non-resident, 25,000 only. Understood? Now, again, many of you are reading this provision as of now correct only. So, many of you are thinking that, sir, totally if I utilize this section, how much amount of deduction we can get? 3 lakh, right? Here, sorry, 1 lakh, here 1 lakh, totally how much? 2 lakh I can get, right? Here only they provided twist. What is that? For your family, A plus B, all together, you have to take the, how much ma? 50 plus 50, 1 lakh you can take, right? Here 50 you can take, here another 50 you can take. Totally how much? 1 lakh. These two things all together, it should not exceed how much? 50,000 only. Even though you invested properly, A limit is nothing but 50,000. B limit is how much? 50. But these two things all together, it should not exceed 50,000. For your parents' family, if you utilize it properly this section, you want to take the, here 50,000, here also 50,000, but all together it should not exceed how much? 50,000. That means totally you will get how much? 1 lakh. Totally you will get how much? 1 lakh. Again, I am repeating this provision. How many expenditure we want to cover in this section? 4. First one, medical insurance premium. Second one, central government health scheme contribution. Third one, preventive health checkup. These 3 things for your family, how much amount? 25. For your parents' family, 25. Additional deduction is available if any person is a senior citizen. How much additional? 25,000. Next, medical expenditure. 2 conditions. The first one, he must be resident senior citizen. Non-resident means 25,000. Resident senior citizen. One more condition. Medical insurance policy is not taken on his name. Now, I will ask a question. So, my father taken medical treatment, resident senior citizen, there is no policy on his name. Can I take that medical expenditure as a deduction? Yes. How much limit? 50,000. My mother also taking the medical treatment. I am incurring certain expenditure, but on her name, medical insurance policy is there. Can I take that medical expenditure as a deduction? No. Example. Reason simple. If we have a medical insurance policy, that insurance policy proceeds will cover the medical expenditure. Why we need to take deduction? Understood? The same thing we can apply to the HUF also. HUF means one family only. What are the expenditure we can take deduction? Only one expenditure in the first category, medical insurance policy. Preventive health checkup, not covered. Central government health scheme, not covered. Generally limit 25. If any one of the member in HUF is a senior citizen, another 25. Next, medical expenditure also, the same condition. How much we can take? 50,000. All together it should not exceed 50,000. Done? No. Internally, I want to tell you one more point. This preventive health checkup is there. This is maximum we can take. Yes, sir. Preventive health checkup for yourself, for your spouse, dependent children, parent. All together, this limit per year should not exceed how much? 5,000. Not only your family, your parents' family, including it should not exceed 5,000. This 5,000 can be paid in what? Cash also, okay. Already we discussed at the beginning of this section. Next, this is an important in DTAA questions. We can get this point. Read carefully. Medical expenditure for non-resident citizen. So, non-resident senior citizen. Yes, medical insurance premium also we are not paid. That means there is no medical insurance policy. Limit of 50,000 we have to restrict with the what? 25,000. Many students are writing, sir, resident senior citizen is eligible, sir. If he is a non-resident, we have to keep it as a 0. That is wrong. How much? 25,000. Pakka MCQ or DTAA adjustment, this point will be there in your workbooks. Sir. Shall we? Now, and one more MCQ we can expect from this, or if you are a rich person, generally, you can pay the medical insurance policy premium lump sum for entire 10 years in the first year itself. I haven't money now, in future there is an uncertainty. So that's why, can I pay the 10 years insurance policy premium, that is a medical insurance policy premium, okay, that policy duration 10 years. Can I pay all years premium in the year 1? Yes. Happily they will accept. Insurance companies will accept the entire premium. If you want to pay in first year, they will accept it. Can I take that entire 10 years premium you paid in lump sum, that entire premium, can I take it as deduction in the year 1 itself? No. We have to take proportionate. That is only the point. If medical insurance premium paid in lump sum for the more than 1 year, any number of years also. Okay, example, we paid 10 lakh for the 10 years. Okay, every year how much we have to consider? 1 lakh. This is a formula they given, but no need. Whatever the premium you paid, you have to apportion for the how many years you paid. Clear? Now, here 1 lakh for every year. Then you have to substitute here every year how much, ma? 1 lakh. So 1 lakh, even though 1 lakh is there, can I take 1 lakh amount? No. That is restricted with the 25,000 or 50,000. Understood? Everyone? So last for this 1 minute. Okay. No. Not 5,000 per person, all together 5,000, not per person 5,000. But remember, preventive health checkup is nothing but for your family, your parents' family, all together 5,000 per annum. Aggregate amount 5,000 only. Done? Now, just I will recall the entire provision within 1 minute, then we can go for the next section. So it is only the most important section in entire chapter 6A. 80D is covering how many payments? Please repeat along with me. 4. Pakka. First one, medical insurance premium or health insurance premium also okay. Next, preventive health checkup, central government health scheme contribution, medical expenditure. Yes, sir. This deduction can be taken by whom? Individual HF. Individual should incur amount for whom? Self, spouse, dependent children, parent. Any parent also okay, dependent or independent. But children must be dependent. HUF can incur these amounts for any member of HUF. These amounts can be incurred anything other than cash. But a preventive health checkup you can incur in the form of cash also. Now we are classifying the individual HUF separately. In individual, your family separate, your parents' family separate. Now, first 3 expenditures we can cover it as an one. What are the 3 expenditure? So, medical insurance premium, central government health scheme, preventive health checkup. For your family altogether 25,000. For your parents' family altogether 25,000. Okay. Next, maximum amount of deduction we can increase. Yes, if any person is a senior citizen, how much maximum we can increase? 25. Altogether 50. Next, medical expenditure separately I am taking as a B point. If person is a resident senior citizen and there is no medical insurance policy on his name, then we can take the deduction up to how much? 50,000. For your family, 50. For your parents' family, 50. But A plus B altogether, it should not exceed 50,000 in case of your family. In your parents' family, 50,000. The same points will applicable for the any member of the HUF also. But if in this case, if the SSC is a non-resident, that limit will be restricted to 25,000. Preventive health checkup altogether, preventive health checkup altogether, it should not exceed during the year 5,000. If medical insurance premium is paid in lump sum, can I take the lump sum amount deduction for year 1? No. We have to apportion throughout the number of years for which you are taken the policy. Clear? Next. 80 DD. Kishore, you are asking tax planning, but night I prepared other chapter. Now how can I take tax planning chapter? Okay. AD, DD. Important, ma. Sir, here, if you incurred medical treatment as well as the maintenance, that means if you incurred certain expenditure on whom dependent disabled. Or if you disabled, ADU. If your dependent is disabled, ADDD. There is a twist here. In my view, there is a big twist here. ADU directly you can take. If you incurred any amount also, if you not incurred any amount also, based on disability, you can take normal 75, severe 1,25,000. If you are disabled, if your dependent is disabled, if you incurred expenditure, then only you will get deduction. Clearly they given medical treatment and the maintenance. If you are taking care of that fellow, then you will get the deduction. Okay, if you have any disabled dependent, that is burden for you. If you incur any expenditure, that is burden. That's why they are given the mandate point. If you incur certain expenditure, that expenditure we can allow it as a deduction. Shall we start? Yes. This deduction for whom? Resident only. Resident individual, resident HUF. Condition clearly I written. You should incur expenses on two things. The first one, what? Medical treatment. Second one, some dependent disables, no need of any treatment. That is a permanent disease or permanent handicap, etc. No need to incur any expenditure on medical treatment, but you can deposit on his name some amount in any bank accounts also. That is also covered here. Yes, for what purpose? Maintenance of the dependent disabled. Remember two things: medical expenditure, second one, deposit in any bank account of the dependent disabled. Now, sir, for this section, I can say in my village, if any disabled is there, I can say he is a dependent on me for claiming this deduction. That's why they are given clearly. Who isn't relative? For individual HUF, because this section can be taken by the individual HUF, resident only, who can be dependent? Arey, I am excluding self. Why? Self, if disabled, ADU covered. Dependent means other than you, you have to take spouse, children, parents, brother, sister. Every relative must be dependent. Then only this section will apply. HUF means any member, that person must be dependent. Again, I am repeating, dependent relative, dependent disabled relative. So who will be the relative here? Spouse, children, parent, brother and sister also covered here. Any member of the HUF is also covered. Now, what is that amount of deduction, sir? I incurred 10,000 rupees only for medical treatment purpose during this year, but I can get normal disability 75, severe disability 1,25,000. Expenditure incurred must be important, but that expenditure we have to ignore for taking deduction. Deduction limit will be how much? 75, 1,25,000. I incurred 2 crores amount for medical treatment, but how much amount of deduction I will take? 75, 1,25,000 only. I incurred 10 rupees only. 75, 1,25,000. I am not at all incurred. You will not get any deduction. Pakka? No. Now, most important things, generally some students will get this doubt after reading this provision. Okay. Sir, my spouse isn't dependent disabled on me. Okay. I am depositing some amount in her bank account every month or every year. Now, dependent disability dies before SC. Means what? Before, yes sir, maintaining person who dies, dependent disability only dies. Automatically, suppose I deposited up to now 5 lakh within my wife account. So now this amount will be given by the bank to me only. So that's why what is the tax treatment that amount? What is the tax treatment on that amount? Remember, amount received on this scheme. Up to now how much we deposited in our account? 5 lakh. Now that amount will be allocated to SSC only again. because you are only the nominee. That is deemed to be treated as income, taxable in your hands in the year of receipt, in the hands of whom? SSC. This point you should know. Every time you are taking deduction in the name of the deposit, now that entire amount is received by you only in the year of receipt, that is treated as deemed income, and that is taxable in the hands of SSC who claim deductions as of now under 80 DD. Sir, if SSC dies before the dependent disability, then what is the treatment? Here who dies first? Dependent disabled person dies. It's a reverse case. Anything also can happen. Okay. Now that is only I given in the next point. Sir, dependent with disability receives the annuity and premium before death. Nothing but who is alive right here? Dependent disabled. Okay. I'm taking the deposits related things for 5 years. After 5 years, dependent with disability is alive. Now who will take this amount directly from the banks? Dependent with the disability only, because they are alive. Now, if that, then SSC attain the age of 60 years or more. Who is the example? My wife is receiving that, yes sir, 5 lakh after how many years? 5 years from bank, because she is alive only, she receiving this amount. But SSC means nothing but whom? Husband. Husband, if crossed how many years? 60 years. The deeming provisions will not apply. Relaxation. Generally, if receiving the annuity directly, here lump sum amount who received? SSC received directly, because dependent disability is no more. In the hands of SSC, that is taxable in the year of receipt. Now, here what is the twist, sir? Both are alive. Imagine. Both are alive. Imagine. So, wife receiving the amount. Deeming provisions will not apply. That means in the hands of husband, we can't treat it as an income. When one condition. If SSC attained how many years of age? 60 years. That means he is also senior citizen. Yes, both the persons are alive. Alive means nothing but we need to felt very happy. So that's why already this fellow is crossed 60 years. That's why deemed income provisions will not apply. Maybe you haven't doubt, sir. This fellow having 55 years, sir, deeming provisions will apply, and that will be treated as income in the hands of whom? Husband, not in the hands of wife. These 2 points just for knowledge purpose only, not for exam point of view. Just can I repeat 80 DD? My 80 DD, one of the foremost condition you have to remember. We have to incur certain expenditure for medical treatment or deposit in the name of whom? Dependent disabled. If you incur, how much amount deduction we can get? 75,000 or 1,25,000. If yourself as an disabled, you will get deduction under section 80U. Sir, relative, spouse, children, parent, brother, sister, that they all must be dependent on the SSC. Any member of the HF. Next. Sir, every time we are taking the deduction by using deposit, sir. If you received any amount on the death of the dependent disabled, that will be income in the hands of SSC, and that is taxable in the year of receipt. Both are alive. On the time also, who will receive the annuity? Annuity means lump sum amount. Who will receive? Dependent disabled. But that will be taxable in the hands of whom? Husband. Every year you are only taking deduction. That's why it will be taxable in your hands only. But when relaxation will be there, if the SSC crossing how many years of age? 60 or more. Deeming provisions will not apply. Next. 80 DDP. Medical treatment for the specified disease. Specified disease. Specified disease means here I am not mentioning anything. Yes, sir. Long-term diseases. Some examples I will tell you. Chronological failure. So nothing but the bone related. Okay, hemophilia, the blood clotting issues. Yes, HIV, cancer. These are all are specified diseases. Fever and etc. is not treated as specified disease. Okay. If you are suffering with the long-term diseases, that is only covered as a specified disease. Now here, who can take this deduction? Remember, resident individual, resident HUF can take. Here you need to incur certain expenditure on specified diseases, then only you will get deduction. For whom you have to incur? Individual, self also covered. Vaira, maybe you can suffer with a specified disease, your relatives also suffered with a specified disease. For all of this, only the one section 80DDB. If you are disabled, 80U. If your relatives are disabled, 80DD. But specified disease, you suffering also, your family members suffering also, 80DDB only. So can you tell me? Spouse, children, parent, brother, sister. Here one twist. No need to check dependent or independent. Or if they are suffering with the long-term diseases, means why we need to check the dependent or independent? We need to give the help whether they are dependent or independent also. But in the last section, must be dependent. What is the last section? 80DD. Understood? Here, self also covered, spouse, children, parent, brother, sister. HUF related, any member. Amount of deduction. There is no flat deduction. Many are thinking about flat deductions. No. Whatever that expenditure you incur. Here you incur certain expenditure for treatment of the specified disease. That expenditure. 40,000 in case of others. 1 lakh if you are a resident senior citizen. Here, example. I have an income, that's why I'm incurring some expenditure on treatment of my parents. The parents are suffering with this specified disease. Now here, resident senior citizen means SSC resident senior citizen or patient? Patient. Okay. Yes. Normally, generally we can take 40. If patient is a resident senior citizen, this limit will be increased to how much? 1 lakh. In many cases, students are forget to take it as an 1,25,000. No, 1 lakh only. Example, I incurred the 3 lakh amount. Can I give 3 lakh as a deduction? No, we have to restrict. Suppose if the patient is a resident senior citizen, how much I need to take? 1 lakh. Yes, sir. Whichever is lower, 1 lakh. But there is a bad luck. I taken policy on my father name. Definitely insurance proceeds given 50,000. So that's why what is that burden on me? 50,000. That's why deduction will be given 50,000 after reducing the insurance proceeds. Sir, if non-resident, 40,000. Remember, my father is a non-resident. What is the limit I have to take? 40,000 only the restriction. 40 only I have to take. Because resident senior citizen, then 1 lakh. My father is non-resident. Now I will tell you one beautiful example for all of you. My SSC E is a non-resident. SSC means non-resident. Okay, non-resident individual or HUF. Deduction under 80 DB is not available. Why? Only resident individual, resident HUF only can take this deduction. Now, SSC is an resident individual, resident HUF. Yes, sir. Patient can be whom? Patient can be resident or non-resident. That's okay. 80DD is available. 80DDB is available. Yes, available. Simple example can I say? Specified diseases means long term. Many cancer patients want to take the treatment in foreign or India? Foreign. They may be non-resident for treatment purposes also. Why you are bothering about it? SSC status must be resident. Patient may be what resident or non-resident. So patient is a resident senior citizen 1 lakh. Non-resident normal person, please take 40,000 limit. Understood all of you? These are all are minor points, but you should know. 80D series revision is definitely needed. SSC must be resident. Patient may be resident or non-resident, that's okay. If he is a resident senior citizen, we can take higher limit of 1 lakh. Otherwise, 40,000. Akka, okay. How many sections done in 80D series? 3. Okay. My 80D can be taken by the non-resident also. 80D. These 2 sections must be resident individual HUF. Specified diseases, yourself also, your relatives also, 80DDB. If you suffered with the disability, 80U. If your relative suffered with the disability, 80DD. For all of them, medical expenditures and 4 types of payments covered under 80D. Dana, all of you. You and all on spot, you can take, sir, you need preparation. If I am saying fact, if you are not believing, then what can I do? Okay, now 80D series. Now we can start the 80C series. Amendment is there in 80C series. Shall we start first? How many sections we have in 80C? Okay. Break needed. Okay, I will give it lunch directly. 80C. Listen. What is the section? 80C. Next. Now. Next section. 80 triple C. 80 CCD. Next. 80 CCH. 80 CCE. These are the 80C series we have. Yes. Can you tell me what are that? Please give me help. 80C, 80 triple C, 80 CCD, 80 CCH, 80 CCE. Shall we? Now, 80C series. Within that first section, 80C. If you invested in the list of specified investments, you will get deduction. They given the list of specified investments. If you invested in these specified investments, you will get deduction. Eligible SC, individual or HF, resident also okay, non-resident also okay. Whenever I given the resident only will take. If I am not written anything, meaning anyone also okay. Amount of deduction, maximum how much ma? 1,50,000. Maximum how much? 1,50,000. Eligible investment, refer list given below. How many are there? 1 to 15 is there, I think. 1 to 15. Sir, other also there. Not 15. Many other also there, but I don't want to include in the book. But please try to remember these 15 eligible investments. Then you can get the question also, MCQ also within this list only. Can I take the first eligible investment? Life insurance premium. Health insurance premium, medical insurance premium covered in 80D. Life insurance premium covered in 80C. Okay. I think you know how it will be worked out also, but again I will take. Okay. I want to take the 10 years policy tenure. Every year I am paying the premium of 50,000 till 10th year. This is called as what? Expenditure from your side. For this expenditure, we can give the chapter 6A deduction under 80C. Okay, at the end of 10th year, what is a trauma? You will receive maturity value. How much you paid exactly? 50,000 into 10 years, 5 lakh. That is some assured value. At any cost, you need to get this value. Sir, what is the amount additionally they will pay? Because my amount is locked with the insurance companies for 10 years. That's why they will add the bonus, interest, everything. So, what is that maturity proceeds they are going to give at the end of the 10th year? So, totally 8 lakh. Just example. Some cases they will give more amount also based on inflations. Now, This is treated as what, ma? Income. If you are taken life insurance policy, you can get the two benefits. At the time of incurring expenditure, you are getting tax savings in the form of deduction under section 80C. If that is income, that income also exempt if conditions are satisfied. Mostly you can take the exemption under section 10 subsection 10D. So that's why the life insurance policy is very, very important. Both the benefits. At the time of incurring expenditure, you can get deduction. At the time of receiving the maturity amount, you can take exemption. Timing investment. I'm planning the timing investments for getting the one income. That income also exempt in future. Planning investment or not? Yes. Now, here, the main discussion. If you are taken the life insurance policy, yes, individual case, you can take the on your family, not on your parents' family. If you take an insurance policy, that too life insurance policy on yourself, your spouse, children, any children also okay. But 80D is saying medical insurance policy you can take on dependent children, on parents also you can take, and you can take deduction. But 80C is covering only your family. If you take a life insurance policy on your parents also, you can't get any deduction. That's why I'm clearly highlighted. If you are taken life insurance policy on your mother or father, can you take deduction? No. Next, HUF case. Any member of HUF. Sir, this point many times they tested in the exam. Remember, 80D, medical insurance policy, health insurance policy, you can take on yourself, your spouse, your dependent children, your any parent. But here, on yourself, your spouse, any children, there is no condition related to dependent children. Dependent children condition is there only in 80D. Done? Now, sir, how much amount I paid as a premium? Can I take entire amount as a deduction? No, there is a limit. What is the limit? I will tell you that limit in these 3 points. First, if policy issued before this date, premium paid is restricted with the 20% of sum assured value. So sum assured value always they will give you in the bond. So at the time of taking the policy, life insurance companies will give the bond. On that bond, you will get the sum assured value. In exam, in question, they will tell you sum assured value 20%. Whatever amount you paid as a premium, they are not giving deduction. That amount of premium is restricted with the 20% of sum assured value. Next, after this date, they felt this 20% of deduction is used. Why we need to give the restriction with the 20%? So that's why they reduce it to the how much? 10%. On that time, it is an amendment. Okay. If policy issued before, we have to restrict with the 20% of sum assured value. If policy issued on or after this date, restricted with the 10. After 1 year, they are worried about, sir, we restricted with the 10 only, that is horrible. For certain persons, we have to give the enhanced limit. Who are certain persons? After 1 year exactly, persons with a disability, means which section? 80U, 80DD. Person suffered with a specified diseases, which section? 80DDB. For these fellows, 10% is not sufficient. Increase it to how much, 15%. If you are taken any other percentages, then you will get exemption. Remember, first 20, then after reduce it to 10. But certain persons are related, they are increased to how much? 15. Understood? First we discussed about eligible investment list, life insurance premium. Next, second. Generally, we have 4 types of provident funds. How many types? 4. Any idea? SPF means Super. Statutory provident fund. Next one, recognized provident fund. Next one, unrecognized provident fund. Last one, public provident fund. Enter syllabus. For government employees, yes, statutory provident fund will be there. If any provident fund is recognized by the CIT, Commissioner of Income Tax, that is a recognized provident fund that is come under the purview of Income Tax Department. If Commissioner of Income Tax is not recognized this is an unrecognized provident fund. Public provident for whom? Public purposes. Okay. In these three cases, in these how many cases? Three cases. There must be an employer and employee relationship. Both the contributions will be there. Here, only who can contribute? SSC only will contribute. There is no SSC related employee. Only who can contribute? SSC. Example, the main purpose of provident funds is to safeguard the employee in future. Why you need to safeguard only employees? Then outside world, many fruit sellers are there, daily wages persons also there. They can also create the provident fund account. They can maintain the deposit. But here only single contribution, only SSC will do contribution. But in this case, both the parties will do the contributions. Both means employee, employer. Here only one contribution, SSC side only. And I am a business person. I want to contribute some amount to my provident fund account. Yes, you only can contribute. There is no opposite contribution from your employer because you are only employer. Understood? Now, listen. Employee contribution will be there. Employer contribution also will be there to the provident fund account. In which type of provident fund both the contributions will be there? Three. What are the three? Statutory, recognized, unrecognized. On this provident fund contribution, you will get interest. But the entire amount along with the interest will be taken by employee or employer? Employee. Understood the structure first of all? Now, employee contributions to your contribution is an expenditure for you, right? Then what about employer contribution? Employer contribution is income for me. Which contribution is an expenditure for you? Your contribution is an expenditure for you. Employee contribution, not employer. Which contribution is an expenditure for you? Employee contribution. That means you only contributed some amount in the provident fund. That is maybe expenditure for you. So that's why. But a statutory provident fund related contribution, recognized provident fund related contributions, only you can get deduction under 80C. Why we are not given the unrecognized? Because it is not in the purview of department. How they can give deduction? They don't know about these contributions also. How they can give deduction? Can you tell me which contributions, ma? Employee contribution to SPF, RPF. URPF contributions will be there, but we can't take it as deduction. And next, which provident fund is pending? PPF. Yes, sir. Amount deposited in PPF. Here one point. I can create provident fund for myself, for my spouse, for my children, or if he is an HF, any member of HF. Here also we are excluding parent. You can create public provident fund account for your purpose, spouse, any children. But if you created public provident fund, your parents' purpose, yes, you can open, no problem. But we can't give any deduction related to that contribution. Here, amount deposited I written because only one contribution will be there. Here, which contribution is allowed as a deduction? Employee contributions will be allowed because that is an expenditure. Opposite party, employer given the contribution, that is an income to whom? Employee. Understood these 4 points first of all. How many types of provident funds are there? 4. First one, statutory. Both the contributions will be there. Second one, recognized. Both the contributions will be there. Unrecognized. Both the contributions will be there. But unrecognized related, we can't give any deductions. Public provident fund, only one contribution. under 80C. If recognized contributed to statutory provident fund, recognized provident fund, that amount we can give it as a deduction. Unrecognized provident fund contributions, we can't give it as deduction. Next, amount deposited in PPF. For whom purpose you have to deposit? Yourself, spouse, any children, any member of HUF. Parents covered or ignored? Ignored. In life insurance policy premium also parents ignored. Here also parents ignored. Clear? Next. I'm repaying the housing loan. If I am taking the housing loan from the banks or financial institution, I am repaying the housing loan. Principal, not interest. Interest already covered in 80EEA. Here we are talking about what? Principal repayment. Sir, remember in DTA question you will get this point. If you paid any stamp duty charges, registration charges for your purchase of house properties, that registration charges, stamp duty charges allowed as deduction under 80C. They will give you, we purchased a house for 1 crore 80 lakh. Registration charges 5 lakh. Can you tell me how much amount you can take it as deduction? 5 lakh. But restricted with the 1,50,000. Stamp duty charges, registration fees if you paid, that is also allowed as deduction under 80C, including clearly written. Next. If you deposit in a notified bonds of what? NABARD. It is an agriculture board. Within that, if you purchased any bonds also, you will get deduction. Deposit in a senior citizen savings scheme. If you are a senior citizen, if you deposit in any senior citizen savings scheme, you will get deduction under section 80C. Fixed deposit with a scheduled bank for 5 years. Definitely you have to keep the deposit whatever you done for 5 years. Next, very important, tuition fees paid. Previously we discussed educational loan taken for whose purpose? Self, spouse, children, parents. Parents are children. How you can educate your parents? More. Wait. Here you have to take for the what? Self, spouse, children for whom you are acting as a legal guardian. Brother and sister covered? No. Parent covered? No. Now, if you pay tuition fees, covered in which section? 80C. 80E related, 80E. Educational loan related interest you can take it as deduction. That education may be in India, outside India also okay. But this tuition fees you are paying, that education must be in India. That education also full time. Example, your father paying the CMA related coaching fees for you. Can he get deduction? No. This is a part-time or professional course. Yes sir, this is not a regular courses. Your father is paying for BCom. He can get deduction. But you must be pursuing education in India. Sir, your father having the 4 children. For 4 children also he is paying tuition fees. Can he get for all? No. Maximum 2 children. You asked yesterday this point. Okay. 80E purpose. Anywhere you can pursue education. 80C tuition fees purposes. Education must be in India. That education full time. And 80E education must be higher education after class 12. Here anything also okay. Okay. If our children goes for school, that is a full time education. Yes, the tuition fees you can get it as deduction. No. Contribution to ULIP, unit linked insurance policy. Deposit in Sukanya Samruddhi Yojana account. That is nothing but in order to protect the girl child, we can deposit in that Sukanya Samruddhi Yojana account. Yes. Many of us having the doubt. Sir, why this Sukanya Samruddhi Yojana scheme, sir? Why PPF, sir? Sir, instead of this public provident fund account, can I deposit in my bank account? Every year I am saving some amount in the public provident account. Same amount can I save it to my bank account also? In bank account only we can get more interest compared to the PPF. Why we are attracting towards the PPF? Huh? Example. If I am receiving the bank interest taxable under income from other sources. If I am deposit any amount in my bank account, if interest received, that is taxable under which section? Sorry, which head? IFOS, and on that maybe you will get 10,000 deduction under 80 DTA. If you are a resident senior citizen, 50,000. But in PPF, if any interest is received, that is exempt. Yesterday in return of income question, we discussed one point. Yes, I will show you that. PPF related interest, public provident fund related interest, if you received, that is exempt or taxable, exempt under section 10 subsection 11. Interest on public provident fund, they given interest, that is exempt or taxable, exempt. That's why we are attracted towards the PPF schemes. In bank account, if you are receiving interest that is taxable, maybe you will get a deduction of 10,000 or 50,000 under 80 TTA TTB. But public provident fund related interest you will get, that is not taxable, exempt. That's why we can keep the amount in the PPFs. Sukanya Samruddhi Yojana account also the same concept. In bank account we will get the more and more interest, but Sukanya Samruddhi Yojana account will give the less interest only, but amount is blocked nearly for the 18 years. If you created by birth itself for your children purpose, that too male or female children purpose, that amount is locked nearly 18 years. But at the time of maturity, everything will be exempt. Everything will be exempt. Next, if you purchase it that any notified units of mutual fund or unit trust of India, contribution to superannuation fund, subscription to equity shares and debentures, investment for 5 years post office time deposit, remember post office time deposit, contribution to national housing bank term deposit, these are all the things if you invested you will get deduction under ATC. Just remember whatever the points we given in the list. Yes, all together what is the maximum amount of deduction we can take? 1,50,000. Many salaried employees are taking this as a standard deduction. ATC. Pakka they will place the 1,50,000. This is not a standard deduction. If you invested, then only you will get deduction. Many salaried employees are calling to us and they are saying, ATC we can claim 1,50,000, please keep. How we can keep? If you invested in this list of investment, then only we can give deduction. Clear? Huge list will be there. Now, what is the next section? 80CCC. Deduction with respect to pension fund of LIC. Pension fund of what? LIC. Life Insurance Corporation. Here you have to understood the logic. I am an SSC. I will pay the lump sum amount with the LIC. I have money now, I will deposit lump sum amount with the LIC. LIC will pay the pension to me. Simply I deposited some 10 lakh. Every month some interest will be accumulated on this. That they will pay it as a pension. Now who given the contribution? SSC. What is that amount of contribution? Definitely that contribution is lump sum. You contributed some amount, on that contribution you will get deduction. Even though you can contribute here 1 crore also. But how much amount of deduction they are going to give? Maximum 1,50,000. Many students are thinking, sir, we are receiving pension related deduction. No. For receiving pension, whatever you contributed, on that you will get deduction. Sir, I deposited 10 lakhs, sir. Okay, take 1,50,000 as a deduction. I deposited 1 CR, sir. Take 1,50,000 deduction. I deposited 1 lakh, sir. 1 lakh only you have to take deduction. Understood? Now, pension fund of LIC, sir. Nothing but LIC pension fund. If you contributed, they will give you pension every month. Next. Shall I take the next section? 80CCD. Can I? Yes. Here also, contribution to pension scheme of central government, we can call it as a national pension scheme. Yes, you can call it as an Atal Pensiona Yojana also. Different names are there. Pension Fund of Central Government. NPS. NPS means National Pension Scheme. Notified Pension Scheme. Atal Pension Yojana. Anything also okay. Which section? 80 CCD. Very important. 80 CCD. Remember, who is an eligible SSE for deduction? Individual. Here. There is one notified pension scheme. Right? This created by whom? CZ. Gangster. CZ created. Reason, they want some funds for development purposes or whatever they may be. They need funds. So that's why they are giving one biscuit to the public. If you deposit it to this account, we will give 80 CCD deduction for you. Definitely for deduction purpose, we will deposit. Now, who will deposit? Employee will deposit. Opposite contribution can be done by whom? Employer. But I am doing self businesses. Yes, you can deposit on your own. There is no opposite contribution for that. If you are an employee, you can do contribution. Your employer also will do contribution to the same NPS account. I am doing small businesses. Yes, no problem. You can contribute some amount to NPS. Now, along with this NPS contribution, you will get to your NPS account what interest. Finally, this amount will be taken by whom? Employee only. Now, in this 80 CCD, I want to take the deduction 80 CCD 1, 80 CCD 1B, 80 CCD. First, one whose contributions? Employee contribution and SSE contribution related deduction. On this only additional deduction how you can claim. Next, this is an what? Employer contribution. So if you observe that 80 CCD having the three subsection 80 CCD 1, 1B, 2. 1 is talking about the our contributions. 1B is talking about the our contribution related additional deduction. 2 is talking about the employer contribution. Shall we discuss everything? That is only I given in the list also. Can I start the 80 CCD 1 first? Okay, one example I will take. Here, SSE contribution. Can you tell me SSE means self-business persons? There is no equal contributions. If you are an employee, you will get what? Opposite contribution will be there. If you are an SSE means you are not an employee, there is no opposite contribution. Now, 80 CCD 1 means nothing but employee contribution and SSE contributions. If anything is done to the NPS, contribution to NPS, how we can take deduction? So first I will take the employee, then after others means nothing but whom? SSE. Other than salaried employee. SC means other than salaried employee. Whatever you contributed, they are not given totally. They are restricting with your salary 10%. Sir, here what is the salary, sir? Basic salary plus DA terms of employment. What do you mean by the terms of employment? Forming part of retirement benefits. They can give it as in terms of employment or they can give it as a forming part of retirement benefits. Simply, some dearness allowance they will give you along with your salary. Some dearness allowance portion they will give you at the time of retirement. Now, which portion we have to take? Forming part of retirement benefits. That is also we can call it as in terms of employment. On this salary, 10% you can compute, whichever is lower you have to take. Here, SSE contribution, can I restrict on salary? Because we are not receiving any salary, how we can restrict based on percentage on salary? So that's why here you have to take what? Gross total income 20%. Here 10% of salary, here 20% of gross total. You have to understood the logic. Why here given salary? Salaried employee we can compare with the salary. He is an SSE, he don't have any salary income. That's why we can compare with the gross total income of the SSE. Shall we take example based on this? Here I am taking the example SSE means nothing but what? He is not a salaried employee. How much he contributed to NPS during this year, ma? Akka 1,40,000. Sir, we have to restrict that contribution with the 20% of GTI. 20% of what, ma? GTI. GTI means gross total income. That's why I given the gross total income information also. Now what is that 80 CCD1, ma? Please calculate. SSE contribution 1,40,000 and we have to restrict with the 20% of gross total income. How much it will be? 1,10,000. How much you can take under 80 CCD1? 1,10,000. But I contributed 1,40,000. But you restricted with the what? 1,20,000. Horrible, ra. I contributed 1,40,000, but you are restricted this deduction with the 1,20,000. How much extra I contributed, ma? Ma? That 30,000 is allowed as an additional deduction under 80 CCD 1B. Understood? Now we restricted with this. If any excess you contributed, then you will get an additional deduction. Remember. Now, SSE contribution already allowed under 80 CCD1. Remaining 30,000 you can take it as 80 CCD 1B additional deduction. But that additional deduction maximum you can take how much, ma? 50,000. Suppose here 2 lakhs. How much excess now you can take? 90,000. Can I take 90,000 in this section? No, restricted with the 50,000. Done. So 80 CCD1 and 1B is linking or not? Yes. You contributed more. We restricted in this section. No problem. I will give an additional deduction in 80 CCD 1B. Akka, what you are calculating, Akka? Okay. Next. 80 CCD 2. Whose contribution? Employer contribution. Now we have to restrict. Above 80 CCD1 related, for employee or SSE, it is an expenditure. So that's why you are taking deduction. These things definitely for employee or SSE expenditure. That's why we are taking deduction under 80 CCD1. Can you tell me, employer contribution is an expenditure for me? How can I take deduction? That is an income. First include in your income under perquisites, then you can take deduction. This is a benefit for you from your employer. Please add it to your income, then after you can take deduction. So that's why first taxable in the hands of employee under the salaries head under perquisites, because it is an additional benefit or welfare contribution they given for you. Then you can take it as deduction under 80 CCD 2. It is included in your income now, you can take deduction. Before that, you don't have any right to take the deduction. If you forget this point, you will lose marks. Which contributions we have to include in our salary first? Employer contributions. Now, if you are a government employee, other employee, two classification. Government employee, employer contribution restricted with the how much amount of salary? Here salary definition is same as it is like above. Basic salary, dearness allowance, terms of employment or forming part of retirement benefits. How much salary we are restricting? 14%. Yes, if other employee, yes, 10 or 14% of salary. If employee is opting old or optional regime, how much? 10%. In default tax regime, how much? 14%. Now you have to remember these points. So now 14% in case of government employee. Always here 14 only irrespective of regimes. Where we have a difference. If you are another employee, that is a private sector related employee, 10% in case of old regime, 14% in case of default tax regime. Ma understood? So this structure now you can understood. Yes. Which section we can take it as deduction? Ma? 80 CCD 1 plus 1B. Here 80 CCD 2. Before this we have to add it to the income of the employee. Then we can take the deduction under 80 CCD 2. The percentages you have to revise a lot. Yes, here we are restricting employee contribution with the 10% of salary, SSC contribution with the 20% of gross total income, employer related also we are restricting with the 14% of salary or 10 or 14% of the salary. Salary definition always you have to remember basic salary plus DA forming part of retirement benefits, or maybe they can give it as in terms of employment. Now, shall we ra? Now ra. This is an amendment. Listen carefully. Listen carefully. This is an amendment. Okay. They created one new scheme, NPS Vatsalya scheme. What is the name? NPS Vatsalya scheme. So I think that is a Sanskrit word also. I don't know. Okay. Vatsalya means nothing but love and affection. Now, NPS Vatsalya scheme is designed for the minor Indian citizen age of how many years? 18 years. So definitely I want to protect my minor children. Minor means nothing but up to the age of how many years? 18 years. This account will be opened and operated by the parent and guardian on behalf of the minor. I have a 4 years daughter. Now I want to protect her life. Can I open the NPS Vatsalya account on her name? But who needs to operate that? Parent. A parent, if parent is not available, guardian. Next. Now, I am depositing some amount in that NPS Vatsalya account, but that account is related to my minor daughter. But who are contributing? Parent is contributing. That's why deduction under which section is allowed? 80 CCD 1B. Previously 80 CCD 1B is additional deduction. Maximum how much? 50,000. But now they are adding NPS Vatsalya related amount also. You can take deduction under 80 CCD 1B. If parent is deposited any amount in the NPS Vatsalya account of the minor by the SSC, minor related, if you deposit in an account or in his account, then who given the contribution, parent or guardian, will take the deduction under which section? 80 CCD 1B. But already, just one example. In that above case, how much deduction we are already claimed under 80 CCD 1B? 30. How much? 30. Balance how much is available? 20. 20 only you can take. That means aggregate amount of additional deduction, NPS Vatsalya account related contribution deduction, all together it should be within the limit of 50,000. Okay. So they are not, they can create one separate section and they can give the some deduction also, but they don't want to do it. Yes. Can you tell me? However, aggregate deduction shall not exceed how much? 50,000. Previously, now, totally 50,000. Now, sir, I am starting this NPS Vatsalya account at the age of 15 years of my minor daughter. Okay. After 3 to 4 years, minority will lapse and majority will come. On that case, what will be happen? This account will be continue as an operational only. This will not closed. But it will be shifted to the another type. Vatsalya account will be cancelled. The same account name will be changed to the NPS Tier 1 account. Understood? Now, sir, I am maintaining the amount in the Vatsalya account. Account holder is nothing but minor. Account operator will be parent. Now, if I am withdrawing any amount from the NPS Vatsalya account, what is the treatment? I deposited every year some amount, but emergency if I need funds. Can I withdraw from the NPS Vatsalya account? Yes, you can, no problem. Then what is the tax treatment if you are withdrawn any amount? That is only the now we can discuss. Exemption on payment from the NPS to SSC. SC means nothing but who is an SSC here? Parent or guardian. On partial withdrawal. Complete withdrawal will not be possible. Partial amount of withdrawal you can take. What is the treatment? Yes. Remember, what is the section? They are given exemption under this section. 10 subsection 12BA MCQ point, it is an important. Yes, please listen. Partial withdrawal are exempt from the tax to the extent of 25% of contributions made by them. Yes, sir. We contribution, okay, our contribution up to now 9 lakh. How much ma? 9 lakh. Now we are doing the partial withdrawal. How much partial withdrawal? 3,20,000 I want to take the partial withdrawal. So this is required to be taxed, right? Because we are withdrawing from that account. Previously we claimed deduction. Now this amount is some amount, you can take it as exempt. But how much exempt ma? 25% of contribution made. Can you calculate 25% of 9 lakh ma? 2 lakh 20. This is exempt under 10 subsection 12BA. How much is taxable akka? 90. Super, 95,000 is taxable. This example is important for understanding. Partial withdrawal, if anything is done, partial withdrawal entire is taxable. As is there any exemption? There is an exemption. How much exemption ma? To that extent of 25% of whatever the contribution done by you. Okay, this is taxable in whose hands ma? ISS in nothing but parent or guardian. Understood amendment, all of you online? Now, తీసుకో, ఇది కూడా ఆప్ చేయి పనిలో పని. నెక్స్ట్, yes sir, we discussed about the Vatsalya account withdrawal. Now I want to talk about the main NPS account. That is projector remote. This is an AC remote. We have to replace the batteries. Within that only we have batteries. These separate batteries. Yes. Yes. Remember, have we created NPS account? Main NPS account. NPS means Notified Pension Scheme account. Main we created, not NPS Vatsalya account. Vatsalya account discussion closed. Main NPS account is there, but I want to exit from the NPS account completely. I don't want to continue with the NPS accounts hereafter. Complete closure related. Exemption provided under which section ma? 12A. Yes, simply, suppose you are taken that entire amount from the NPS. As of now, we given contribution 20 lakh. The 20 lakh I want to take now. But how much is exempt ma? 60% of amount payable to him at the time of closure shall be exempt. Can you tell me, out of 20 lakh, how much is exempt ma? 60% of 20 lakh is exempt under which section? 12A. Remaining is taxable. Please tell me how much is taxable? 8 lakh is taxable. Remember, these percentages are very important. 60% directly you can claim exempt. 40% only taxable. This provision is given in which section? Section 10 subsection 12A. Understood all of you? Next, sir, I don't want to complete closure, sir, but I want to go with the partial closure. Partial closure, the same treatment what we discussed in the NPS Vatsalya account. Whatever you contributed as of now, on that contributions, 25% of extent will be available as an exempt. Example, how much contributions done by us till now? Yes, 15 lakh contribution done. Here remember, employees contribution only we have to check. Both the person's contribution we don't want to check. Your contribution means employee contribution. How much ma? 15 lakh. Now you want to withdraw, yes sir, 12 lakh you want to withdraw. Partial withdrawal or complete withdrawal? Partial only. Out of 12 lakh, can you tell me how much is exempt, ma? 25% of the employee contribution. Exempt. Can you tell me how much exempt? 25% of 15 lakh. What is that? 3 lakhs? 75,000. How much taxable? Huh? 8 lakh? 25,000. Mas simple. Partial withdrawal related, always how much you contributed on that 25% will be exempt. Remaining withdrawal will be taxable. Complete closure related, what is a taxable? 40% taxable, 60% exempt. Now, how many sections? 10 subsection 12A, 12B is talking about the main NPS. Yes, previously we discussed 12BA is NPS Vatsalya account partial withdrawal. 12A, 12B and 12BA we have. Understood all of you NPS account related things. Now, 10 subsection 12A exemption if SSC completely closing NPS. 10 subsection 12B partial closure of NPS, partial withdrawal from NPS. NPS Vatsalya partial withdrawals 10 subsection 12BA. 80CCH now we'll discuss, that is a contribution to which scheme? Agnipath. Nothing but army related. If you join in any army under Agnivir or Agnipath scheme, okay, just generally I will say about this. Nowadays, okay, nothing but human resource for the army also will increase it drastically. So that's why they don't want to recruit for the long run. They will recruit the army employees on the short run basis, like 5 years, 6 years, 10 years, etc. They will give salary. They will give salary also. At the end of the tenure of their service, we can give the lump sum amount also. That's why I think 2 years, 3 years back, there is a revolution against the Agnivir also, but government still continued with the Agnivir corpus only. Agnivir fund only. Nothing but many are joined now under in our Indian army under Agnivir scheme. Simply a fixed tenure of job only, there is no permanent things. Clear? Now, eligible SSC who? Yes, individual join in Agnipath scheme. That means already you join in Indian army under this scheme. And if you contributed to one ACF, ACF means what? Agnivir Corpus Fund on or after this date. Simply one additional benefit for these employees we want to provide. We can create Agnivir Corpus Fund. What is that Corpus Fund? Agnivir Corpus Fund. So nothing but the employee will contribute. Automatically opposite contribution will done by the whom? Employer, that is central government. Finally this amount will be allocated to whom? Employee. Okay, that is only the contributions to Agnivir's Corpus Fund. What is that amount of deduction we can get, sir? Individual contribution, that is individual means nothing but employee contribution. Whatever you contributed, you can take 100%. There is no restriction. We want to attract towards the Agnivir Corpus Fund employment. That's why we given this offer. How much you contributed, that entire amount you will get deduction. Central government contribution, what is the section? 80cc1 individual contribution, 80cch2 central government. Are central government contribution is an expenditure for you? No. Benefit only. That's why first add it to your salary income. Please add first to your salary income. Then after you can take it as a deduction. How much deduction? 100%. There is no need to think about the restriction also. Directly you can take the 100% as a deduction. No. Unfortunately, if anything is happened to that person, definitely that corpus fund related amount will be given to that whom? Family members. So on that time, that amount is exempt. Even though SSC receiving also exempt, SSC family members received also exempt. Privilege only. Yes, understood all of you. 80CCH1 individual contribution, 80CCH2 central government contribution. Both the things 100% of the contribution, you can take it as deduction. Now akka. Here twist will be there. If you want to contribute to this ACF, ACF means Agniveer Corpus Fund. Out of your monthly package, please contribute 30% of your monthly package. If your salary is 30,000, 30% means nothing but how much? 9,000 you have to contribute. 9,000 will be contributed by the central government. Understood? Yes, that is only. Next. How many sections we discussed as of now in 80C series? 80C, 80CCC, 80CCD, 80CCH. Many of us are thinking, sir, here 1.5 lakh, sir. Here also 1.5 lakh. Here also 1.5 lakh. Here we don't want to consider this. No, sir. Overall limit I will discuss in 80CCE. What is the overall limit? Yes, remember 80C eligible investments, 80CCC LIC pension fund, 80CCD1 employee or SSC contributions. These things all together we can take maximum 1,50,000. What are the sections, ma? 80C, 80CCC, 80CCD1. Which of the following things is not covered in the list, ma? 1B additional deduction, CCD2 employer contribution, CCH1, CCH2 will not covered in this overall limit. We can take whatever amount, you can take it as deduction in this, but here all these things all together you can take 1,50,000. Overall limit of the deduction. Can you tell me which sections overall limit covered? 80C, 80CCC, 80CCD1. These three sections, these three sections all together you can take 1,50,000. The remaining sections not covered in this overall limit. Okay. Finally, 80C series also over. Understood all of you? Now, we can start the 80J series. We have an 80JJA and next we have an 80JJA. Important. 80JJA and 80JJA. 80JJA, 80JJA. Okay. Now, this is a small provision, but beneficial. If any person is doing the business, but business is related to collecting and processing of biodegradable waste. Sir, biodegradable waste, whatever available, we are collecting and we are processing it and we are producing some products by using that wastage. So for global warming purpose, it isn't very important. That's why if any person is doing such a type of business, that person can take the 80JJA. Now, if any person gross total income, including PCBP of an collecting and processing of biodegradable waste, for what purpose? For generation of power, for producing biofertilizer, for producing biogas, for producing biodiesel, etc. So nothing but he is processing the waste and he is producing the products for our economy. That's why we can give the deduction. How much amount of deduction, sir? 100% of your PCBP, whatever the PCBP income you are getting. Example, SSC's total income including 5 lakh PCBP. Now in chapter 6A deduction, we can take how much? 5 lakh. How many years, sir? From incorporation, 5 consecutive assessment years. From business commencement to how many years, sir? 5 consecutive years. 6th year onwards, you will not get any deduction. So in order to encourage this type of businesses, we are given this deduction. Entire your PCBP is allowed as deduction, means no need to pay the tax on PCBP income. If you have remaining incomes, you have to pay the tax. Clear? What is a business, ma? Processing biodegradable waste. Collecting and processing of biodegradable waste for producing power, biofertilizers, biogas, biodiesel. Now, next section 80JJA. 80JJA. Now, if you created additional employment, so nothing but if you created any job opportunities, then you will get this deduction. Employment of whom? Additional employees. I will tell you simple example. Last year in our institute or in our manufacturing company, 20 employees are there. In this year, I recruited 5 more. Now, what do you mean by the additional employees? 5 only. And I recently started my business. I recruited 50 employees. That 50 is new only. That 50 is additional only. So now we can start. Yes, because India need employment opportunities. If you want to create, yes, you will get this deduction. And this is very important. That's why if an SSC is following any regime also, this section will be available as a deduction. Any regime, that means if you are following 115 BAC, 115 BA, BAA, BAB, BAD, BAE. If you are following any section also, any regime also, you will get this deduction. Because this is an important, that's why we given the all SSCs who are following any regime. Now, eligible SSC, eligible SSC means nothing but if he engaged in the business, for him tax audit is also applicable. Sir, I am doing profession, sir. This section is not applicable for you. If any person doing the business and for him tax audit also applicable, then only you can take the deduction. Next, what is that amount of deduction? One amount we can calculate additional employee cost on the 30%. This year 30%, next year 30, next year 30. Totally how many years you can take? 3 consecutive years. Suppose additional employee cost 1 CR. First year 30 lakh, second year 30 lakh, third year 30 lakh. Like 3 years you can take this deduction. How to calculate the additional employee cost? Now I will tell you. What is that? Additional employee cost. Whatever that emoluments you are paid or payable to additional employees. Remember here, paid also covered, payable also covered. Additional employees means newly recruited employees related, whatever the salary you paying are paid, payable. That is only called as what, ma? Additional employee cost. Newly I recruited 5 employees. That 5 employees related salary is called as what, ma? Additional employee cost. That I will take it as deduction. 30% now, 30% next year, 30% on the next year. Now, in case of existing business, I have 100 employees in the last year. I removed 30. I recruited 30. Total again what, 100. Here additional employees will be taken as 0. Why? You removed 30, you appointed 30. There is no number of employees increasing in your employee base. That's why additional employees will be taken as nil. Sir, I recruited some employees, 50, but I am paying that amount in the form of cash. That's why you can't take this deduction. If you are paying that salary, emoluments means what, ma? Salary. If you are paying that emoluments in the cash, you will not get any deduction. Sir, additional employees are there, but you are paying salary. That's why additional employee cost will be taken as 0. In case of new business, every employee is an additional employees only. Whatever you are going to pay as an salary to them, that you can take it as deduction. 30% of the additional employee cost in this year, next year, on the next year. Clear? Now as of now, you haven't think, sir, beautiful provision, sir. Entire amount of salary, you can take it as deduction in PCBP normally. In our business or profession, salary we paid to our employees, we can take it as deduction. Again, we are going to take that salary as a deduction and chapter 6 year deduction under 80JJA. Double deduction, right? So we are very much happy and we are trying to recruit the new employees. After this you can decide. Additional employee cost does not include. Additional employee cost does not include who and who. Okay, I recruited one fellow, only one fellow. His salary is 40,000 per month. He is not covered in additional employee cost. Why? Employee whose salary is more than 25,000 per month, he is not an additional employee and his salary is not included in additional employee cost. Means in this section they are saying employee the unskilled labor, if you appointed the skilled labor, their salary is definitely more than 25, he is not covered under additional employee. Done. Now one stroke they given, second stroke. You have to employ more than 240 days. He needs to work in your company at least 240 days in this year. Then only he is an additional employee. Sir, my business is manufacturing of apparel, footwear and leather products, seasonal businesses maybe. On that occasion, how many days you have to work in order to call you as an additional employee? 150. In exam, if these words are given, indirectly they are tested this point. If they are not given anything, you can take 240 days. Last month my business increased. Now I appointed the 5 employees. How many employees I appointed? 5. Last month, how many days they worked? 30 days only work. Yeah, you can come. Student, staff, you need to count the number of students. Okay, whatever you want, you can go. Now, Akka. Now, remember, for this year, that additional employee worked for how many days? 30 days only. He is not an additional employee for this year. For next year, he is an additional employee. In this previous year, 25-26, he has worked less than 240 days. For this year, he is not an additional employee. Automatically, what is the position in the next year? Next year, deemed to be treated as an additional employee. Next year, deemed to be treated as an additional employee. On his salary, whatever we paid, that is treated as additional employee cost. On this we can get the deduction. Deeming provision you have to remember. Just appointed in this year for 30 days only, not an additional employee. But next year we can treat him as an additional employee. Whatever salary we paid to that person, it is included in additional employee cost. Paka? 1, 2, 3, 4, 5. Fourth row, second person. Addamutna? Are you understood what I am saying? Okay. Next. Employee does not participate in RPF. This is a third stroke they given. If employee participating in recognized provident fund, simply out of your 25,000 below salary, you have to contribute some amount to RPF. Anyone will be interested towards this? Okay. Next, last. So, employee for whom entire contributions related to pension schemes, if that pension schemes related contribution is paid by the state government, central government, that person also will not be called as an additional employee. That person also will not be called as an additional employee. Negative list for the additional employees as well as additional employee cost will be 4. If any person's salary more than 25,000, if any person worked less than 240 days, less than 150 days, if any employee does not participate in RPF, if any employee related pension fund contribution is paid entirely by the state governments or central government, these persons are excluded from the additional employee cost. After exclusion, you will get some chiller. Yes, you can take that amount of deduction. By way of giving these headings and the deductions related points, it is a huge provision. After considering this negative list, you will get the less amount of deductions only in many cases. Understood? Every point is important. I am paying salary in the form of cash. Delete from the additional employees. I'm paying the salary in the form of cash. But the salary more than 25,000, delete. He worked less than these days, delete. Next year he will get deduction. Next, he is not participating in RPF, delete from the additional employees list. Sir, some contribution paid by the central government or state government related to pension funds, delete from the additional employees. After deletion, you will get the miscellaneous. That miscellaneous employees only additional employees, and that cost only additional employee cost. Remember, here paid also, payable also. On due basis also, you will get deduction. Next. Yes. So, as of now, we discussed both the sections. But one section pending. What is that? 80G. Now we can cover 80G also. Shall we? Yes. 80G deduction. Deduction with respect to whatever the donations we are giving. Important, important, important. 30 days in previous year. I didn't understand. Here just 1 month only worked. Last month we recruited. Means how many days he worked? Less than 240, less than 150. For this year he is not an additional employee. For next year he might be worked for the full number of days. That's why next year he will be treated as additional employee. On his salary, that is additional employee cost, we can take it as deduction under 80JJAA. Now, who is an eligible SSE for this section? Any SSE, that means individual HAF, AOP, BOI, AJP, who are going to give the donations, he will be eligible for deduction. He will be eligible for deduction. Next, what is that amount of deduction? What is that amount of deduction? Remember, I am classifying the donations into how many categories? 4. You have to by heart these categories and by heart this list also. Okay. How many categories, Anna? 4. 1, 2, 3, 4. Category 1, category 2, category 3, category 4. You can call it as an A, B, C, D also. Okay. Now, category 1, I am given the only how many? 5. If you contributed any donation to these 5 funds, you will get the how much amount of deduction, ma? 100% of your donation will be allowed as deduction without any limit. Sir, I contributed 1 CR to this fund, sir. 1 CR you will get deduction. There is no limit. 100% you will get without any limit. But sir, there is a huge list in this category 1, but I will not suggest to read everything. I compiled everything from our workbook and past examination. Till now they given these names. Please remember these names. What are that? Prime Minister National Relief Fund, Prime Minister National Relief Fund, National Children Fund, Swachh Bharat Kosh, National Defense Fund, PM Cares Fund, etc. If you want to know that entire list, enter study material, you can open and you can check. But these 5 things you have to remember. First one, Prime Minister National. Next, again National Children Fund, Swachh Bharat Kosh, again National Defense Fund, Prime Minister Care Fund. 100. One student asked, sir, without any limit means, can I take the more than gross total income? No. Okay, here 1 crore, you can take 1 crore. But your GTA is 80 lakh. Can you take 1 crore or 80 lakh? 80 lakh only. First note point itself we discussed. First we have to follow it. Next, category 2 only 1 fund. This you have to remember. Remember meaning all are removed. Only 1 fund is there. What is that fund? Prime Minister Drought Relief Fund. Whatever you contributed, you will get 50% of that amount as a donation, deduction without any limit. Here also there is no limit. But I contributed 25,000. How much amount you will get it as a deduction? 12,500 only. We don't want to place any monetary limit on this. Yes, you have to remember these names at any cost. They will give you donation to National Defense Fund. Which category? 1. 100% of deduction without any limit. If they are given the Prime Minister Drought Relief Fund, 50% of donation will be allowed as deduction without any limit. Now category 3, category 4. Category 3, category 4. Category 3, what are the things covered by? Promotion of family planning, donation by company for any sport or Indian Olympic Association. Two things. Family planning related donations. Company is given the donation for sport or Indian Olympic Association. That means any SSC can get deduction. Here donor is company. What is that amount of deduction? 100%, but on qualifying amount. I will tell you how to calculate the qualifying amount. Next, category 4, charitable purpose, minority community, housing accommodation related. If any donations, if you given, you will get how much, ma? 50% of the qualifying amount. 50% of the qualifying amount. Understood? Now, for category 3, category 4 purposes, I have to check the one amount. What is that? Qualifying amount. First two directly you can take 100%, 50% without any limit. But here we have to restrict these deductions with the qualifying amount 100% as well as 50%. Now I will tell you what do you mean by the qualifying amount. Qualifying amount is whatever amount of deduction as well as 10% of adjusted total income, whichever is lower. Already we discussed adjusted total income in 80GG. Are you remember? 80GG deduction with respect to rent paid. Gross total income minus all chapter 6A reduction except 80GG. That is only adjusted total income on the time. Here different definition we have. Shall we? No. Adjusted total income, gross total income minus all chapter 6A reduction except 80G. We don't know 80G. How we can remove? Less capital gain special incomes. Capital gain we have in special incomes. What are the special incomes? Short term capital gain 111 year, long term capital gain 112 year, long term capital gain 112. Other one more capital gain is there. Short term capital gain other than what ma? 111 year. That we don't want to less. Only these three are special tax rate taxable incomes in capital gain chapter. Please exclude. Then remaining is what? Adjusted total income. Now suppose okay, we got 2 lakh qualifying limit. Yes, the amount of donation 10% of adjusted total income we calculated 2 lakh we got. First we have to give the preference to that what ma? Category 3, because in category 3 we can take 100% of the qualifying limit. Then after if limit is available, then we can give it to the category 4. So for which category we have to give the preference? Category 3, and next we have to give the preference to the category 4. Understood? Now, so donation in kind. Some cases we can give the donation in the form of kind, clothes also, time also, or any skill also we can give it as a donation. That will not be given as a deduction under 80G. If you donated money, then only you will get deduction. Donation up to 2000 you can consider in cash. More than 2000 you should do in an electronic way. Political party contribution always in cash. Sorry, always in online. Political party. Scientific research, rural development up to 2000 you can give it in the form of cash. This donation under 80G also you can give up to how much in cash? 2000. Donation in kind is eligible or not eligible? Not eligible. Ma understood? Up to now we discussed and yearly everything. So the few more chapter 6A deductions also now I want to discuss. Okay, few more. Very, very, very important for MCQ purposes in CMA final examinations. Very, very important. What is that? ATM. ATM. What is that ATM? Deduction with respect to the intercorporate dividends. Deduction with respect to the intercorporate dividends. I will tell you. My B limited is there. Okay. B limited is there. Yes. We invested in the That means nothing but who invested ma? B Limited invested in the any other companies. That may be business trust, foreign company or domestic company. If I invested as a shareholder, I will get dividend from them. This is a dividend income we are receiving from them. As well as we have to pay that dividend to our shareholders. We are receiving the dividend and we are paying the dividend. That is only intercorporate dividends. If any company is receiving the dividend and if they are paying the dividend, they will get this deduction. Yes. But remember, this deduction is only for which company ma? Domestic company. If their gross total income including dividend from, their gross total income including dividend received from. Can you tell me here, their gross total income, yes, is including the dividend from the domestic company, foreign company, business trust, then automatically they will pay dividend also, right? Because that is a company, they have to pay the dividend to the shareholders. Payment is mandatory. Yes, like that we are receiving the dividend and we are paying the dividend. That's why the domestic company will get deduction. Sir, how much amount of deduction we can claim, sir? Dividend received, dividend paid on or before 139 one due dates, sir. Return of income filing due dates on or before whatever dividend you paid. You can take whichever is what lower. Sir, I am paying 1 CR, sorry, I am receiving 1 CR, I am paying 80 lakh. How much amount of deduction? 80 lakh. Deduction with respect to the intercorporate dividends. Very, very important provision, remember. Next, deduction with respect to the cooperative societies. Deduction with respect to the what ma? Cooperative society. Deduction with the, yes, for whom? Cooperative society. Just remember, not much important. What is the amount of deduction? Ma, if cooperative society is doing the, yes, these two businesses, that is a specified activities. Yes, how much amount of deduction? Ma, 100% of PCBP will be allowed as deduction. Nothing but if they are providing the credit facility to their members. Credit facility means we are giving the loans to our members. Cooperative society is giving the loans to member, but except cooperative bank. Second one, income from letting out of godowns and warehouses. These two cases, how much amount is exempt? 100% of income is nothing but allowed as a deduction under section 80P. Sir, other related, sir, other activities. Consumer cooperative society, maximum how much we can take? 1 lakh. Any other, maximum how much ma? 50,000. Just remember, not much important. In some cases, 100% of that income from that activity is exempt. In remaining cases, consumer cooperative society, maximum deduction 1 lakh, others 50,000. Next, important, 80IA. Ma 80I series, remember, in chapter 6A deduction, we have many sections in 80I series. Income based chapter 6A deduction. If you are receiving income, that income will be allowed as deduction. That too 100% of income will be allowed as deduction. But I don't want to cover every 80I series, 80I series, but I want to cover few sections which are asked frequently in our exams. First section is 80IA. If any SSC is doing the, yes sir, infrastructural development business, that is only eligible business. Infrastructural development means what? Road constructions, rail, bridge, airport related, these are called as an infrastructural development. That is eligible business. Yes, that PCBP income will be allowed as deduction. So infrastructural development is very important for Indian economy. If any companies or if any SSCs are engaged in these type of businesses, we can give the PCBP as a deduction, that 200% under which section? 80IA. Now, sir, if SSC engaged in the road, including toll road or bridge, railway, highway project, water supply project, these are infrastructural. Remaining other infrastructural developments, second part. Sir, these are very important for Indian economy. Road, toll road, bridge, railways, highway, water supply. The remaining all others are taken as a second preference. If SSC engaged in this, How much amount of deduction I can claim? 100% of your PCBP will be allowed as deduction. Whatever you generated as a business income, that entire business income now you can take it as deduction. For how many years? 10 consecutive assessment years out of 20 years of starting business. I started business now. From this year onwards, I can take 10 years. No, sir, I want to take the deduction on 5th year onwards to 15th year. Okay. I want to take deduction after 10 years to the 20th year. Okay. Out of first 20 years, any period of 10 consecutive years, you can take deduction. That is your wish. But if you started in 6th year, till 16th year, you have to take perfectly. That is in consecutively. Huge benefit. That means first 20 years, no need to pay any tax on PCBP income for how many years? 10 years. Next, other infrastructural. These are main remaining infrastructural, same deduction. Same period of deduction also. But you have to select from how many years? 15 years. But here you have to select from how many years? 20 years. That is only the difference. What is that? Section 80 IA, infrastructural development. This is only simply, we can call it as an eligible business. What is that eligible business under this section 80 IA? Infrastructural development business. Paka. Next. 80 IAC, amended section. I will tell you what is that amendment also. 80 IAC. My 80 I series, I want to tell you limited provisions. 80 IA covered. Now 80 IAC. Shall we? Deduction with respect to the PCBP of an eligible startup from eligible business. Nothing but if your business is a startup, then you will get this deduction. Meaning of eligible startup, you have to incorporate company or LLP. Incorporation between these dates. What is the date? 1/4/2016 to 31st March 2030. Your turnover definitely less than or equal to how much? 100 crores. If you want to claim deduction in this year your turnover definitely less than how much? 100 crores. Sir, if you want to claim this deduction, you need to hold a certificate of business from the Interministerial Board of Certification. Then only you can call it as an eligible startup. You have to take the certificate from the government authorities, IMBC. What is that? Interministerial Board of Corporation. Sir, what is that amendment, sir? Now, this limit extended in this year. Previously, yes, there is a sunset date. Sunset means closing date is different. Now, this is an amended to the 31st March 2030. This is an amended to 31st March 2030. That is only the amendment. Sir, okay, sir. I satisfied everything related to eligible business. So turnover also okay. In between these dates, I incorporated, I taken certificate from the IMBC. What is that amount of deduction I will get? 100% of PCBP. For how many consecutive years? 3 years. Out of how many years? 10 years. Okay, compare it to the 80 IA, this is a less only. Why? We have to take the deduction only for 3 years. Previously, 10 years. Dana. Next. For MCQ purpose, it is an important 80 IA. All over India, northeastern states are underdeveloped. Okay. So, based on the some calculations, you can accept it underdeveloped. If you started any undertaking in a northeastern states, first I want to tell you what do you mean by the northeastern states. Don't write it down, whatever name you know. Yes, Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura. Okay, in your free time you can by heart the states, northeastern states. Now, if you started business in between these dates, sunset date is closed or opened? Closed. In between the time if you started the business, what is that amount of deduction? 100% of PCBP for 10 consecutive years from the year of commencement. There is no selection period. From commencement to 10 years consecutively you have to take. What is that? Section 80 IE. In 80I series, as of now we discussed what are the 80IA, 80IAC, 80IAC eligible startup. Now 80IAE, sorry, 80IE, not okay. Next, I think after this we discussed what 80P. Okay, then after we started 80IA, 80IAC, 80IE, now 80LA. What is that? 80LA. Shall we? This is also amended. I will tell you what is that amendment also. Last section, amma. Okay, be happy. Last section, be happy. Deduction with respect to certain incomes are offshore banking unit and IFSC. If any offshore banking unit is there and IFSC is there, for them definitely certain incomes will be there. That incomes will be allowed as deduction under 80LA. Now, eligible SSE is whom? If any scheduled bank having offshore banking unit in SEZ. So nothing but if any scheduled bank having the branch in SEZ. If any bank incorporated outside India, nothing but foreign bank having offshore banking unit in SEZ and unit of IFSC. Simple, Indian bank having the branch in SEZ. Foreign bank having the branch in SEZ. If any unit of IFSC. IFSC means International Financial Service Center. Remember, upgraded version of SEZ. In SEZ, we want to attract the investments from the Indian investors mostly. In IFSC location, we want to attract the investments from the foreign countries. That is only the difference between IFSC as well as SEZ. SEZ means nothing but, okay, if this location is classified as an SEZ, we want to attract the investments from the Indian. SEZ means Indian investors, okay, foreign also okay. But IFSC only concentrated on the investments from the foreign. So nothing but simply the banking units, if they are located in SEZ, banking units located in IFSC, they will get this deduction. How much amount of deduction, sir? Remember, first Indian, foreign, unit of IFSC. For these two, the same amount of deduction. What is that amount of deduction, ma? 100% of income, 5 consecutive years. After 5, 50% of the income for the next 5 years. Ma, here they are saying, first 5 years, you can enjoy 100% of income will be allowed as deduction. 5 to 10th year, 50% such income only allowed as deduction. Within the bracket, with effect from, yes, nothing but they are giving, first they given the provision, first 5 years 100%, next 5 years 50%. But they revised this 5th to 10th year again to how much, ma? 100%. Now what is the position now as of now? 1 to 10 year, 100% of such income will be allowed as deduction. The banking operations income, 100% you can take it as a deduction. Under which section? 80LA. Sir, unit of IFSC, here they are given the deduction for 10 years out of how many years? 5 consecutive years. But here there is no selection option. 1 to 5, 100. 5 to 10 also 100. But here you can select any of the 10 out of what, 15 years if that is a unit of IFSC. Understood as of now? What are the sections we discussed as of now? 80P done, 80IA, 80IAC, 80IE, 80LA. Total provisions done. And we discussed 80G, whatever pending in the test day session also. Yes. Now, please be attentive for this 20 to 30 minutes from now. It is very important. Deductions, section numbers, you know something. Content, if you revised, you can remember. Okay, by way of looking the class, you can't remember everything. Okay, you have to revise at least half an hour to 1 hour deductions. Now, this will give you 14 marks. Comparative analysis definitely important for you. 14 marks. Are how you got handwritten? Last attempt, huh? Okay. Comparative analysis. Listen carefully. No need to write it on anything. Whatever sections we discussed as of now, I written everything. But under which regime deductions are available? Okay. 115 BAC is default regime for whom? Individual, HUF, AOP, BOI, HUP. Then 115 BA, BAA, BAB, optional rates for domestic company. BAD, BAE, optional rates for cooperative society. Next, normal, optional, old regime. 80 CIRA available only in which regime? Old. If SSC opted 115 BSc, normally 80 C is for whom? Individual, HUF. That means 115 BSc versus these things only we have to check. If individual or HUF following 115 BSc, this deduction available or not available? Not available. Like this. 80 triple C also. Please tell me, 80 C, 80 triple C. Available if SSC following that what? Old regime. Next. 80 CCD 1, 80 CCD 2, 80 CCD 1B. You know already. 80 CCD 1 is nothing but whose contribution? Employee or SSC contribution. It is an additional contribution along with the NPS Vatsalya account. Overall limit 50,000. Third one is an employee contribution. My old regime, everything is available. But in new regime, what is the difference? These two things is not available, but one thing is available. What is it? Employer contribution to NPS is available in both the regimes. I can suggest you to remember which sections are available in both the regimes. Remaining sections are available only in old regime. First section, 80 CCD 2, employer's contribution to NPS. Is available both. Is available in both. Next, 80 CCH, you know already. CCH 1, CCH 2. CCH 1, individual contribution. CCH 2, central government contribution. CCH 2 is available in both the regimes. CCH 2 means central government contribution is available in both the regimes. But CCH 1 is available only in old regime. Next, 80 D series available only in which regime? Old. 80 E series entirely available in which regime? Old. 80 G series entirely available in which regime? Super. That means what is a shortcut? Which sections are available in both the regimes? We have to remember. Up to now we discussed 80 CCD to employer contribution to NPS, 80 CCH to central government contribution to ACF. Next, 80 G series done, 80 JJA available only in old regime. Yes, 80 JJA. Yes, available in both the regimes. Available in both the regimes. Next, 80 QQB, 80 RRB available only in old regime. 80 TTA, TTB available in old regime. 80 U available in old regime. 80 IA to 80 IE, that is income based deduction 100%. If you want to claim this deduction, you have to file your return of income on or before due date. That too available in old regime. Next, I want to discuss three things which are very important: ATM, ATLA, ATP. Remember, ATM, deduction with respect to intercorporate dividend, available in both regimes. ATLA, that is nothing but offshore banking unit, available in both regimes. ATP, available only in old regime. Now, I want to write it down just for my practice purpose, not for your purposes. Which deductions are available in both the regimes? 80 CCD 2, 80 CCH 2, 80 AA, 80, 80M, 80LA. If you remember this, you will get 7 marks to 14 marks in tax planning. 2 questions you will get. Tax planning. If you know chapter 6 year reduction, you will do the DTA sum clearly. Is there any doubt up to now? Ma? 80? Akka 80p I given only 1 tick mark akka. Only 1 resume, okay? If you have handwritten notes in your hands, okay, you can't ask this doubt. Short tea break, you can go and you can take. I will share the address, you can book for me also. Within 5 minutes, we can take a break. That is MCQs we can discuss. MCQs, if you discuss, then only you will get an clarity about how we can understood this chapter. 100% you can't solve MCQs as of now, but you will get an idea after I am given the logic. Okay, shall we? Within 5 minutes, we can take a break. Shall I open? Chapter 6A Deductions MCQ, please open. I think we have a less MCQs only in this. We can complete it and we can take a break. Yes, please start reading, ma. First one. Aravind incurred 60,000 towards the surgery of his parents, medical expenditure for senior citizen, and for them medical insurance policy is also not there. What is the amount of deduction we can take? 50,000. Medical expenditure, A point or B point? B point. How much maximum? 50,000. Next, second one. Machima withdraws 2 lakh from his own contribution, yes, from the NPS. That is nothing but he withdrawn from the NPS account. On the date of withdrawal, how much he contributed, ma? 6 lakh. How much employer contributed? 8 lakh. Sir, what is that available balance? 14. But he withdrawn how much? 2 lakh. Partial withdrawal or complete withdrawal? Partial withdrawal. Yes, if any partial withdrawal is there, yes, 2 lakh. How much exempt, ma? 25% of the own contribution. What is the own contribution? 6 lakh. Yes, how much is taxable? This is exempt. How much is taxable? Ma, please calculate and tell me. 50,000. What is the section? 10 subsection 12B. Complete withdrawal? 12A. Partial withdrawal? 12B. Vatsalya account partial withdrawal? 10 subsection 12BA. Understood? Shri Raju paid 1,20,000 by check on 5/1/26 towards the medical insurance premium. Parents who are senior citizen, not dependent. So even parents are dependent also okay under 80D. Sir, premium covering 3 years. Lump sum premium we paid. So that's why we have to calculate how much for this year. 1,20,000 divided by 3. Every year 40,000. So now under 80D, can you tell me this is a medical insurance policy premium covered in A point or B point? A point. How much amount you can take it as deduction for your parents' family? Generally 25. If they are senior citizen, you can take additional 25, totally 50. But amount itself 40. That's why you can take how much, ma? 40,000. Understood? Sir, if this you got as an 65,000, remember, if you got it as an 65, can you tell me how much we can take here? 50. 50 only. Okay. Now, here, 80p deduction that cooperative society want to claim, if they want to claim the deduction, what is the due date for filing of return of income? Definitely, if they are filing the return of income on or before the due date, then only you can get the deduction under section 80p. Already we discussed under 80 AC at the time of starting of this chapter, income based chapter 6A deduction you can get only if you file the return of income on or before due date. Next. Atul is doing the business. His gross total income is 9 lakh. What is the maximum amount of deduction he can claim under pension scheme of central government? That is nothing but they are asking 80 CCD1 how much he can claim maximum. SSC contribution restricted with the 20% of what GTI. Can you calculate 20% of GTI? 1,80,000. Maximum we can get this is only if you contributed more also you will get the only 1,80,000 as an deduction. Understood? Next. An individual aged 68 years and paid the medical insurance premium 22,000 by way of an account pay check. Remember 68 years, medical insurance premium 22,000, account pay check. And preventive health checkup also incurred 5,000. Total how much amount of deduction we can take? Remember, wait. For your family, you will get first 25,000. First how much? 25. If you are a senior citizen, additional 25. Preventive health checkup limit will be how much? 5,000 only. Now altogether how much here you have? 22,000 plus 5,000. Total 27,000. But here limit will be 25 or 50. 50 because you are a senior citizen. So now you can take entire 27,000 as an deduction. If I am given the age as an 58 years, then what is your answer? 25,000 is your answer. So just I am saying, okay, you understood 80D properly. Super. Here if you say, then I will accept it. Non-resident health insurance premium. Yes. What is the age? 70. Senior citizen. We can take 50. But he is a non-resident. That's why we can restrict to 25,000. Resident senior citizen, enhanced limit is there. Non-resident means 25 only. Next. This is an old MCQ but not applicable now, but I will tell you. Previously, we have an superannuation fund. We have a superannuation fund. Within that, we have a balance of 9,40,000. Superannuation fund we created 9,40,000. But once NPS account introduced on that time, all superannuation funds will transfer to whom? NPS account. Upon the transfer, yes sir, upon the transfer, sorry. His total income and salary income is 9,40,000. They are not given some amount is there. Suppose 3 lakh is there in superannuation. That superannuation fund will be closed and that amount is transferred to NPS. Now, after this transfer, what is his total income? Still 9,40,000 on the total income. This transfer is treated as what? Exempt. Sir, we are not generating any new income. From superannuation to we are transferring the balance to the NPS account. This is not an income. So that's why this is not considered as an income, exempt. Yes, after set transfer, if you observe that your total income is 9,40,000 and taxable also how much? 9,40,000. So on that time, whenever NPS is created, on that time MCQ may not be important now. Sir, if any balance from the superannuation fund to NPS is transferred, that is not an income. That is simply you have to exclude from your total income. Before 9,40,000, if you excluded also your total income will be 9,40,000. What is the total income after considering about transfer? If you consider also, your income will be the same because this transfer is exempt. Next. Ma'am, it is Assam 80 IE you have to remember. Northeastern state, they started a business. Now how much amount of deduction we can take? 100% of that amount will be allowed as deduction. I think our great fellows given the options in super way. Yes, printing also done, ra. So that's why I don't want to give the answers A, B, C as a separate list. If I am given the separate list 400 MCQs, one answer is missed, na, then everything will collapse. That's why I will give an answers in a separate color only in that question itself. Many are asking, sir, how we can test? Why you need to test? Just read. That's enough. So this is not a first class or second class closing the answers and remembering the answers. That is not required. If you know the provision, then answer identification is very easy. 80IE, we discussed, if any business is established in the northeastern states, then you will get 100% of your PCBP will be allowed as deduction. 100% of total income, including business, how much including business income? 11,40,000. That is entirely deduction. Now, I think this already we discussed. Senior citizen, yes, 60,000 we incur, but we can restrict to how much? 50,000. Which one of the following is not a tax saving investment? Tax saving investment means if you invested in these, yes, you can get the 80C. Fixed deposit, also you can get 80C, but if they are provided 5 years, they are not given. That's the most appropriate answer is fixed deposit. Fixed deposit with a scheduled bank for 5 years, if you deposit it, then you will get 80C. But they are not given the complete word. That's why which one of the following is not tax saving investment? Nothing but which one of the following is not eligible for deduction? Fixed deposit. Now, Naveen is employed in FMCG. He constructed residential house. Remember, constructed, not purchased. But 80EA is available only if you purchased the house with the housing loan. But here what happened? Constructed. The residential house meant for the self-occupation. He availed the bank loan, how much? 60 lakh. Loan sanctioned, okay. Interest on loan, how much? 3,50,000. Naveen actually paid how much? 2,50,000. But remember, on accrual basis, we can take entire amount. Right? Even though you paid 2,50,000 also, but on accrual basis, how much we can take it as deduction? 3,50,000. Now, what is that correct option? He opted out from which regime? 115 BSc means he is following which regime? Normal. Now, what is that amount of deduction eligible? 3,50,000. First, you can claim under section 24 under house property 2 lakh. But balance can I claim under any other sections? No. Why? Construction. If purchase, then we can think about the 80EE. So based on this, I concluded, yes, your ICMI taken the stand. If the house is purchased by using housing loan, then only you can take the 80EE. In the first line itself, they given what? House constructed by using loan. So that's why you can't take 80EE. This is December 24 MCQ. Many students are picking this one. But they given suggested answers, this one only as an answer. We can't do anything. But technically, while I am filing the return, I will take this is only, they will also accept. You don't know, one student is you don't know, after exam, while making the paper analysis also, I given this is only as an answer. One student argued with me also, because she opted this, and if this is in 2 marks, if she get 60 or 50 or anything on that attempt, her willpower is very strong, so that's why that is only involved in suggested answer. She qualified on that attempt. If our willpower is strong, definitely we can do anything. So on that occasion, I think you can see YouTube comments also on that attempt. I given this, she is not at all interested to prepare SCM exam. She argued with me nearly 10 comments on the YouTube itself. Anyhow, they are also given the same answer. They taken the stand. Yes, if purchased with the loan, then only you can take deduction. Construction means no. Clear? Last section. Now 80GG section. Deduction with respect to what ma? Rent paid. Now ra, whichever is following ra, 5,000 per month will be allowed. B ra, rent paid minus 10% of adjusted total income. C, 25% of adjusted total income. Whichever is lower is allowed as deduction. We can check it out. He is a business person. Yes, total income before this deduction is this one. Why they are given the total income? In order to calculate adjusted total income, they given the total income. So simply this is only adjusted total income. Before this deduction, they given total income means that is only adjusted total income. How much rent paid? 12,000 per month. Can you tell me? Rent paid is 12,000 into how many months? 12 months. Minus 10% of 4,60,000. Please simplify this equation. Ma? 93,000. 98,000. 25% days of 4,60,000. 1,15,000. 5,000 per month means what? 60,000. Yes, whichever is lower, 60,000. This is only answer. I don't know why we are getting answers all are correct. With your help only. You only said everything na. In class, whichever is lower of the following, you only said. Because you have an exam, you revised very well. I said everything. Because every day I am preparing these section numbers. Every day I am revising these limits. That's why I remembered. You are listening only before exams and you are reading also before exams and you are ignoring every day. Remember, if you know this, answer solving is very easy. Yesterday we discussed 5,000 per month. On that time I am saying huge amount of 5,000. And here adjusted total income 10%, 25%. And rent paid. Whichever is lower, you will get an answer. Okay. With my help only. Not in an independent way. Now, it is an ATM related. Deduction with respect to intercorporate dividend. Shall we discuss, ma? Yes. Sir, our company distributed the dividend 1,30,000. How much dividend paid? 1,30,000. Dividend received. Ma, 1,08,000 net amount we received. Yes, sir. 30 lakhs gross amount we received. How much? 30 lakh gross. So dividend from the Indian companies we received. Dividend from the foreign companies also received. Can you tell me what is the TDS rate on dividend? Because we have to take what? Gross amount, not net. They given 108 lakh. But we have to show in our income as an gross income. For this purpose, just I will show you. For this purpose, TDS rate on the dividends is very important. Okay, you don't know this chapter as of now. I will show you. Ma? 8. 10%. Pakka. How much ma? 10%. That means in this question they given the dividend is a net or gross ma? Net. This is 90% only. Please tell me 100%. 120. 120 plus 30 lakh. Totally 150 lakh. Received, paid, whichever is lower, that is only allowed as deduction. Understood? Yes, this is a net amount representing. What is that? 100%. If you calculated, you will get how much? 120 lakh. Clear up to now? These are only the MCQs they are repeatedly asking from the chapter 6A. Every attempt one question definitely. The mostly they are targeting the ATM. Mostly they are targeting ATM. Dividend received versus dividend paid. Whichever is lower, you can get it as deduction. But in that exam, they are giving the twist. They are given the net amount. But we have to show what ma? Grossing up at the time of comparing the dividend paid or dividend received. Yes, take a break for 15 to 20 minutes, then we can meet. Not PM, right? AM. Yes, very good morning to all of you. Oh, sorry, good afternoon. Now, which chapter we can start? You can tell me, based on your interest only, I will start. Transfer pricing, that I will prepare tomorrow, Sunday. If I am, yes, your wish, sir. If you are saying, then I will follow that. All of you, please tell me which chapter we can start now. I want to give the two options only. The first one, DTA, second one, tax planning. Tax planning, DTA, as per my wish. My wish means I want to take a break. You also need a. Okay, in this break time, I prepared tax planning chapter. Now I can start. Shall we start tax planning chapter? I can't deliver at a time two topics, right? So some of are asking tax planning, some of are asking the DTA. First we'll give the tax planning chapter. The weightage is same for the both the topics, 14. DTA is on routine problems. Tax planning can contains the everything. So we can enjoy every topic like FM also, BDA also, whatever the topics we have in our intermediate, we can recall all the things and we can do it. Okay. Yes. I prepared, no problem. I will tell you in a best way only. If you have any doubts, you can ask me. Already some of the handwritten notes are already dispatched. Today we are going to dispatch remaining also. Okay. Meanwhile, please adjust with the soft copies. Meanwhile, please adjust with the soft copies. We received everything from the printer. So already few books we dispatched yesterday. Today we'll dispatch remaining also. Tomorrow also we'll dispatch. Tomorrow Sunday, day after tomorrow. Now, shall we? Yes, ma. I also need to send everything as early as possible only. So that handwritten finalization taken much time from my side. That is taken much time from my side only. So because everything ordered at a time, we'll check. So now our next topic is tax planning. Okay, break is over. Listen. Now our next topic is nothing but what ma? Tax planning. Sir, weightage we can expect one descriptive, another descriptive, one MCQ. Yes, totally. Okay, please use the calculator and tell me 16. To be honest, in our CMA final syllabus, they are concentrating only on tax planning only. But some content they given related to other concepts also. What are that? First one, tax planning. Second one, tax avoidance. Next one, tax evasion. Next one, tax management. We need to know the definition of everything. But the much concepts they are given only related to tax planning. But remember, we have one more topic that is in GAR. General Anti-Avoidance Rules. The chapter always linking with which concept? Tax avoidance. If there is any tax avoidance, we have to prevent the tax avoidance by using the general anti-avoidance rules. Understood? Now, we'll discuss one by one definitions. We'll discuss one by one definition. I will go very slow in this chapter. Today, if I am completing this chapter also, I will be very happy. Okay? Almost every question I will tell you. The similar questions you have to do it as an homework. Now, definitions first I will tell you. First one is an tax planning definition. Okay, one example I will take. Based on this example, I will explain you the meaning of tax planning. Yes, shall I? Yes. Mr. A is a resident and ordinary resident. He is following old regime. Gross total income 7,50,000. Now he invested in specified investments in ATC. He taken medical insurance related things in 80D, 80TTB. Yes, because he is a senior citizen. That's why he taken 80TTB. Finally, what is the total income? 4,75,000. Simple ma. Under old regime, he want to claim rebate. So that's why he reduced his total income to the below 5 lakh. So that's why tax liability after claiming rebate will be 0. Sir, if I am doing in the same way, department will accept it or will reject it? Will accept it. Because this deduction, whatever I am taken here, as per law only I taken. As per law only I taken. So nothing but, this is a legal or illegal? Legal. It is a moral or immoral? Moral. Because law given some deductions, law given some concession, law given some benefits, I am using that benefits. By using that benefits, what I am doing? Reducing the total income, reducing the tax liability. This activity is only known as tax planning. What is this activity? Tax plan. Remember, refers to the tax planning refers to taking the legitimate concession and legitimate exemptions provided in Income Tax Act 1961. For what purpose we are following? In order to reduce the total income and reduce the tax liability. Some examples of tax planning, please let me know. Investments in ATC, 54 series exemptions. Can you tell me? 54 series means capital gain exemptions. I sold one residential house property. I purchased another residential house property for claiming 54 exemption. That is tax planning only. Whatever deductions, exemptions given in the act, by following that, if you reduce your total income, if you reduce the tax liability, that is only called as tax planning. Tax planning is legal or illegal? Legal. Tax planning is moral or immoral? Moral. So now department also will encourage for the tax planning. Always the department will encourage the persons who are doing the tax planning. Now next we want to take the definition of what ma? Tax avoidance. Simple. There is a loophole in law. There is a mistake in drafting. There is a loophole in law. By using that loophole or by using the drafting mistakes, we take an advantage. We take an what ma? Advantage over the drafting mistakes. We take an advantage of the drafting mistake, advantage of loopholes. By using that, we are reducing our tax liability. Objective of the tax planning, tax avoidance is one and the same, reduction of tax liability only. One is in moral way, another one is in immoral way. So simply, if I am doing the tax avoidance, I am killing the spirit of lawmaker. The spirit of lawmaker is one way, but I am using that loopholes and drafting mistakes. Simply, I am killing the intention of the lawmaker. This is called as what, ma? Tax avoidance. Primary objective of both the things one and the same, reduction of tax liability only. One is in moral way, another one is in immoral way. Now we want to prevent this tax avoidance. For preventing the tax avoidance, we have two things. One is an specific anti-avoidance rules. Second one is an general anti-avoidance rule. It is our separate chapter. I will conclude this chapter within 45 to 1 hour. 45 minutes to 1 hour at any time. If you have in the short time, then we can start and we can close the chapter. But specific anti-avoidance rule, yes sir, specifically they will insert in our sections itself directly in act. Specifically, if they are inserted in any section in order to prevent the tax avoidance, that is specific anti-avoidance rule. If there is no specific anti-avoidance rule, then we have to apply general anti-avoidance rule. Some examples of specific anti-avoidance rules I will tell you. Generally, this is PZBP chapter, it is capital gain. It is what PZBP chapter, this is an capital gain. Simply, if you have an immovable property, which property immovable property. Yes, immovable property, if stock in trade, then PZBP will attract if you sold that. If that immovable property is an capital asset, if you sold, yes sir, if you sold, which head of income will attract? Capital gain will attract. Now, many of us are selling immovable property for high price only, but we are always showing the less amount as an sale consideration in order to reduce the PZBP income as well as capital gain income. So nothing but sale price minus cost is nothing but what either PZBP as well as capital gain, depends upon the immovable property holding position. Intentionally we are reducing the sale price in order to reduce the PZBP income. So that's why department inserted one specific anti-avoidance rule in these sections. What is it? If you are selling less than stamp duty value, government value. What is the stamp duty value? Government value. If you are selling less than stamp duty value, simply 100% or 110 110, there is a huge relaxation of 10%. You can sell more or less than the 10% also. How we can sell exactly with the SDV? 10% deviation acceptable. That's why here we have to take 10%, 110% of actual consideration, still less than SDV. Yes, we have to take the consideration here as an what SDV. So now, even though you are selling at a low price also, department is asking the sale consideration as an at least the stamp duty value you have to show. Can you tell me, by implementing this provision, tax avoidance is prevented or not? Yes, that's why it is a specific anti-avoidance rule. 100 crores property, stamp duty value also 100 crores. But I am selling for 50 crores only. Which is consideration we have to take? 100 crores you have to take. Stamp duty value you have to mention for computing the PZBP income or capital gain income. Next, in intermediate level, we have a clubbing provisions chapter. If you diverted any income to your husband, your wife, that income will be clubbed in the hands of SC only. Because of these clubbing provisions, tax avoidance can be prevented. Next, our entire transfer pricing chapter is an example of SAR. What is a SAR? Specific anti-avoidance rule. What are the examples of specific anti-avoidance rule? Section 50C, 43CA, clubbing provisions, transfer pricing chapter. Whenever we don't have any SAR, we have to follow GAR. Understood the first two? Next, we have to take the third definition, tax evasion. I am recording the bogus expenditure in my books of accounts in order to reduce my income. I am not at all recorded income in my books. I am paying the salary to the fake employees. These are all are called as what? Evasion. Simply, evasion means we are hiding some facts. We are falsifying records. We can do this evasion by using the fraud or collusion. If any one of these things are involved, that is called as what? Tax evasion. Examples, record of bogus expenditure or fake expenditure. You have to remember, tax planning is legal, moral. Tax avoidance is what? Immoral. This is directly we can take illegal. How you can claim the fake expenditures? How you can forget about the incomes to the books of accounts? These are all are illegal, unfair. If you are doing this tax evasion, for you, I will give you that much punishments in terms of penalty, prosecution as well as fine. Sir, maybe you can ask, sir, tax avoidance done, sir. Can I give penalty prosecution? No. That is lawmaker mistake. Intelligently SSC taken advantage over that. If tax avoidance is done, next year please make an amendments into that act. You can't do anything. That's why we can call it as an immoral, not illegal. But which one is illegal? Evasion. Understood a difference? Tax planning, encourage. Tax avoidance, prevent. Tax evasion, prevent and give the punishment. Understood? Now, last one. Tax management. Now, what is it? Tax management. As an SSC, you have to fulfill certain tax obligations. What are the tax obligations we have? In previous year, we have to pay advance tax. Previous year, we have to collect TDS, deduct TDS, collect TCS, deposit of this. Returns also we have to file, TDS returns also we have to file in a previous year. In assessment year also you have some obligation, filing of return of income, payment of self-assessment tax. If you fulfill these obligations properly as per act, that is only called as what? Tax management. You managed everything properly, that is only tax management. If you not done properly, for you, yes sir, penalties, interest and fines will be there. Why we need to implement tax planning? In order to avoid all these things, we have to implement a tax management properly. In every organization, tax management is very important. If you're not managing properly, you have to pay everything. Understood? You have to pay everything. In order to avoid these things, please manage properly. Return of income, if I am filing on or before due date, simply I can escape which type of interest? 234A interest I can escape. Next, what are the examples? Advance tax installments. If return of income filing within the time, these are all are called as what? Tax management. Now, I can provide you summary of these things. Listen. Okay, listen. Now, first one, tax planning, avoidance, evasion, management. Please remember the headings. Now, I want to talk about the morality point of view. Which one is moral? Tax planning is moral. Which one is immoral? Tax avoidance is immoral. Which one is illegal? Tax evasion. Which one is your duty? Tax management is your duty to comply. Next, need. Tax planning, definitely we want. It is a must and should we have to do. So that's why it isn't desirable. We have to avoid this. That's why it isn't tax avoidance. Avoidable. This is an objectionable. If you are doing this, definitely we can question. This is an objectionable. Last one, it is an essential. You have to do it definitely. Otherwise, you have to pay interest and penalty as well as a prosecution fine. Next, practice. If you doing this, you will get tax savings. If you doing this, you can't call it as tax saving, hedging. So we are mitigating the risk here by way of following that what loopholes. Tax hedging. Tax hedging is possible in tax avoidance. Tax savings is possible in tax planning. Here, tax concealment. Simply you are hiding the tax by using the fraudulent activities. Last one, it is in tax administration. Just remember, don't by heart everything. Tax administration means tax management. Next one, treatment of law. How we are treating the law in different cases. You are using the benefits. You are using the loopholes here. Here we are overruling the law. Whatever they are saying, I will override that. Next one, we are implementing the law in tax management. If I am implementing, that is only the management. Next, benefit. Benefit will arise in the long run also. Or if I am taking the insurance policy, 1 year benefit or multiple years benefit, ATC I can claim for the tenure of the policy entirely. It is short run. Why? Next year they will make amendment or they will insert SAR or GAR. You can't take the long run benefits by using the tax avoidance. Benefits will not arise in this case. We can give the penalties, fines in this case. Last one, we can avoid the penalties, fines and the prosecutions if you managed everything properly. So content understood. So now if I am asking anything, maybe you can confuse regarding this, but you have to understood whatever we discussed in the definitions as of now. Tax planning, tax avoidance, tax evasion, tax management. Okay, give me 2 to 3 minutes time. Please revise the definitions. Please revise the definition. I will download the hard soft copy of the workbook and I will start the questions directly. Yes, one type of questions they will give you in every exam. They will give you some activities or events. They will ask whether this activity is TP, TA, TE, TM. What is that? TP, tax planning, TA, tax avoidance, TE, tax evasion, TM, tax management. Done? Okay, give me 2 minutes time. Yes, shall we? Okay, remember question number 1. They are asking the short notes on tax evasion, tax avoidance. Whatever we discussed in definition, please write it down along with the examples. Second, hereafter we have questions. Question number 2. Next, question number 3. Question number 4. Question number 5. Question number 6. Question number 6. Up to this, that means 2 to 6. Same questions. They will give you certain events or activities. You have to write it down whether it is in tax planning, tax avoidance, tax evasion or tax management. Shall we do that? I will tell you 2 or 3. You have to do remaining. To be honest, question number 2 is very easy. Very easy. If I am saying that, no use. I will take the advanced things. Advanced means somewhat important things I will cover. But here I will tell you one important thing in this type of questions. They are asking following acts are tax management, tax planning, tax evasion. Here answers mostly you will get these 3 only. They are asking following activities, please classify into 3. There is no need to mention as an tax avoidance in any one of the question. They are given answers directly, only 3. Why you need to write the TA? Understood? Answers will be definitely within these 3 only. You can do it in the lunch break directly, this question. Okay? Shall I go further? This I will tell you. You can refer this question after DTA. Okay, if you are not referring also, no problem. After DTA chapter, I will come back and I will tell you this. Now, they are asking whether it is in tax planning, whether it is in tax avoidance, whether it is in tax evasion. That means how many answers you will get? Totally 3. First, I don't want to tell you now, because I need to explain the permanent establishment definition and business connection related things. Afterwards, I will tell you. Definitely don't think about this question first. Next, I'm invested in the bonds under 54 EC. So exemption I want to take under 54 series. It is what tax planning. You have to write along with the reason. One word answers will not acceptable. Next, I'm claiming the depreciation of business purpose solar generation system, but that is installed in the premises of what residential premises of proprietor. Are actually installed in a home, but I am showing in our records it is installed in an office. I am claiming depreciation. Falsification of records. It is called as what TE. Tax evasion. Recording bogus expenditure, simply depreciation. How you can claim the depreciation if you are installing in your home? Understood? Next. This is somewhat difficult only. Listen. HUF is there. We are members in HUF. We are also working in that HUF. That's why HUF required to give what salary to us. There is no bar on the salary amounts if you are a working member in the HUF. Partnership firm paying the remuneration to partners. There is a limit on that by using section 40B. Partnership firm, if paying the remuneration to working partners, can they take whatever that amount they want to take it as deduction? No. Limit given under 40B. But in HUF, there is no such condition. HUF is paying the salary to the members who are working. Okay, nothing but HUF account if you open, in yes sir, net profit is reduced or PCBP is reduced. Why because of salary expenditure, they are recorded in their books as an expenditure. This is simply tax planning. Why? There is no restriction of recording of salary paid to the members by HUF. But if it is a partnership firm, the salaries will be limited as per section 40B. There is no condition or there is no limit if HUF is paying the salary to their working members. Clear? Simply they are recording this expenditure, they are reducing their total income. This is what tax planning. That is permissible in law or permissible, but you can't pay excessively to your relatives. For HUF, members are relatives, right? For members, you can't pay excessively. Whatever the fair amount they can receive outside, that only you have to take it as an deduction. Understood? Now, this question number 4. Now I will tell you question number 4 also. Shall we? Now, how many answers you can expect in this question, TPA, TM, TE. If you write TA, you will get 100 out of 100. TA answer, don't think about it because they given only 3 things. If you think about TA, you will get a confusion. Dana? No. Aditya Limited had to pay 60 lakhs because of what scrutiny assessment order. After assessment, assessing officer sent a demand notice of how much amount? 60 lakh. 60 lakh. Remember. Give me some time. What happened? So, SSC filed return to AO. Now AO completed the assessment under section 143.3. Now he passed an assessment order and he is asking the demand amount how much? 60 lakh. But I am not satisfied with this assessment order. Now what are the options are available in your hands? You can go for appeals. What are the appellate authorities we have? First one, JCIT appeals as well as CIT appeals. Second one, ITAT. Next one, మొహం పగిలిద్ది. హైకోర్ట్, సుప్రీం కోర్ట్. ఓకే. సో here SSC required to go for appeal ra, but he paid everything whatever mentioned in the demand notice. We paid this thing, then after we are going for an appeal. Why we are paying first ra? In future we lost in the appeals, then this 60 lakh and they will ask the interest portion also, right? First I will pay, then after I will argue with the appellate authorities. Now because of this early payment, I am avoiding the interest also, I am avoiding the any fines and penalties also. Now it is in tax planning or tax management? Tax management. Answer please check. Huh? Management. What you told earlier? Tax. Oh. Others are saying tax planning. Remember here, because of early payments, we are avoiding what ma? Interest. Yes, as well as the fines. So that's why it is TM. Understood? ఓకే. మహేష్ ఇక్కడ వాళ్ళకి తెలుగు రాదురా, ఏది మాట్లాడినా ఓకే. Now second one. What is that? Second one. Julian Limited, they are establishing one company in India for processing and treating of the biodegradable waste. Are if you started this type of business, which deduction you can get ma? 80 JJA, 100% of PCBP for the first 5 consecutive assessment years. Super akka. Okay, by using any deduction, if you are reducing your total income, that is in tax planning. Now can I go with the third one? Senior citizen own funds he having, he deposited in a senior citizen savings scheme, 80C he will get, and he taken loan for the purchase of electrical vehicle, 80EEB. It is what TP. Tax planning. Simply by using the legitimate deductions and the concession, if he taken any reduction of tax liability, that is in tax planning. Next D question. Rishabh Limited is selling the goods to Warner. Related parties or unrelated? Related parties. You have to send your goods to that other company at an cost plus profit basis. But now you are selling to the others 90% of cost. At least you have to recover what cost. But you are selling to the 90% of cost. This is correct or incorrect? Incorrect. Why we are doing this? We want to reduce our profits and we want to give the more profits to the Warner. This is simply what ma? Evasion. You are reducing your profits by falsification of records or properly? Falsification of records. You have to sell your goods to the cost plus profit basis to other, but you are selling at a cost. Because of this selling, you are reducing your income by using the falsification of records. That's why it is what tax evasion. Understood all of you? You will get one type of question for 7 mark in your exams. These questions, if you have done mistake, then don't expect exemption. Even don't expect 40 also. Now, next. This is a recently workbook added questions. Recently ICMI released a workbook. The two things, these two things also we can discuss now. But quickly. Follow outunara? Follow outunara? Are you understood the everything as of now in tax planning chapter? Okay. Without revision also you can write exam. You can write exam. but the marks will be depending upon the who are doing correction. Now, listen. Following transactions, whether TP, TM, TE, there is no TA. First, filing ITR before due date in order to carry forward the business loss. Tax management, planning, management, I'm managing my duties properly. Because of filing of this return, you are getting any reduction of tax liability now? No, it is what? TM. I am following my tax obligations properly. What is your obligation? You have to file your return of income on or before due date. It is tax management. Okay, if you are not having any idea, I given clearly an example of tax management also. Wait, I will show you. In the example of tax management also, I written return of filing within the time is what? Tax management. No. Second, setting up a warehouse in order to avail 35 AD, 100% of capital expenditure, you can take it as deduction. What is that, ma? TP, tax planning. You want to claim one deduction provided in the act. Payment of medical insurance premium 45,000 for claiming which section? 80D is in tax planning. Collecting the PAN details of the contractors to whom TDS equate to made. Yes, it is in what, ma? Tax management. I am managing all the duties whatever I have as per act. Ma, if I am not collecting PAN numbers, how can I deduct the tax? For discharging my duties, I am doing work. Tax management. Please check the answers also at least once. Recording in the books a salary paid to J who is not actually employed in company. Fake expenditure we are recording. Falsification of records. It is an tax evasion. Advance tax installments we are paying properly. Tax management. Last one, gifting the property to major son in order to divert the rental income. It tax rate and what, ma? Low slab rate. There is no offense in this. I can give gift to my major son. If he is a major, if he receives any rental income, he can liable to pay tax. I have 4 house properties. But if I am receiving rent from 4 house properties, now I am in the highest slab of 30. But I want to shift the 2 house properties to my minor son or major son? Major. If I am transferring to minor son income also clubbed in the hands of parent. Instead of that, I am transferring to major son. Now 2 house properties will tax in the major son hands. 2 properties tax will be paid by the maid. So now both are in the low slab rates only now, right? Yes, it is called as what? Planning. I am not doing any fraudulent activities. I am not doing any avoidance. Just I am planning the basic exemption limits availability in both the person's hands. Understood? Can you write it down if they are given the same questions? Yes. Last. Classify whether this act is TM, TP, TE. So there is no TA in this question. Ma, first read and tell me that answer. Please tell me TE, TM in that point of view. T, P. Why 80D deduction you want to claim? That's why you are doing. That's why tax planning. Second one. Management. That's why I want to cover these questions. Second question, that is the question. You can easily write answer. Remember, my income exceeds the basic exemption limit. Example, I am receiving some payment from one institute regarding salary or professional fees, etc. Okay. Actually, if my income, entire income is below the basic exemption limit, if below the basic exemption limit, then I can submit the 15G form to them. I will say, sir, please give the total amount because my entire amount is below the basic exemption limit. That's why no need to pay tax from my side. But here your income is more than basic exemption limit. Still you are submitting this. Means what? Evasion. My example, I am receiving some commission from the principal. Only that income I have 1 lakh. Remaining I don't have any income. Now I can submit the form number 15G to that principal. I have an only 1 lakh income in this year. Don't deduct the tax because my basic exemption limit is 2,50,000 or 4 lakh. That is correct only. But I have an 1 crore income, but I am submitting to this fellow, I don't have any income in this year, please don't deduct the tax. That is called as what, ma? Falsification of record, submission of wrong information. It is called as what? TE. Understood all of you? Next. Third one, please tell me. We are maintaining the proper records for the TDS of an employees and depositing also on this time. It is what, ma? Tax management. D, invest 1,50,000 in PPF. PPF, Public Provident Fund, in order to claim 80C. What is that? TP. Fictitious entries we are taken. This is what? Tax evasion. We forgot to file the return by the due date, but we filed before end of the relevant assessment year. Huh? What is that? Management. Vaira? Ma, belated return simply. But this sentence is incorrect. Why? We can file the belated return before 3 months to the end of the relevant assessment year. Earlier we have a time limit up to the end of relevant assessment year. 3 years back amended. Yes, what is it? Last date for filing of belated return 3 months prior to end of the relevant assessment year. Anyhow, we are filing return belatedly. If I am not filing the return, best judgment assessment, interest, penalties, prosecution, everything I have to face. Now I am avoiding everything certain extent. That's why it is TM. We are selling agricultural land in rural area and we are claiming it as an exemption. That is what, ma? TP. Next, we are claiming the depreciation for personal car, showing it as an used for business. T. E, falsification. We calculated advance tax and we paid advance tax properly in a previous year, TM. And we are earning the 4,000 interest from the savings account. We are claiming deduction under 80 TTA. It is what, ma? TP. Now, I will give you 2 minutes time. Please complete second question directly. On your own, please complete second question directly. Shall we do workout? From my side, we posted everything. Whatever the data they transferred, we bring books also. Okay, I will show you. Please look. Tell me the answers for everything, one by one. You can write. I will show you the answers. You can compare. Please, please. So repeatedly they are given these type of questions in exam for 7 mark. Either these are only your MCQs in your tax planning chapter. Directly don't do the questions. First you can refer the definition whatever I given, examples also, Then you can jump to this type of questions. Dana? Don't check it out the answers. The first you can write, then after you can compare. అర్థమవుతున్నారా నీకు? Yes. Yes, if I am gifting, then who will receive the rental income? Tax evasion case is not there because we are gifting genuinely. Okay, that means without transferring the property in his name, just rental income transfer. Falsification of record T. Dana? Any doubts in that question, Ra? Huh? Pakka? Now we can go to the next type of questions in tax planning. Shall we? Till 1:30 I will take, Ra. So if you are feeling hungry, yes, we can take break early. Yes, your opinion. We can take early. We can continue. Yes. Now, in tax planning, theory part is very important. I don't know how you learn the tax planning in earlier attempts. Okay, if you learn from me, then same approach. Now I will also go in the same approach. But if you are learned from any other faculties, that approach is wrong for learning this chapter. Definitely I am saying on YouTube live that approach is wrong. Okay, many students are confusing while reading the question number 3A, 3B. They are assuming, sir, they are given intermediate questions, sir. That is not intermediate. That is our tax planning chapter questions. Now, I will tell you before break some theory questions. I will tell you. Even though you are felt it as an boring also, you should listen and you should learn that questions. You will get that questions in exams definitely. Theory questions. Pure theory. Shall we by heart? No option for you. You have to by heart it. So basic approaches of tax planning. Now I am discussing what are approach. How can I do the tax planning? How can I do the tax planning? How many approaches we have? 2. Clearly written, Ra. 1, 2. Okay, Ra. Mostly we will follow approach 1. What is that, Ra? By way of taking deductions, by way of taking exemptions, we can reduce our total income, we can reduce our tax liability. Most of the SSCs will follow this one only. This is only what, ma? Reducing taxable income. Mostly use it this one. Yes, higher income, higher tax liability. But if I am reducing the total income by using deductions and concession, it is only called as what, ma? Approach 1. Approach 1 name what I given? Reduction of tax liability or taxable income. Second one. No one can following this dimension. So that's why it is an underestimated dimension. No one will know about this approach. No one will know about this approach. That means you need to know now. What is that approach? What is that approach? Deferring the payments of taxes to that extent possible. I will tell you simple example. Right? I am taking life insurance policy. Every year I am getting deduction for that ADC. Okay. Maturity proceed I will receive in the 10th year, right? On that time, if taxable, taxable. Exempt also, exempt. Exempt under which section? 10 subsection 10D. Now simply I am planning such activities. Even though if it is taxable also, tax will be required to pay in which year? 10th year. Now I am deferring the tax payment or not? Okay, sir, instead of that, if I am selecting the that entire 50,000 to one bank account deposit, every year will receive interest. On that interest you have to pay tax. You can't defer that. Remember, you have to pay tax, but deferring the payment of taxes is also called as tax planning. Now I will tell you logic behind underestimated dimension. Right? For small business, always there is a working capital issue. If I am deferring outflow to that later period, now I can use this money for the working capital purpose, right? So that's why it is suitable for which business? Small businesses. MCQ very important. Now I need to pay tax, or I need to pay tax in a future. Which one is better for small businesses? Future. Next, in this approach, we are not reducing tax liability. Just we are deferring the payments to that extent maximum possible time. This is also another approach. In time value of money terms, it isn't better. We are paying in future instead of present. So it is an underestimated dimension. So no one is doing now. All are following this dimension only. Okay, if they want to test MCQs, they will ask it is suitable for which type of businesses? Small businesses. Understood? Approaches, if they ask, you have to mention two side headings only. What are the two side headings? The first one, reduction of total income, tax liability. Second one, deferring the tax payment to that extent the maximum possible time. Approaches means. Next question. Yes, sir. This is only given as an example. Already we covered same thing in deductions chapter. Do you remember that? No. If question asking objectives of tax planning, then you have to write it down this. Why we are doing tax planning? Why we are doing tax planning? What are the objectives behind the tax planning? Approaches is different, objectives is different. If examination, if they are given the question, you are writing wrong answers for the questions. Approach means already done. Now we can refer the objectivities. So now I will tell you side headings. You can extend the side headings in your own language in exams. Don't by heart the matter also in your materials. Okay. First, a main objective behind the tax planning is the first one. What is that? Tax liability reduction. My primary objective, that is only. Now, I can do this reduction of tax liability by using TA also, TP also. Where we have an litigation minimum, there is no dispute if you are doing tax planning. If you are doing tax avoidance, always there is an what dispute. Where we have an minimization of litigation. In tax planning, there is no litigation, to be honest, but because of fraudulent submission of documents, example, ATC you are claiming, there is no litigation, but ATC is claiming with the fraud documents, litigation will be there. That's why I can't say it as a zero litigation, but I can write it on it as a minimization of litigation. Don't write it on it as a zero litigation. Example, you are claiming ATU deduction, they are also accepting, but you are not submitting the medical certificate to the AO. That is correct? No. That's why minimization of litigation is possible, not zero litigation. Third one, productive investments. You don't know power of insurance policies. Okay, personally I experienced in a recent times, in the last 2 years also. Many are thinking about taking that insurance policies or health insurance or life insurance policies related. Simply they are thinking. But if you taken, that is your investment, automatically you are getting tax savings. Sukanya Samruddhi Yojana, productive investments only. So combinedly after 20 years you can get the crores of money also. So means tax planning objective always what? Productive investments. Example, okay, simple example. I filed the return of income of a very many software employees 3 years back, not now. On that occasion, one person asked about the insurance policies. 2 policies he opted. He sent for the suggestion purposes. One is an 1 crore maturity value, that is life insurance, not health. Another 5 crore. So I observed everything. Okay, some outflow, inflow, benefits point of view. I suggested 1 crore only as an best. 1 crore as an best only I suggested, because inflow, outflow point of view on that time. After that, discussion closed. I don't know their, but I know their colleagues also. Her brother also our client only. For him also we filed the return of incomes. On fine day, his brother called to me and he said about he expired yesterday night due to accident. Please forward any information if you have related to life insurance policies. Okay, but I think 2 months back, that means on that time 2 months back only he contacted with me and he asked a query. I don't know whether he taken the policies or not. He having 6 months baby, newly married person. And he asked about friends contact also, because we informed to that friends contacts through that company also taken in. So throughout the 2 months they searched every place in their house for identifying the insurance policy related bonds. Finally they found for 1 crore. Later 5 days they found for 5 crore also. Anyhow we can't replace the human, but with that 6 crores easily they can survive. So that's why it is a productive investments only. Not only we are taking easy money, but if you are invested in NPS, you are getting amount after maturity period. If you are invested in fixed deposit, that is a productive investment or not? Yes, that's why always everything is important. Department is also considering the productive investments. If you are doing the productive investment, I will give you tax savings. Last, if you are doing this productive investment, economic stability will be possible. And this also same explanation I will give you. If I am contributing to the charitable trust, which deduction I will get? 80G. Indirectly, if you are contributing, you will get 80G. Automatically, economic stability will be possible because of charities. And healthy growth of economy also will be there. If I am contributed to NPS, with the help of that NPS contribution, central government can pay the salaries to the staff also. They can use for infrastructural facilities also. That means these 2 explanations are one and the same. Because of the tax planning, 2 more objectives are what? Healthy growth of economy and economic stability. The 5 objectives, please remember. Reduction of tax liability, minimization of litigation, productive investments, economic stability, healthy growth of economy. These 2 things you can write it down combinedly. Here, they can ask you in an MCQ as a maximization of litigation. That is not an objective. What is an objective? Minimization of litigation is an objective. Approaches to objectives, how many? 5 fingers. Next, we have to learn the essentials of tax planning. If questions are adding, then confusion will be more. Approaches done, objectives done. Now I have to start the essentials. Can you do tax planning? No. Because we don't know income tax law properly. We don't know amendments properly. We, not you. Okay. We don't know everything. If you know everything about the income tax law, then we can do tax planning. So that means what are the requirements we have to possess for doing tax planning? What are the requirements or resources we need to possess for doing tax planning? Without these things, we can't do tax planning. Essential means nothing but what are the things we have to require for doing tax planning. First one, up to knowledge about tax laws. Up to date. Even I qualified in 2016, on that time Finance Act 2016. Can I follow the same thing now? No. Up to date, along with the circular, I think you know circular will be released by whom? CBDT. Notifications related to Act, central government. Notifications related to rules, CBDT. Next, administrative instructions, whatever issued by the CBDT, if you know everything, then only you can do tax planning. Next, sir, if you want to do the tax planning, you have to disclose the true and full information. If you have an 80C list of investment, please submit the documents. If you want to claim the 80D deduction, please submit everything. In tax planning, one and the foremost essential thing is we have to disclose every information to the department for claiming the deductions. Next, here we have to avoid the fake or fraudulent transactions. Meaning is same for these two. One is nothing but they are saying everything you have to disclose. Full information, true information. Next one is negative words. They are saying please avoid all falsification of records and avoid fake transaction, avoid bogus transactions. Last one. Are our class schedule is fixed or flexible? Ra? Flexible. Okay, ra. Okay. Remember, planning always flexible. Ra. Especially tax planning should be flexible. Why? If any government given the new guidelines, yes sir, if any enterprise goal changed, then we should change our tax planning also. Audit plan, flexible. Tax planning, flexible. Everything if flexible, then only you can do tax planning in a proper way in long run. So what are the essentials? Just remember these headings. Up-to-date knowledge about law, true and full information, avoid fake or bogus transactions. Our plan will be flexible. Now, approaches how many? 2. So, first one is a reduction of tax liability. Second one, deferring the tax payment to the extent the maximum possible time. Next one, objectives are 5. The first one, reduction of total income, minimization of litigation, product to investment, healthy growth of economy, and next, economic stability. Next one, essentials. Essentials 4, up-to-date knowledge about the tax laws, full information and true information, avoid fake or bogus transactions, planning must be flexible. A day before exams, if you know one point, you can write remaining 4. So that type of learning only required. So many students are taking this and they are trying to write and read everything. Not required. Just this point, if you know, you have to elaborate this. Next, one more theory question. Types of tax planning. Sir, approaches done, objectives done, essentials done. Now we are in types. Shall we start the types of tax planning, all of you? Online. Shall we? We are classifying the tax planning into, yes sir, first classification, second, third. Based on, yes, one way we can classify into short range and long range. Then after permissive, then after purposive. Now remember, what do you mean by the short range type? What do you mean by the long range type? Simple. I invested in public provident fund certain amount during this year. I will get deduction for now only or for future also? Now only. That means if you want to take the benefit particularly related to one financial year with a limited objective, if you are doing anything, that is what a short range. Just 1 year or next year I want to take, this is in short range. But long range means I will tell you. Yes sir, at the age of 15th year of my minor daughter, I am transferring one property as a gift to her. 15th year, 16th year, 17th year, what is the tax treatment? That rental income will be clubbed in my hands only, because the minor's income is clubbed in the hands of parents whose total income is higher. But 15th year, 16th year, 17th year is not in my mind. But after attaining 18 year, till the entire life, she is only required to pay the tax I am relieving from the tax liability. So this is nothing but what a long range. Yes, we can't get the benefit immediately, but we can get the benefit in future. I am giving the shares to my minor son. Now it will be club. After attaining the majority, there is no clubbing provision will be there in my hands. Simple. Short range means we want to get the benefits for 1 year, particular year. That is short range. Long range means not now. So now we don't want to receive any benefits, but in future we can receive the benefits. That is a long range. Short range planning, long range planning. Next, permissive tax planning, very important. Permissive means easy, law given some deductions, law given some exemptions. Meaning is what? They are given the permission to do the tax planning by using that. That is only a permissive tax planning. Simply, they are given the one express sanction. Clearly, they are saying, please use these things and reduce your tax liability. This is called as what? Permissive tax planning. Yes, simply, tax laws of our country is giving the many exemptions and benefits. Mostly, our Indian taxpayers are doing this only permissive tax planning. Next one, purposive tax planning. What is that? Purposive tax planning. So there is no express sanction in the act. By your intelligence only, by using your mind only, by using your circumstances only, if you are doing tax planning, that is only what? Purposive. Law is given the guidelines, that is permissive. Law is not giving any guidance. By your intelligence, by your circumstances, by using your situations, if you are doing, that is what? Purposive tax planning. Yes, clearly based on circumstances we can do. Yes, sir. There is an express sanction. There is no express sanction. There is no express sanction in the act. If there is an express sanction in the act, that is an permissive. If there is no express sanction, still we are doing tax planning means what? Purposive. Now I will show you one question. Please tell me from which chapter they are given that question also. Please tell me, read this question and from which chapter they asked this question also, please tell me. House property. So this is only I am saying, this approach of learning is very wrong. For doing this sum, maybe house property knowledge is required. Many students, by using this sums, they are asking, sir, they are asking intermediate questions, sir, do I need to learn entire house property? Intermediate DT syllabus is very easy to learn. Many provisions are there. Many questions are there. How you can learn everything? Basic, you know. If I am asking house property format, can you say? That's enough now. But I don't want to believe you. That's why I will tell you again. Okay. Simply, I can say this question is example of purposive tax planning. Yes, anyone, if you are accepting this, then only you can learn. This is an example of what? Permissive tax planning. No one can identify easily. But anyhow, one night I realized that this is a permissive tax planning example. So please follow it. Shall I explain this? Shall I explain? But I don't want to explain this question. I already summarized everything in our handwritten. I will explain this, then after you can do question. Okay. So how the permissive is very easy. All our return of incomes are doing this is only. Purposive we have to learn. There is no express sanction in act. But by using our situation, we are doing this. That is only purpose. Now I will give you example. Listen this example properly. Husband having the how many houses? 2. He can occupy 2 self-occupied properties, right? How many? 2. Now he occupied. That's okay. But he is given the gift to his wife. How much cash gift he given, ma? 25 lakh. I will tell you simple point. If I am given the gift to my wife, on that gifted asset, if any income generated by my wife, that is clubbed in the hands of husband. Gift to wife. So you can check the reverse way also. Gift to spouse simply. Husband to wife, wife to husband the same way. Okay. Now what is a gifted asset? Cash. On this she earned any income. That income should clubbed in my hands only, right? Now this intelligent fellow, again I am saying this intelligent fellow, how they are planned? Simple. With the help of this money, wife purchased a house. How much cash? 25 lakh. She purchased a house also with the 25 lakh. Can you tell me how many self-occupied can be held by the individual HUF? 2. Here he occupied 2. Now she can also occupy how many? 2. Now she is not giving this house for let out. If she given for let out, she will receive rental income. That rental income will club in the hands of husband. On gifted asset, cash given as a gift, converted into house. Now it is a gifted asset. On this gifted asset, if any income generated, that should be clubbed in the hands of who are given the gift. Intentionally they planned, they want to held this house as an what? Self-occupied. Self-occupied house related income will be 0 or any amount? 0. Rental, GAV is nil, NAV is nil, standard deduction is nil, there is no interest on loan also. That's why, what is the answer? 0. Go on club 0. Rental, okay, how much income we generated on the gifted asset? 0. Go on club the 0. Can you tell me? Is type of things given in act? No. By using this situation, by using these circumstances, they are doing this type of planning. That's why it is called as what? Purposive tax planning. What is that provision they use it for the purposive tax planning? Every individual HUF can occupy 2 self-occupied properties. Understood? If I am taken this as a let out, this rental income, whatever X amount you can get, this will be clubbed. Simply husband is avoiding the tax on this gifted asset. Now I will check this question. Shall we? Last thing for today. Before break, before lunch break. Okay. Today we have a match or tomorrow na? Bag updated now. Okay. Mr. A, he having 2 residential houses for own residential purpose. How many residential house he having? 2. The 2 also self-occupied. Details they given. So house 1, house 2 details they given. These 2 houses are self-occupied and the 2 held by whom? Husband. Now he gifted 25 lakhs to her wife. Or his wife, not her wife. Okay. Maybe her wife also, no problem. Now next one. Out of such money, Akka purchased what? Residential house again. That means with the help of 25 lakhs she purchased a house, that is also used for what? Self-occupied. The new house what she purchased, that municipal value given, corporation tax also given. They are asking compute the tax liable, compute house property in the hands of husband and wife. First shall we calculate the husband? How many houses we have? 2. 2 houses, I can say combinedly two houses related, NAV is what? 0. Standard deduction also 0. But interest on loan, you have to observe both the houses combinedly, how much is there? 45,000. Self-occupied houses related, how much maximum I can take? 2 lakh. That's why, remember, the deduction not per house, per SSC, 2 lakh or 30,000. I haven't two self-occupied houses. Combinedly, I can take how much? 2 lakh or 30,000 as the case may be. Not per house, per SSC limit. That's why per SSC I am taken how much? 2 lakh. But here limit will be, sorry, limit 2 lakh will be there. But actually interest will be 45. That's why I can take 45. What is the loss I will get finally? 45,000. But I given gift to wife now. So if any income generated by wife, that should be clubbed in my hands. Now I will check it out. What is that income from house property in her hands? NAV 0. Deductions also 0. Suppose if income is 0 also, that income required to be clubbed in the hands of whom? Husband. Now please add this 0 to the husband account. Why? If really if they earned some income, then suppose if it is a let out property, 6 lakh income she generated. 6 lakh now we have to reduce. No need to pay any tax by her. But the same amount will be added to whom? Husband. Understood the procedure? Suppose here question saying that it is a self-occupied. If it is let out, then she can generate some amount of 6 lakh. Example, 6 lakh is taxable in her hands or in her husband hands? Husband. So that's why that is clubbed in the hands of husband. Please reduce it. No need to pay any tax by her. Now we have to add this income to whom? Husband hands. But here there is no income, but you have to show properly. Sir, this income whatever we earn, that required to be clubbed in the hands of husband. That's why reduce it here and please add it to the husband income. Understood at this point? If any amount given as a gift to the spouse, on that gifted asset, if any income generated that is clubbed in the hands of transferor. Transferor means who given the gift. In this question, 25 lakh gift given, but with the 25 lakh, she purchased what? House for self-occupied. So that's why what is that income? 0. The 0 also you can club. So this is called as what? Purposive tax planning. Okay. In exam, if they are given this question, you should argue with your all friends. It is not a house property sum. It is not a clubbing provision sum. It is an tax planning sum. Tax planning chapter sum. Topic is purposive tax planning. Will you accept or will you agree? You want to argue? Please accept blindly. It is our study material question. Who drafted this question is an intelligent, but I don't know whether they are continued this person in the department or not also. I haven't doubt. Yes, if they haven't much intelligence, then only they can frame this type of questions. If this question is not there, then how can I explain this concept of purposive tax planning for you? Simply I can say by heart these two words. If act says that permissive, if act not saying that purposive. Now with this example you can accept directly without arguing. Clear? We'll continue after the break. Please take 1 hour break. We will meet at 2:30. Yes, shall we start? Yes, very good afternoon. Shall we start? Thank you. Tomorrow also, please be sit on that side only. Okay. Huh? For you? This side okay, na? Okay. If they are sitting in this side, na, always they are talking. Especially first row. Yes, sir. And the 12 days also same structure. Yes, sir. So after that, question number 6, you can check question number 7 from our workbook. This is nothing but what ma approaches of tax planning. How many approaches? 2. Next question, objectives of tax planning. How many objectives? 5. Just saying a 5 is very easy. Ra? What are that 5? It is difficult. Next, essentials. How many? Super. Ra. Types. How many? 3. Short range, long range, permissive, purposive. Super. Anyhow, we know that thing ra, comparing to others. Okay. Next, listen, ma. After this, I want to tell you house property related points, ma. So whatever house property basics we know in intermediate level, just I will recall. Then after we can discuss some questions also. After that we can decide whether that questions are house property questions or tax planning questions. Okay. Listen, you know everything. Just I am recalling these things in my own way. Okay. House property. How to calculate income from house property? The reason we have a separate format for computing house property income. So for self-occupied, unoccupied, one type of computation we can do. And next, let out and demur let out, another type. Okay. First we'll concentrate on the self-occupied, unoccupied house properties related income computation. So GAV we can take it as nil. So municipal tax also we have to take it as nil. Why? Even though you paid municipal tax for self-occupied also, we can't take it as deduction because there is no rent received from this property. So that's why even though we paid municipal taxes also, we can't take it as deduction. So finally, can I start directly from the NAV? Yes. In case of self-occupied, unoccupied properties income computation, we can start format directly with the NAV. From NAV, we have a 2 deduction, 24 subsection A, standard deduction, 24 subsection B, interest on borrowed capital, simply interest on loan. Standard deduction, please tell me how much ma? 30% of NAV. Here NAV itself 0, that's why standard deduction also how much ma? 0. Like our marks. Okay. Next, interest on borrowed capital. Suppose if you are taken any loan related to the self-occupied, unoccupied, that interest on borrowed capital on accrual basis. What basis? Accrual. Whether we are paying or not paid also okay. Whatever you are payable to the bank, that entire thing you can take it as deduction or limit is there. Limit. How much limit? 2 lakh or 30,000 per SSC or per house per SSC. Suppose if I having two self-occupied houses together, I can take either 2 lakh or 30,000. Finally, you will get an answer. Please let me know how many outputs we can get. If there is an interest on borrowed capital is there, then you will get loss. Negative figure. If there is no interest on loan, you will get answer as an 0. Only two outputs are. In case of self-occupied, unoccupied, if you showing income, definitely will get exemption. Remember, self-occupied, unoccupied, final income from house property will be either loss or 0. Now, we have one big doubt, sir, where we can take 2 lakhs, sir, where we can take 30,000. Now I will tell you. If the following all 4 conditions are satisfied, we can take how much? 2 lakh. Otherwise, 30,000. Shall we start? Loan should be borrowed on or after 1/4/1999. On or after the date you should take loan. Loan also should be for the purchase or construction. But generally we can take loan for house property for purchase, construction, repairs, renovation, reconstruction. For how many purposes we can take? 5. 5. First one, purchase. Second one, construction. Next one, repairs, renovation, reconstruction. For these 5 purposes we can take loan. But if you taken these 2 purposes, then you will get 2 lakh. Okay. How many purposes? 5. But out of that 5 purposes, if you taken loan for these 2 purposes, then only this condition will satisfy. Then you will get 2 lakh as a deduction. Third condition. If you taken loan for construction, that construction must be completed within 5 years from that year end in which we are taken the loan. If you taken for purchase, this point is not applicable. If we taken loan for construction, that construction must be completed within 5 years from the end of the year in which we are taken the loan. Loan taken in this year end, within 5 years, we should complete the construction. Last one, we have to obtain the certificate from the lender. Definitely this is a deemed to be satisfied. Every lender will give the certificate regarding why he given the loan also. If all the conditions are satisfied, 2 lakh, not satisfied, 30,000. Clear? Can you repeat that 4 conditions with me? Loan should be taken on or after 1/4/1999. Loan should be taken for 2 purposes, purchase, construction. If you taken for purchase, if you taken for construction, that must be completed within 5 years from the year end in which you are taken the loan. Last one, certificate from the lender. Now, here I will tell you important thing. Sir, if an SSE following the normal provisions means which regime? Old regime. Next, if SSE following the default tax regime, what is the difference in the house property head? Now I have to take. As of now, we discussed a self-occupied property income computation. Next, let out property related we'll discuss. Okay, we can compute GAV. From that GAV, we can take municipal taxes as an what? Deduction. One condition. Municipal taxes will be taken by the SSE on cash basis. Cash means nothing but if you actually pay, then only you will take deduction. That too, who is required to pay? Owner or tenant? Owner if paid, then only he can take deduction. In some cases, tenants also can pay the municipal taxes. That will not be taken as deduction. For whom it is an income? Owner. For whom it is an expenditure? Owner. Then only you can take it as deduction. Then you will get what? NAV. NAV from that standard deduction, 30% of NAV. Here interest on borrowed capital you can take unlimited. Sir, 5 lakhs interest is there, sir. 5 lakh you can take, no problem. There is no limit. Why? Here you have an income. Income is required to charge means this expenditure you can take it as deduction. Here there is no income. That's why we are restricting this. Understood? Now, how many outputs you can get, ma? Income maybe you can get, loss also you can get, zero also you can get. 3 outputs you will get. Now, this isn't just, already format, but now I will tell you difference between old regime as well as new regime. Shall we start? Super. Now, self-occupied, unoccupied, standard deduction what? Nil. Because NAV is 0, standard deduction also 0. Interest on borrowed capital, there is a limit. How much, ma? 2 lakh or 30,000. For condition satisfied, 2 lakh, otherwise 30,000. In case of let out or demul let out, 30% of NAV is a standard deduction. Interest on borrowed capital is unlimited. Already we discussed the same thing. I told as per old regime. Whatever I given here also, this is as per old regime only. Sir, how it will differ if an SSE following 115 BSc? Shall we? Yes, sir. Ma, just compare these two things where we have an same things, sir. I will highlight it. In let out property, I think the same answers you will get irrespective of regimes. Why? Here also 30% of NAV. Standard deduction will be 30% of NAV. Here also interest on borrowed capital will be unlimited. That means if you have an let out, demul let out property, your answer will be same even in any regime. Many students are doing problems again. I don't want to do. Just I will copy and paste because answer will be the same. If you are trying to do also, you will get same answer. Shall we? But what is the difference? In self-occupied property, unoccupied property, you will get different answer because of what? Standard deduction anyhow nil. Here we can't give any interest on borrowed capital. Why we can get difference between these two answers? Because of interest on borrowed capital with respect to self-occupied, unoccupied, available 2,30,000 in old regime. In new regime, that is an 0. Done? Clear? Now, for my satisfaction purpose, I want to know how to calculate GAV. Okay? How to calculate GAV. Generally, in case of let out property, how we can calculate GAV. Shall we? Okay. Step 1, municipal value, fair rental value, whichever is higher. Step 2. Step 1 result, whatever you got, that we have to compare with the standard rent, whichever is lower. Simple, Rental Control Act giving the standard rent. More than that you can't charge. That's why whichever is lower. This is called as expected rent. Government is expecting this much of rent from your property. Government is expecting this much of rent from your property. Step 3. We have to compare the actual rent versus expected rent. Then you can find the GAV. Yes, this is only the steps first, remember. Okay, they will not ask GAV computations, don't think about it. But the basic format you have to know. If they are given municipal value, fair rental value, whichever is higher, you have to compare with the standard rent, whichever is lower. That is only expectation from your property regarding government. So now you have to compare actual rent versus expected rent, then you will get GAV. Now, last points before going to that question. Sir, if I have an house property loss, maybe you can get loss from your house property also. What is the treatment? First, I will talk about the normal tax regime, old tax regime, or optional tax regime. If I am following, what is the treatment? Okay, first, if I have a loss in house property, I have an income in other heads. Can I set off with the other heads? Yes. During this year, loss from house property is there. but other incomes is there. Can I set off with the other heads? Yes. How much I can set off? 2 lakh only. House property loss can be set off against other heads. Yes, possible in which regime? Old regime. But how much? 2 lakh. More than 2 lakh if you haven't lost, carry forward to next year. Sir, okay. How many years we can carry forward? 8 assessment years. Next, sir, if an assessee following the default tax regime means what? 115 BAC. Loss from house property, you can't set off with the any other heads. Even 2 lakh also you can't set off with the other heads. Okay, sir, I have an 5 lakh loss from house property. Other incomes are available, but you can't do set off in this regime. Sir, 5 lakh I am unable to set off, sir. Can I carry forward to further years? No. Carry forward also not possible. Many are saying this provision in different way. Okay, this is a final. Okay, you can believe me. If you remember, then in next 2 hours we can do game. Otherwise, so entire thing will be hell only. Again, I am repeating. Loss from house property, if anything is that. What is the treatment under normal tax regime? 2 lakhs you can set up with the other heads. Balance you can carry forward to next 8 years. In case of default tax regime, you can't set off, you can't carry forward also. Done? Shall we do questions? This is enough from your intermediate house property chapter. Okay. Don't go with any other extra content not required. If anything is required, I will tell you. But this is a past examination question. They given for 7 mark in our past examination. I think June 2024 new syllabus question. Sir, just read it out this question. They given house property related information. They are asking, look at this screen. They are asking, determine SSE income as per 115 BSc and as per regular provision. Choose which one is the best. This is tax planning. SSE approached you. You haven't 2 options to follow. You have to give suggestion. Tax planning between the regimes. Clear? Shall we do this question? Right? Yes. Amar having the age of how many years? 35 years. How many residential house properties he have? 2. One is used for residential purpose. Another one let out purpose for monthly rent. How much? 50,000. He bought these houses by using loan. Yes, loan also taken from bank SBI. During the financial year 25-26, he paid interest on a housing loan. How much? 2,50,000 each for both houses. For one house, we paid interest 2,50,000. Another house also we are paying 2,50,000. One student asking, sir, house property loss can be set off against house property. I'm saying within that head, if you already done set off, one house property you have, another house property. In between these 2 houses, you can do set off. Finally, we have loss. Now we want to set off against other heads. Other heads is not possible. Within the head, you can do. Within the head, if you do, then only you get loss. That loss you can't set off against the other heads. Okay. Now, sir, here each word is very important. Why? For each and every house, we are paying the interest 2,50,000. And both the houses, principal repayment also done 2 lakh. Why ma? 80C anna. Principal repayment of housing loan can be allowed as deduction under 80C. Now, And he having business income also, directly they given PCBP 11,80,000. Now first we can calculate total income and tax payable as per normal provision, that is an old provision. First I will calculate house property, let out property income, then after self-occupied income, then I will add the business, I will get the what ma? Gross total income. Shall we do how to calculate let out property ma? There is no information regarding the municipal taxes, fair rental value, standard rent. They given only actual rent only GAV. How much? 50,000 per month, like 12 months. How much? 6 lakh. Is there any information given related to municipal taxes? No. So that's why that is only NAB. From that, please remove the standard deduction. How much? 1,80,000. Interest on loan, how much? 2,50,000. In case of let out, unlimited amount you can take it as deduction under old regime. That's why after removing these deductions, what is a let out property value? 1,70,000. Self-occupied property NAV is 0 ma. NAV is 0. From that you can take the interest on borrowed capital as deduction. Even though we paid 2,50,000, but that is restricted to 2 lakh. Because here we taken for purchase, bought these houses for purchase purpose we are taken. That's why we can take 2 lakh. Now, if I am taking the 2 lakh, what is that loss you will get? 2 lakh loss. Can I set up these two? Without any third you can set off any regime also. Between two houses you can do set off. How much loss from house property you have finally? 30,000. Business income how much you have? 11,80,000. What is that gross total income? Ma, how much house property loss we can set up with the other heads ma? Maximum 2 lakh under old regime. Here we are doing set off just 30,000. Next, what is the 80C deduction available under normal tax regime or old regime? Can I take 80C deduction? Yes. How much? Even though you paid 2 lakh also, that is restricted to what? 1,50,000. Please remove this 1,50,000. How much total income you will get? 10 lakh. Please calculate tax liability ma. Is there any age mentioned? Yes. What is the basic exemption limit? 2,50,000 is exempt. Next to 2,50,000 5%. Next 5 lakh 20%. Plus 4% health and education says. Finally you will get tax as an 1,17,000. Please verify. This is only your practice time. Please quickly apply your mind without sleeping. Anna, matched? Then we can write conclusion or any other thing we have to do. We have to compute tax liability by using new. But smartly I can do let out property answer. I don't want to calculate again. Why? I will get same answer. Already we analyzed this thing. Let out property answer will be the same irrespective of regimes. So that's why I can copy directly. Yes ma. Let out property where we have 1,70,000. Self-occupied answer I can say directly 0. Why? Interest on borrowed capital. Here you can't take. Standard deduction not available. NAV is 0. Answer also 0. Many are solving again. Why you are solving? If you solved normal regime, directly copy let out answer. Self-occupied answer directly you can keep 0. Business income how much is there? 11,80,000. Finally, what is that 115 BSc? Total income, sir. Gross total income. 80C cannot available, cannot be taken under 115 BSc. So that's why that is only total income. I given as a note point, 80C deduction is not available under 115 BSc. What is the total income? 13,50,000. So first 4 lakh exempt, next 4 lakh 5%, next 4 lakh 10%. Yes, 12 lakh above how much is there? 1.5 lakh 15%. For this thing, we have to add the health and education cess. Now I want to know the one question. Why we are not adding surcharge here? Total income does not exceed 50 lakh. Individual. How much answer you will get, ma? 85,800. By comparing these two tax liabilities, which one we can suggest to Amar? New regime. That is only. Tax payable lower in new regime compared to the old regime. So that's why Amar should opt section 115 BSc. Now you can tell me whether it is a difficult or easy. Easy. 3A, 3B, always this questions only, ra. 3A, 3B. Okay, if they change it to 8A, 8B also, they will give the same questions only. I will tell you nearly 10 questions like this. I will tell you. Because 14 marks every attempt they are given. Now, Pakka. Shall we, Anna? Question number 15 we can start. Be attentive. Please take one rough paper and pen. I will come definitely near to your chairs. I will check it out whether you are doing or not also. Okay. If anyone is not interested to do, then go and watch in online directly. Willing? Shall we do? 14 marks at the end of the day we can keep in our pocket and we can roam on roads. Individually. Shall we? Question number 15. It is also old examination question. Shall we start? Okay. Following are the details about the income. Often Chaturvedi, how many years of age? 45 years. Salary income they given before standard deduction. Self-occupied property, interest on housing loan to SBI. Yes, sir. Self-occupied property, interest on housing loan related, how much is there? 2 lakh. Okay. Interest on fixed deposits from Canara Bank. Savings bank account interest. Recognized provident fund contributions. Housing loan repaid. These are all the income and expenditure data they given. Finally, what they are asked? Regular provisions best. 115 BSc provisions best. Suggest to that Chaturvedi which regime is best. Now what we have to do? Computation of tax liability under old regime, computation of tax liability under new regime we can do and we can give the decision. First we can compute. I will suggest you to compute first old regime. Then second, if you are computing new regime, comparison will become easy. First what we have to compute? Old. Then after new. Now I will start the side by side for this question. Default tax regime, old regime. First we will concentrate on what, ma? Please. Old regime. First we will concentrate on old regime. Salaries head the. Okay. This is an house property head. Please check it out. House property head. It is an IFOS head. It is also IFOS head. These two things they given for the ATC purposes. Recognized provident fund, if you contributed, you will get ATC. We discussed the morning only. Recognized as well as statutory provident fund, public provident fund contributions are allowed under ATC. Unrecognized, not allowed. Like housing loan principal repaid. Here interest amount 2,20,000, principal amount 80. Principal amount allowed under ATC. Now, before standard deduction they given. Please remove the standard deduction. What is that house property income? How much standard deduction you are going to reduce under old regime? 50,000. Under old regime, standard deduction under salary set will be 50,000. Yes, please remove the 50,000. How much you will get? 7,70,000. Please do every calculation. There may be printing mistakes also. Please verify everything along with me. Now, loss from house property, how much is there? 2,20,000. Can I set off 2,20,000 with the any other head of income? No. Why? 2 lakh only maximum you can set off under old regime. So that's why clearly I am taking the 2 lakh loss with the set off, and extra 20,000 I want to carry forward to next year. Like how many years? 8 years. Then after house property done, income from other sources, how many is there? 2. But here we can observe 80 TT A is available. Why B is not available? He is not a senior citizen. By way of reading the savings bank account interest itself, you should know about 80 TTA. Now remember, income from other sources total 1,30,000, right? 1,30,000. Yes. Please add 1,30,000. Finally, what is a GTI? Set off also required to be done. Finally, you have to tell 7,70,000 plus 1,30,000 minus 2 lakh. How much? Use calculator, not brain. 7 lakh. Now, I can take the chapter 6A deduction, these two under 80C, because under old regime we can take 80C. But 80C overall limit will be 1,50,000 only. Instead of 2 lakh, I can take what? 1,50,000. And 80 TTA also 10,000 I can take. Please remove chapter 6A deductions. Then you will get the net total income 5,40,000. 5,40,000. Now what is the tax liability? Basic exemption limit 2.5 lakh. Next to 2.5 lakh 5%. More than 5,40,000 is there. What is that? 20,500. Health and education says you will get 21,320. Remember, under old regime, apply old regime rates. Sir, how you are going in a speed, sir? Yes, yesterday I discussed it till afternoon, these rates only. Dana, shall we go? Same computation by using 115 BSc. Just now you can enjoy standard deduction will increase from 50 to 75. Answer will be 7,45,000 here. Can I set off the house property loss with the other heads? No. Under 115 BSc, house property loss cannot be set off against any other heads. It shall not be carried forward also. Other sources, how much is there? 1,30,000. Total 8,75,000. Chapter 6A deduction 80C is not available under 115 BSc. Not available 80 TTA also. Can you tell me under 115 BSc, what are the chapter 6A deduction we can take? 80 CCD2, 80 CCH2, 80 JJAA, 80 M, 80 LA. These 5 only. Before our class, you know everything about deductions. Now, how much our work is easy because of deductions chapter? You can check. Now, net total income also will same like in gross total income. I will say easily there is a rebate up to how much in our 115 BSc? 12 lakh. Up to 12 lakh, no need to pay tax, ma. That's why which regime is better for you? New regime. 115 BSc is an better. This also they given for 7 mark in December 2023 new syllabus. You can check the question paper also. If that is not there, you can ask me. 7 marks worth the question, no. But in exam, if you done any mistake in any area, entire answer will be wrong. Suppose if you are not taken the standard deduction properly, this will be wrong. Gross total income will be wrong. Total income will be wrong. Tax liability will be wrong. Conclusion wrong. Final answer you will get rounding figure. Shall I go with the next question? Now we are discussing the tax planning in between the regimes. Now, Question number 16 I want to do. With your permission, if you allow me, I will discuss question number 16, past examination question for 7 marks again. They given the data related to individual. As of now, we discussing the regimes between old and new for individual only. First question Amar, second question Chaturve, next question Anand. Individual regimes tax liability we have to calculate and we have to compare. How many years of age? 52. They given information about certain things. Finally, they are asking total income under both the default as well as normal provision. Decide which one is best. Shall we? Now, please tell me, first we have to do what ma? Old regime. Alright, please be attentive. 14 marks will be in your hands only. Old. Next we can do new. Okay, we can read the information. Right? Manufacturing business. Income from manufacturing business. As per P&L account, what is that income? 10,60,000. Depreciation as per books is given. Depreciation as per Income Tax Act also given. It includes additional depreciation. Normal depreciation, how much? 66,000. What is that additional depreciation? 11,000. Loss from speculation business. Public Provident Fund investment they given for ATC purpose. Medical insurance paid for self-spouse they given for ATD purposes. Dana, shall we do income and tax liability as per old regime first? Now, ma P&L account income they given 10,60,000 ma. That you have to take it as a base. That is a net profit. Ma in Income Tax Act 1961, please let me know. As per your P&L account as per books, you taken this as a deduction 56,000. That is not correct. Why? That is as per books. Okay. If you imagine this account, net profit how much they given in the question? 10,60,000. Already they taken depreciation as per books, so how much? 56,000 they consider. But this is not a correct thing. Already net profit reduced. What we have to do? Add 56,000. Now we have to reduce the depreciation, including additional depreciation. How much ma? 70,000. This is only our PCBP. How much? Please calculate. Ma? 10,49,000. 39,000. Simply, yes sir. Here, how much we got ma? PCBP income 10,39,000. Simply, we are disallowing the depreciation as per books and we are removing the depreciation including additional depreciation. Because as per Income Tax Act 1961 depreciation, we are giving allowance. Whatever books of accounts regarding, we are disallowed. PCBP, okay. Speculation loss is there. Can I set off the speculative loss with the normal business income? No. Speculative loss can be set off only against the speculative income. That's why I can't do set off. Nil. Finally, is there any other income details provided in the question? No. That is only your gross total income. From the gross total income, ATC chapter 6A deduction you can take. What is that ATC? 1,50,000 only given. Here, self-spouse related 35,000 he paid. We can restrict it to 25 only because they are not a senior citizen. How much we can restrict? 25,000. Now what is the net total income? 8,64,000. Please calculate tax liability under old regime. Yes, how we can calculate ma? First 2.5 lakh exempt ma. Next 2.5 lakh into 5%. Next 3 lakh 64,000 into 20% plus 4% health and education cess. How much? 88,000. But that should be rounded off to last digit is, if not 0, we have to round it off to nearest multiple of 10. What is the nearest multiple of 10? 88,710. Difficult, huh? No. But from this we can easily identify how to calculate tax under default tax regime. Only difference in PGBP, additional depreciation we can't take it as deduction under 115 BSc. In PGBP, I will tell you that pointer, but remember now, PGBP, not net profit is same. We can disallow the depreciation as per books, but we can give only normal depreciation deduction. Additional depreciation, we can't give it as deduction under 115 BAC. How much answer you will get? 10,50,000. Chapter 6A deduction, speculative business loss are not available for set off. And chapter 6A deduction, 80C not available, 80D not available. How much you will get? 10,50,000. If it is 10,50,000, tax liability will be 0 via after rebate. Now which regime is better? Default tax regime is better. This is also they are given for 7 mark in the past examinations. Only the difference you have to remember, which are available in which are not available in 115 BSc. Old regime we know everything. From that please compare whether these all the deductions are available or not available in 115 BSc. Done. Next again. Wait. First remaining questions also I will tell you. Question number 19 I will solve. Here it is an individual question again. How many years of age? 34. How many years of age? 34. I will explain you how to do on paper without seeing. I will tell you the differences also. Listen. First we will concentrate on old regime. Next we will do for the default tax regime. They are asking same. Income compute, tax payable compute under both the regimes. Suggest which one is better. All of you look at the screen first. Look at the screen first. Okay. Retail trade business they have. He gives the following information. Net profit. P&L account related. Net profit they given. Then after net profit includes what? Gross rent received from let out property. Generally, in P&L account, rent received also credited to P&L. Generally, it required to tax under separate head of house property, but included in where net profit. That is correct treatment. No. In P&L account, rent received also credited 1,20,000. After considering this, net profit is how much? 51.70 lakh. This credit is wrong. That's why please remove it. And separately we have to tax it as an under house property head. Separately we have to tax this 1,20,000 as an house property. It is PCBP. It is an house property. Next, interest debited to P&L account. So that means this 2,20,000 interest debited to P&L account regarding house property. Sir, this will be allowed as deduction under house property head separately, but wrongly allowed as deduction in P&L. So that's why what we have to do, we can add first here, then we can take it as deduction in house property. Let out or self-occupied by let out. That entire amount you can take it as deduction. Next, PPF related ATC, medical insurance premium, but you can take only how much? 25,000. Now, first we'll do question on the which regime old. We can start the PZBP first. Look at the screen ma first. PZBP. Net profit given. Yes. This credit is correct or incorrect? Incorrect. But because of this credit, increased or decreased? Net profit increase. Now we have to decrease. Please reduce it. But separately it required to tax under which head? House property. House property income. Remove from PZBP, add it to house property. Next, interest debited regarding house property loan, interest debited 2,20,000. Because of this debit, net profit decreased or increased? Decreased. Now we have to increase. So we want to remove this effect. What is that effect? Add back. How much? 2,20,000. But the same thing we can give it as deduction in which head? Income from house property. Why we are given 2,20,000 directly? Because it is an let out property. Let out property. Interest on borrowed capital will be unlimited. Now, what is the PZBP total? 52,70,000. House property, just remove the standard deduction also. Finally, you will get house property loss. How much? Can I set off these two? Yes. In normal tax regime, house property loss maximum 2 lakhs can be set off against other heads. Here 1,36,000 only. We can do set off. What is that income? 51,34,000. Sir, please calculate and tell me whether figure is correct or incorrect. 51,34,000. Chapter 6A deduction. How much I can take? 1,50,000 ATC, 25,000 ATD. 1,50,000, 25. How much net total income? 49,59,000. Please calculate tax and rounding up also. Please calculate tax liability. First, how we can calculate? 2.5 lakh up to nil. Next, 2.5 lakh into 5% plus 5 lakh into 20%. Next, 39,59,000 into 30%. For this, we have to add 4%. How much? 212, 208. We can round it up to 30. Yes. Online students, please give me confirmation about video and audio, then I will resume. Online, please give me confirmation about audio and video. Ma understood? So the main questions they will ask you individual regimes related tax computation, and you have to give the decision as per which regime we can get best. Now, for the same thing, we can calculate PZBP. Here there is no depreciation and additional depreciation. That's why your answer will be the same. House property, GAV okay, standard deduction okay, Here you can take the 2,20,000 also, okay. But we can get finally how much ma? 1,36,000. This can I set off and not set off, ra? I can't set off. Can I carry forward? No. What is a GTI? 52,70,000 only. Whatever the TCBP, that is only your GTI. Chapter 6A deduction 80C, 80D available? No. So that's why 52,70,000. Please calculate. Please calculate. Here total income crosses 50 lakh. That's why surcharge also 10% you have to add. Please compute. Definitely you will get this as an answer. Ma, what is the rates we have to apply? Every 4 lakh income increases 5% slab. Above 24 lakh 30%. Surcharge 10% required to be applied on income tax. On surcharge and income tax we have to apply health and education cess. Please give me confirmation. Please give me confirmation. Every 4 lakh income increases, we have to apply the 5% income tax rate. Ma? 184. That should be rounded off to 180. Which is better for you? 115 BAC is better. It is beneficial. Ma, decision be written as a wrong, ma? Yes, as per default tax rates. Please change it. All of you, please change this. Decision wrong, ma? Yes, if you have any doubts up to now, please tell me. As of now, after lunch break, we discussed only individual tax computation as per normal provision, as per 115 BAC, and then we take a decision. Now I will tell you what is the main differences also. Under house property, loss from house property can be set off against other heads under normal provisions, yes, but 2 lakh. In 115 BSc, we can't set off. We can't carry forward also. Under house property, that is only the main difference. In PCBP, what is the difference? Normal depreciation, additional depreciation, both you can take it as deduction in normal, but 115 BSc, you can take only normal, additional depreciation not available. You know already chapter 6A deductions are available in 115 BSc only 5. 80 CCD2, 80 CCH2, 80 JJA, 80 M, 80 LA. Up to now we discussed that only. Ma, individual related past examination questions already done. Okay. They are going to give in question number 3 mostly this one only. Now I will concentrate on the 3A. They will give individual related 115 BAC versus normal. In 3B, they will give company related questions. Now we can discuss that type of questions. Question number 17, past exam question. Shall we discuss? Yes, SSC name is company. So now remember, company regular provisions are best or 115 BAA is best. What is it? 115 BAA rate? 22 plus 10% plus 4% totally. Huh? 168%. Shall we do this question also now? Previously, we discussed the individual tax computation between the regimes. Now we are starting company related. That too, domestic company only having regimes. Foreign company only one rate, 35. Shall I? Yes. Here, they are given in a different way. Listen carefully. First, we'll solve as per regular provisions. Then after we can solve as per that what ma 115 BAA. First, gross revenue from operations, nothing but revenue they given directly. Previously they are given net profit. For net profit we can do adjustments as per PCBP, you will get PCBP. But here they are given net gross revenue, means what are sales amount they given. Now, manufacturing expenses, if I am removing the manufacturing expenses, what I will get? Profit. Normal depreciation, additional depreciation, I can take it as deduction under old regime. I will get PCBP. My sales they given, remove manufacturing expenses, remove depreciation, remove additional depreciation, you will get which income? PCBP. Now, 80 IA they given, 80 JJA given. Under normal regime, we can take both chapter 6A deductions. Yes, please take 80 lakh. What are the manufacturing expenditure? 30 lakh. What is that depreciation? 7 lakh. What is the additional depreciation? 2 lakh. PCBP, entirely you can call it as a gross total income also, because there is no other head of income. So that's why ultimately PCBP only GTI. What are the chapter 6A reduction we can take? This 5 lakh and 4 lakh you can take here. Yes, what is the total income? 32 lakh. Anna, right? How much? 32 lakh. Now, what is the tax rate? Company turnover never exceeded 400 crores in lifetime. 400 crores does not exceed means how much we have to take? 25. Directly you can apply 25%. 32 lakh into 25% plus 4%. Surcharge we can apply only if that exceeds 1 crore. Total income if exceeds 1 crore, then only I can apply surcharge. Here, what is that answer? You will get 8,32,000. What is the difference between the both the regimes? Simple. I will tell you. Additional depreciation you can't take it as deduction. Additional depreciation is not available in the 115 BAC, BAA, BAB, BAD, BAE. One more difference is there. 80 IA is not available, but 80 JJA is available in both. 80 IA is available in old regime, not in 115 BAA. Now, what is the difference you will get? Please take here nil. Here also you can take nil. That means after 6A deductions also not available. Please take ma. They are doing the problem in a reverse way. That means here 32 lakh we got normal provisions. How much we got? 32 lakh. They are doing the reverse adjustments. Finally, how much we can get? 39 lakh. Otherwise, I can show you 80 lakh. From this, what are the deductions we can get? Manufacturing expenditure 30 lakh. Next one, normal depreciation 7 lakh. Additional depreciation, I can't take it as deduction. Yes, 80 IA I can't get. 80 JJA I can get. How much? 4 lakh. Please tell me how much you will get. 39? How much you got here also in a other way? 39 lakh. Now what are the things you can't take it as a deduction? Additional depreciation. Next, 80 IA you can't take in this. Dana? So now 39 lakh related, what is the rate we have to apply? 25.168. Tell me. 9,81,540. 552 you get, and you can round it off to 81,550. Now which regime is best for the company? New regime. Sir, here 8,32, old regime only. 8,32, here 9,50. Regular provisions are best or 115 BAA is best? Regular provisions only best. Are difficult or easy? Difficult or easy depending upon our chapter 6 knowledge simply. And we need to know one more point. Additional depreciation is available only in normal regimes or old regimes, not available in 115 BA sections. 115 BAA, BAB, BAD, BAE, etc. Done? Next. The remaining, I think, we haven't two questions. One question only regarding companies. If done, every question I given in this material as of now. One question is pending, that is nothing but companies related only. Sir, how you can identify easily, sir? Clearly they mention, how they mention, please check it out. Private limited Kanpur, new manufacturing company. They given details. They are asking regular is best, 115 BAB is best. BAB tax rate 17.160. Company never crossed 200 crores. What is the tax rate we have to take under normal provisions? 25%. Shall we read and shall we do it? Okay. Is there any rebate available more than 12 lakh? Already we discussed yesterday in new regime. My new regime 115 BAC for resident individual, even total income more than 12 lakh also we can get rebate under marginal relief concept by using 3 steps. How to calculate the rebate we discussed. Step 1 is nothing but total income more than 12 lakh how much. Second step, calculate income tax liability on total income. Yes, if your SSC capability is less than the government expectation, we can get rebate. Tomorrow I will take DTA chapter. DTA. If anyone wants to take printout, please just only 1 to 2 days. You can take the print of tax planning chapter from the soft copy, not face to face, online. Okay, it will never happen again in my life. I will always be careful. Okay, just I underestimated myself in the last attempt. That's why these issues came. No, yes. Underestimated. I can't expect this many sales. That's why I given less quantity of books only and less staff only. Before results, I have 4 non-teaching staff. Now 25 non-teaching staff I have. Nearly. All are new staff, na? Then they are not doing anything. That is also issue. Okay. They don't know subjects also. Reason. For CMA final students, they are sending CMA enter subject books. For CMA enter students, they are sending final subject books. IDT is there, na? They are swapping. Law is there, na? They are swapping. DT is, I don't have DT enter book. That's why I'm safe. Now, please read for 2 minutes. Then we can close this question also. In every attempt, mostly question number 3A, individual tax liability computation between 2 regimes. 3B, company related, the 2 domestic company related tax computation between regimes. Now, if you have any doubt, we can discuss after this question. Sir, if you have any adjustment related things after PCBP, you will get more knowledge about these questions also. But as of now, I think all you are getting clarity only. If not, we can discuss. Shall we? Manufacturing company only can take BAB. Ra. So that's why clearly they are saying BAB. Yes. Comments had also done. Net profit they given how much ma? 30 lakh 90,000. Now, after debiting and crediting of the following items, ma depreciation as per Companies Act, what we have to do? Ra? Ma net profit as per P&L account 30 lakh 90,000 after considering this 4 lakh 50. Now, as per Companies Act depreciation, what we have to do? Ra? Add. Because in P&L account, we have an 30 lakh 90,000, but after taking the depreciation 4 lakh 50, this depreciation is wrong. Because of this depreciation, net profit reduced. Please add back. Correct depreciation where they given ma, please check and tell me. These two, normal depreciation, additional depreciation. Now we are solving question as per regular provisions. That's why we can reduce these two things as an deduction. Dana. Next. Here you have to understood some points in an depth where I will tell you this, listen carefully. Okay. Ma, company, listen all of you, company, yes, employer contribution as well as employee contribution to employee provident fund 11 lakh each. For March month related, they are deposited in which month? May. Okay. For company, out of these two contribution, for company, which one is an expenditure? Employer contribution is an expenditure for them because they are paying from their own pocket. Okay. That should be deposited. That should be deposited with the EPF authorities on or before return of income due date as per 43B. Deduction allowed on actual payment basis. Please check it out. They are paid on or before the due date. Yes. Due date is 31st October. Why 31st October, akka? Company having the due date 31st October only. They paid or not paid? Paid. That is allowed or not allowed? Allowed. Already in P&L debit side, that is already considered. So that's why we can't do anything. Already they are taken P&L debit side how much ma? 11 lakh. That have to be debit, already debited, do nothing for that. Understood? Again I will repeat. Employer contribution is expenditures for the company. That will be allowed as deduction on 43B basis, actual payment basis. If you paid actually to that EPF authorities on or before return of income due date, you will get deduction. Already we taken deduction, it is allowed. So that's why no need to do anything. Next thing, this is an expenditure. This is an expenditure. How it is income? For company, employer contribution is expenses. Employees contribution, just we are deducting from their salary, we are transferring to EPF account. Okay, suppose 40 members are there, employees. Okay, average salary 50,000 for you per month, not per annum. 50,000. Now, I am saying that, sir, please participate in recognized provident fund. Every month I will deduct 3,000 from your salary. I will also add how much? 3,000. For myself, whatever I am contributing, that 3,000 is expenditure for me, right? I am taken deduction because I paid within the due date of return of income as per section 43B. In PCBP, I will tell you deduction allowed on what basis, ma? Actual payment basis. Okay. Actual payment should be done return of income due date basis. Yes, done. That's why I taken deduction. But I'm deducting how much amount from your salary, ra? 3,000. 40 into 3,000, how much per month, ra? 1,20,000 per month. Per annum, nearly 14 lakh change. There is a risk, ra? I will deduct, but I will not deposit. What you will do? You can't do anything. Definitely this type of issues required to be controlled by the department. TCS, Wipro, many industries having the employees, like crores of employees will be there for that MNCs. We have to control this issue. They can deduct from your salary, but they will deposit in a late manner because they can use that deducted amount for their working capital purposes also. We have to control it. That's why one condition they imposed, whatever employee's contribution is there, we can add it to the income of employer directly. Now whose pain will be come for employer? Why? Crores of income is increasing. Why? Because of addition directly. Every time this 11 lakh now we have to add it to the income. If you paid on or before next month 15th, you will get it as deduction. For employee contribution, what is the date they are given, ma? 36/1 deduction, ma? Yes, they are given the date is nothing but what, ma? Next month 15. We don't want to take the much dates. What is it? 31/15. Yes, you can give it to them, sir. Huh? You can give, sir. Tomorrow they will dispatch remaining also. How much strength is there here? Wait. How much strength is there, sir, here? Huh? Wait, sir. On preference basis, you can give it to 26 students, sir, now. Okay. Today they will dispatch remaining also, because from yes, listen. In break we can discuss everything. Listen first. Manchi floor పోయింది. Listen. Employer contribution. Employer can take it as deduction if that is deposited on actual payment basis before what return of income due date. That issue closed. We can take it as deduction. Already deduction taken. Employee's contribution first added to income. Then if you deposited on or before next month 15, March month related, next month 15 means what? April. But you deposited on May 31st. May 31st. Whether you deposited within the date or not, no. So that's why we can't give any deduction. Still that will be added to your income. So that's why we can add. Shall we start this point again? In PCBP, I don't want to explain you again, this will be there. Okay, first. Think from the employer point of view, which one isn't directly for him expenditure? Employer contribution. Employer contribution allowed as deduction if that is deposited on or before return of income due date. Deposited or not? Yes. So that's why we can take it as deduction. Already debited, that means we taken deduction, do nothing. Employee contribution. Which contribution? Employee. This is for controlling purposes. We have to add it to the income of employer. Controlling means nothing but what? If income increases, automatically they will deposit within the due date. So that's why they will going to add first. Then if you deposited on or before next month 15. Can you tell me next month 15 means April 15. Did you deposit it? No. So that's why we can't give it as deduction. Many students are dates reversely they are going to apply. Employer contribution, return of income due date, employee contribution next month 15th. As per relevant acts due dates, mostly next month 15 is the relevant act due date. PF or any other act relevant due dates also next month 15. Now, dividend received is there. Yes, sir. Dividend received is there and dividend paid also there. I will change the color from, yes, sir, blue to red. Dividend received is there. Dividend paid is there. Which deduction I can get? Dividend received will be taxed under IFOS, but dividend received is there, dividend paid is there. For domestic company, we can claim ATM. ATM will be available in both the regimes. Both the regimes, ATM bill is available. Now, here they are given the one more point for earning the above dividend income, we are incurring certain expenditure. We'll discuss about the treatment of that expenditure also. Shall we do as per normal provisions first? Normal provisions first we'll do. Then after 115 BAB we'll do. First head of income is what? PZBP. First, P&L account net profit. What we have to add back? Depreciation. What we have to reduce? Depreciation. That too additional depreciation also. Next, employer contribution already debited. Already debited. After debiting and crediting means already this 11 lakh each debited. Correct only. But this what we have to do? Add. What we have to add? Employees contribution we have to add for what purposes? Controlling purposes. Sir, can I take it as deduction? Yes, you can take it as deduction. When? If you are deposited on or before next month 15, but you are not deposited. That's why not allowed under section 36(1). Next, what is that? Remember, dividend related expenditures already debited to P&L. That is correct, dividend related expenditure will be allowed as a deduction maybe under IFOS, not in PCBP. Because of this debit, net profit decreased or increased? Decreased. These items debited, credited already. So that means please add back this expenditure. Dividend also credited to the P&L account. Dividend required to tax under IFOS separately, but because of the credit it is increased, now decrease. How much the dividend? 17 lakh. Understood? This point is very important. After debiting and crediting, these all items are debited and credited also. Now you have to consider IFOS head related two things directly. 17 lakh dividend. Here important. Sir, what expenditure we incurred for earning the dividend? 3,60,000. How much? 3,60,000. Can I take 3,60,000 directly as a deduction? No. There is a provision in IFOS. We can take actual expenditure. How much? 3,60,000 or 20% of dividend amount. 17 lakh, right? Whichever is lower. How much? Whichever is lower. We incurred 3,60,000, but I don't want to give the deduction. On this income, how much amount we can allow 20%. That means simply we are restricting the expenses with the 20% of dividend. In income from other sources again we'll discuss, and in DTA also this point again we'll discuss. If any dividend you are receiving, dividend related expenditures can be allowed as deduction, but that allowed amount is restricted with the 20% of dividend amount. How much? Whichever is lower, 3,40,000. How much IFOS? How much IFOS? 13,60,000. How much PCBP? 26,60,000. Again I am saying that already dividend credited to P&L, reduce it. Dividend related amount debited to P&L, add back. Separately we have to consider these two under what? IFOS. Is there any other head of income is there in this question other than PCBP and other sources? No. After 6 year reduction, yes, we can take 80 MRA. Dividend paid how much? 20 lakh. Dividend received how much? 17 lakh. Whichever is lower, how much? 17 lakh. Yes. Now what is that income? 23 lakh 20,000. Please compute tax liability. What is the rate we have to apply in normal provisions? 25%. There is no surcharge also. Why? Total income does not exceed 1 crore. Madana. Okay. Sorry. Employee or employer? Employee contribution. Partially you will get deduction. First, employee contribution. Okay, example, from all of you, from all your salaries, I deducted 12 lakhs. How much I required to deposit? 12 lakh. First 12 lakh should be added to the income for controlling purpose. I deposited only 3 lakhs. How much deduction I will get? 3 lakhs only. Understood? Now, what is it? 115 BAB? Ma, PCBP, entire answers will be okay except additional depreciation. Additional depreciation is not available in 115. BAC, BAA, BAB, BAD, BAE. Anni. Dana. Now, what is that answer? You will get 28,10,000. IFOS answer will be the same. Finally, how much you will get? 41,70,000. How much? 41,70,000. So then ATM is available in both the regimes. This fact you should know before starting of this chapter itself. Already we discussed. What are the deductions are available in both the regimes? 80CCD2, 80CCH2, 80JJAA, 80M, 80LA. That is only ATM be taken. What is that amount? 24,70,000. 15% tax rate, 10% surcharge, 4% health and education cess, or directly you can apply the 17.160. How much you will get? After rounding off 4,23,850, which is beneficial? 115 BAB is beneficial. Am I done all of you? And now I will allocate nearly 5 minutes time. In this type of questions, if you have any doubt, you can ask me directly. Any small doubt also, because 14 marks worth. If anyone is stuck with this, just ignore. We can discuss again in PCBP. But I want to know the summary of this adjustment. Employer contribution related, we have to check the due dates as per return of income under section 43B. Employees contribution we have to check next month 15th. You can see ICI study materials also. You can see our study material also. This clarity will not be available. Sir, can you tell me the reference point in PCBP? I will check it out now itself, sir. Yes, I will tell you, ma. 1 minute. I will show you. You will get in more and more points now. Okay. Please check. PCBP handwritten content. Yes. Employer contribution expenditure. Directly it is allowed as deduction. But subject to which section, ma? 43B. That means which due date we have to check? 139 1 due date we have to check. Employee contribution. It is not an expenditure. But for controlling purpose, whatever employer deducted from the employee salary, that will be added to the income. So now we can deposit it within the due dates, that will be allowed as deduction. But for employee contribution, what is the due date we have to check? Next month 50. This summary is not available in any books. You can check any other book also. In PCBP, we can discuss comprehensive questions. On that time, our time can be saved like anything. But if you reversely applied, no one can help you. Remember, employer contribution. Okay, again I will give you one more link. Again I will give you one more link. Which one is covered under 43B? Employer contribution, right? Now I will open 43B section. Now I will open which section? 43B. Yes, this is only 43B. What are the payments covered under 43B if you verified? Employer contribution is covered. These payments, if you want to take deduction, you have to deposit within that what, ma? Return of income due date. Understood? Now. One set of questions are done. One set of questions are done. Now we can back to the tax planning handwritten content and we can discuss remaining. All of you are already filled Google form or you purchased from their website. Sir, one book you can give it to her, sir, instead of others. Please take it. Okay. So that's why I asked swapping. Now we can discuss few theory questions. After that we can go for problems. Please take it out. The next question, what is it? Tax planning cell. What is it? Tax planning cell. Just 1 minute. I didn't see this book till now. Yes. అయిపోయిందా? Shall we start? Huh? Sorry? That is only I am saying. Mostly they are giving this. If they want to ask any other questions also, they can ask the trends. That is only. Yes, sir. And one student asked, sir, 3A, 3B, individual as well as company assessment questions only, sir. That means we can ignore any other question. Huh? If you are ignore any other question, 3A, 3B, ignored questions only will come. Okay. Asked 2 attempts, they are given the individual tax computation, company tax computation. But before that 2 attempts, like 3 and 4th attempts back, they are given the first question. Activities they will give you, whether tax planning, tax management, tax avoidance, tax evasion questions, and further whatever we are going to discuss, that questions also in past examination many times they asked. Okay, don't ignore any question from this chapter, because I am covering everything, then why you are required to ignore? Okay, please check the tax planning cell. After half an hour to 1 hour I will give break. No, I don't want to give break now. Now listen. In new regime, there is no surcharge limit for special tax rate for domestic companies. Surcharge already included in 115 BAA, BAB, like what are fixed 10%. In 115 BAA, 115 BAB, surcharge rate directly 10%. Now, they will ask this type of theory question also in future. Tax planning cell. Cell means, remember, department. In every organization, we need to incorporate one separate department in the name of tax planning. In any MNC also, definitely the many persons will associate with each other and they will work as a tax planning cell. Remember, in exam they can ask a question, why companies required to constitute separate department in the name of tax planning? They can ask. Now, various organization having the separate tax planning department, if we have a separate tax planning department, they will work only with respect to tax planning. They can give the many ideas regarding the least tax impact. Suppose if you have a separate department, always they will work for the tax planning and they can give the our transactions or activities are going to get the least tax impact. Now how you can justify the tax planning cell is required for our organization? As a tax manager or as a tax planner, how you can convince the management to incorporate the tax planning cell in our organization? Sir, do you have any doubt why software companies are recruiting CS and CMS? If you observed, many CS, CMS are joined in the software companies also. Will they do software work or they will work in a tax planning department? Every time employees related TDS we have to deduct, employees related the remaining things also we have to plan. For that purpose we can recruit. So definitely this question if they ask, they will ask in a practical way. So and so company not interested to incorporate the tax planning cell in their organization. How you can convince the management in order to constitute the tax planning cell? These are the reasons. If you are saying these reasons, definitely they will accept your proposal to constitute the tax planning cell. What are the reasons, sir? Complexity and volume of work. Definitely, imagine one MNC, employees related, TDS we have to deduct, TDS deducted amount we have to deposit with the government, TDS returns we have to file, and employees will send their tax savings related documents, you have to update to the department also. For every employee, we have to give the Form 16s also year end. PF amount we have to deduct, PF amount we have to deposit with the government. Our contributions also we have to deposit. This is an easy work. No. So that's why volume of work is very high, complexity of work is very high. Separate department is definitely we need to constitute. Second one. Separate documentation is also required. Example, income tax department is asking for the TDS returns for the last 1 year. There is no tax planner as well as tax planning department also in your organization. How you will submit? If we have a separate tax planning cell, means what department, definitely they will maintain separate documentation. Even department asking for the any document also we can submit directly to them. Third one, data collection. So can you imagine how many documents will they forward to the HR for submitting the deductions purposes? So if you have an insurance policy, you will submit to the company will send it to the department. So data collection also very important. And I will say another way of explanation for data collection. Provisions, circulars, rules, latest updates, latest circulars, government rules and regulations, if they collected properly, then only they can do tax planning. Next one, integration. Very important. Normally, in other subjects, financial management is an heart of the every area. Manufacturing is linked with the finance management. Finance management linked with the purchase, sales, human resource. Everything is linked with the finance. But forget about it. Everything should be linked with the tax planning cell. Why? At the time of purchase, I will tell you which decision is best. Which supplier will give the least price. Whether we have to import or whether we have to purchase domestically also, I will tell you regarding purchase. Sales also I will tell you, domestic sales are better or export sales are better in tax point of view. At the time of purchasing one machinery, whether leasing is best or buying is best also I will tell you. These are all the decisions are always integrated. Integration means nothing but what? All departments of an organization must be linked with the tax planning cell. Next one, constant monitoring. So that's why we know already planning is flexible or fixed. Flexible. Every change happened in outside market, we have to monitor and we have to change our plans. Next one, developing tax effective alternatives. So tax effective alternatives means nothing but what? Whether we have two options. Out of these two options, which one is best? Who can say? If tax planning cell is there, they can compute and they can give the decision. Otherwise, you will do wrong decisions only. One example I given, lease or as well as what? Buy decision. Next, we can take the advantage over allowances as well as deduction. If I am an employee, they are given two options. Allowance, perquisite. Which I need to choose? If I having the tax planning cells, then only they can offer the best alternatives to their employees also. Don't by heart, just try to remember. If they are given, you can use your own words and complete it. But you have to know first, tax planning cell means tax planning department. In organization, tax manager will be there and along with some staff also will be there. This is only called as tax planning cell. Understood, Anna? Next. Areas of tax planning. Now we can deviate like anything, right? In which areas we can do tax planning? Okay. First, you approached me, you want to start business, you don't have any idea about how to start business. I can give tax planning in this area also. You want to become only one owner, then I will suggest to start sole proprietorship. No, sir, partners are required. Go for partnership. Sir, I want to expand like anything. Go for company. Sir, I want to start company, but I only want to become as a director as well as shareholder. Go one PC, OPC, one person company. And sir, I want to pay the less amount of taxes. I want to use the rebate concepts. Yes, you can go for sole proprietor. That means in the form of organization, yes, as well as ownership pattern, can I do tax planning? Yes. Dana. First, that means at the time of beginning or at the time of incorporation, can I do tax planning? Yes, very well. If you want to start any business at the initial stages also, we can do tax planning. Second one, okay, you decided to start the private company, but you don't have any locational preferences. If you approached me, I will say, please go and start the business in SEZ. Why? First 5 years, 100% of the profits will be allowed as deduction. 5 to 10 years, 50% of export profits. Next, 50% of export profit are investment allowance reserve, whichever is lower. I will tell you later. But remember, in locational areas also I can do tax planning. First, incorporation tax planning. Next, locational aspects also I can give tax planning. Third, you don't know which business you want to start also. Now what I can do? I will suggest to do specified businesses. Why? 100% of capital expenditure you can take it as deduction. That means in nature of businesses also I can do tax planning. In every area you can do tax planning if you have a proper mindset and proper knowledge, simply. So tax planners are only receiving that more and more packages in many companies. In every area you can do tax planning if you have a proper grip over the tax laws. Now, nature of business, okay. On these three things we don't have any questions. That is in theory only. Now, corporate restructuring. That means, restructuring means what? Changing the structure, right? What are that corporate restructuring? Amalgamation, demerger, sole proprietary to company, partnership form to company, private company, unlisted public company to LLP. In these areas also we can do tax planning, but we have a separate chapter regarding this. That is only which chapter? Business restructuring and reconstruction chapter. Okay, example. Now we are running a sole proprietorship form. I want to change my legal business structure to company. Can I do? Yes. Which tax plannings I can perform, I will tell you later. That means if you want to close your business also, we can do tax planning. One MCQ they will ask, they will give you these 4 options, A, B, C, D. They can ask, at the starting of the businesses, we can do tax planning. Which things we can do at the time of starting? A, B, C. At the time of closing of an organization, we can do one tax planning. What is that option? D. At the time of incorporation, these 3 types of tax plannings we can do. What are the 3? A, B, C. Yes, first one, form of organization. Second one, ownership, nature, locational. These 3 things you can do at the time of incorporation. You can't do this tax planning at the time of incorporation. When you can do this tax planning? At the time of closing of an organization, you can do this tax planning. MCQ important. Dana? Navra? Here. I will share one experience with you, then after I will start. Okay? I think in December 2024 MTP. Okay? December 2024 MTP. SFM, if you observe, you have one concept of leasing decisions. You have a leasing decision questions. Okay. In our December 24 MTP direct taxation, they given one question, that is, leasing is better or buying is better? One question they given. On that time, one student sent this question screenshot to the I will show you what is that question also. This is only question. Okay, lease or by decision question. This question exactly given in the MTP, MQPR. So students send the screenshot to the one faculty. He asked about, sir, in which chapter this is covered, sir? Like that only he asked. The faculty given reply, wrongly copied SFM question to DT. Okay, next. Did you see these questions in your intermediate level? I will show you two questions. Please check it out. Share capital, debentures, expected rate of return, dividend, declaration, EBIT, EBT, FM gada. This question also the same. Financial management. Many faculties are saying financial management question. No. Tax planning. So, without knowing these things, many are practicing many questions. Like weighted average cost of capital, cost of equity, cost of debt. All the things are not required. I will tell you why we haven't that questions. Sir, in an organization, financial management related tax planning will be there. I want to expand my business with a 50 lakhs. Three options are available. One is equity, another one debt, another one equity plus debt combination. Which one I have to choose? That is also tax planning only. So now this FM questions, whatever you saw in the question number 13 and question number 14, not financial management related questions in intermediate level. These are the questions from tax planning chapter. Tax planning in the area of financial management. Now, whatever the question as of now we discussed, we saw leasing, buying. These are the tax planning in the area of what? Managerial decision. Management need to take one decision. Leasing is better, buying is better, making is better, buying is better. These are all the things we'll cover in G point, tax planning in the area of managerial decisions. Understood why these are all the concepts are covered? Because of areas of tax planning only, these many model questions are covered here. One more. Yes, sir, they given two options. Company given two options to me. HRA, house rent allowance. Which one I need to take? Employee remunerations areas also we can do tax planning. They given one option perquisites. They given another option allowances. Which option is best? We have to suggest. That is only employee remunerations related tax plan. Non-resident related tax planning we'll discuss separately in NR chapter. Now understood what are the areas are covered in this. So now while discussing the lease or buy decision, because of this point only, in this area how we can do tax planning, managerial decision, employee remuneration related, that's why we have to discuss salaries related provisions. Next, financial management. Yes, in the area of financial management, how the tax planner can do the decisions. Understood? So we'll discuss next two questions. These are only financial management related, employee remuneration related, managerial decision related questions we'll discuss. We can close this chapter. Okay. Next, one theory question and MCQs always you will get. This is only the last theory question in this chapter. After that, what we have to do? We can discuss the questions related to areas of tax planning. What are the areas of tax planning questions are pending? Yes, here we have to discuss the questions. Here we have to discuss the questions. Here also we have to discuss the questions. FM related, employee remuneration related. Next one, specific managerial decision related questions we can discuss. Then every chapter will be over. Before that, I have to tell you this theory. After this theory, I will give a break. Tax haven. What is a tax haven? Haven means nothing but what, ma? Okay. Simply, there is no pressure from your, so financial point of view, tax point of view, we don't want to create any pressure. So nothing but simply any country or territory. Okay. Suppose India is there. Okay. India want to attract the investments from the outside India. India wants to attract the investments from the outside India. If I'm inviting, will they come easily? No. Now India will do one point. What India will do? They will modify their tax law. They will modify tax laws, and they will create like SEZ. They will create like a IFSA. So generally tax rates are high, sir. But if you invested in these locations, your tax rate is low, and tax exemptions also will provide. By way of modifying the tax laws, if you want to attract the investments, that areas or the territories are known as what? Tax havens. Now, these areas I can call it as what? Tax havens. Not only India, many other countries also can modify their existing tax laws. They can offer to the investors. Yes, that area is known as what? Tax haven. Now you can see this. Modify its tax laws to attract the foreign investments. That area is called as, that country or the territory is called as what? Tax haven. Tax haven may be state, territory or country where tax can be levied at low rate or not at all levied. MCQ point. So tax may not be levied or levied also at a low rate. Clear now? But one point, if you want to attract investments, you can offer both the incentives. One is a tax incentive, another one non-tax incentive. Tax incentive means nothing but what? We don't want to levy any tax, or levied also concessional rate only we can levy. Non-tax incentive means nothing but given the building, given the land, given the free power, etc. So for getting the investments, I can do anything, but taxation point of view, if you done, that is a tax haven, that area is called as tax haven. Non-tax incentives also we can provide. Yes, many companies will come to Chennai or Hyderabad also. The reason our governments are offering the what? Free lands, etc. Yes. Next. Just you have to remember this point. Sir, one area is there. How you can identify that area as a tax haven? Just verify these 4 points. By using these 4 points, you can say, is that area is a tax haven or not? Is that area is nothing but tax haven or not? Easily you can decide. Shall we? First, if any country or territory or any jurisdiction is not at all levying the taxes or levying tax at a nominal rates, that area we can say easily as at what? Tax haven. Second one, there is lack of transparency. I will tell you simple example. Why our Indian politicians will maintain the Swiss bank accounts? Because Swiss bank will not declare the details about the depositors. There is transparency, there is lack of transparency, lack of transparency. Example, if I invested in country X, that country X will not reveal my name in India. If there is no transparency or lack of transparency, that area is tax haven only. Next, there is no effective exchange information. Example, our Indian government, that country X government will not talk with each other, will not exchange information also. That area we can say it as a tax haven. Example, some Mauritius countries or some other countries will be there. They will not give any information about our investment to Indian tax authorities. So that's why that is called as what? Tax haven. The last one, no requirement of substantive local presence of entity. That means no need to establish any fixed entity in that area. Yes, directly you can go and you can start any business. There is no regulations and restrictions to the business in that country also. By using these 4 points, you can say whether that area is an tax haven or not. What are that 4? Imposes no taxes, low taxes, Next, lack of effective information exchange, lack of transparency, no requirement to start any substantive local presence. Without you establishing any physical structure in that area also, you can go and you can do business, and whenever you want, you can exit from that country also. The type of things is called as what ma? Tax haven. But what is that most important MCQ? Tax haven means low tax, no tax. Low tax, no tax. Dana? Yes. So please take the break for 20 minutes. Then we can start the remaining things, questions and all other things we can conclude. Shall we? Last session for today. Yes, ma'am. Now we can start these some questions related to areas of tax planning. Shall we do? Yes, these questions are very easy, but if you listen the class, then be easier. Otherwise, we have to learn everything on one. Okay. Shall we start? Question number 13, 14. Please open workbook. Question number 13 and question number 14 related to tax planning in the area of what? Financial management. Tax planning in the area of financial management. Shall we? I will tell you these two questions also. There is a small adjustment difference related to dividend in these two questions. First I will take the question number 13, then after I will take the question number 14. Now, business entity requires 50 lakh for their expansion. They have three options. Option 1, option 2, option 3. What is that option 1, ma? How we are acquiring the 50 lakh funds? By using debentures, by using equity shares. There is no loan. Option 2 covering three alternatives: equity shares, debentures, as well as loan. Yes, here two options only. What is that? Equity, debentures, there is no loan. Now, what is your investment? 50 lakh. Your expected rate of return, simply we can call it as an EBIT. Earnings before interest and tax. Your expected rate of return means nothing but what? EBIT. What is it? 15%. What is the tax rate including cess? 31.2. Now they are asking which option is better. Which option is better? Okay, we can solve as per one particular format. First, if you applied this 15% on 50 lakh, you will get what, ma? EBIT. Okay, what is that? EBIT. From this, we have to remove the what, ma? Interest. Then after tax, you will get what? PAT. Profit after tax. Then, based on that, we can take a decision. Now we can solve. Yes, total fund, extra decoration only now we are doing. How much? 50 lakh. Please apply 15% on this. EBIT is how much? 7,50,000. 7,50,000. Next, cost to the company. Sir, this is our expected earnings, not actual earnings. We are expected to earn this amount from that 50 lakh. But what are the cost to the company? First cost, I have to pay the debentures holder interest as well as loan related interest. They are outsiders. I have to pay that amount preferentially over the dividend to them. Shareholders will get dividend if amount available. But preferentially I have to clear the what, ma? Interest. Can I remove the interest cost? Yes, debentures related interest. Interest on bank loan. If I am removing both the things, then what I will get? Net profit before tax and dividend. Ma, remember. Yes, simply you have to apply 12% on these things, you will get interest here. If you applied 18% on this, you will get interest. From EBIT, remove interest, then you will get what, ma? EBT simply. This is only we can call it as earning before tax. Please remove the tax. They given clearly. This tax rate we have to apply on what? 31.2%. Please calculate and confirm me whether the computation is correct or incorrect. Correct? Dana? Now, EBT, from this we are removing the tax, then you will get what? Profit after tax. Remember, I paid everything to the outsiders. I paid to the department also tax. Now this PAT is completely available for whom? Shareholders. This profit after tax completely now available to shareholders. Now, Anna, Akka, please check it out. This amount, in which option we have more? Option 1, we have more PAT. Can I give the preference to the option 1? The decision is worst. Why? This 4,33,440 rupees required to shared by how much equity? 40 lakh. Where they are getting the more return, we have to check, not PAT. Here 3,09,600 required to be shared by 30 lakh share capital only. Here 3,50,000 required to be shared by whom? 30 lakh. That means I have to calculate the return on capital. Shareholders invested this amount. What is the percentage of return they are getting? Yes, how? 4,33,440 divided by how much share capital? 40 lakh. Here 3,09,600 divided by how much? 30 lakh. 3,50,800 required to share by 30 lakh. Now can you tell me in which option we have an return on capital percentage is more? Option 3. That's why that option is better. That amount is more in option 1. Can I go with that option? That is worst. Why? That 4,33,000 required to be shared by 40 lakh worth of share capital. Understood? Now you will get more clarity while doing the second question. Sir, here there is no dividend information. How much dividend required to be paid to the equity shareholder, that information they are not given. That's why I have to solve the problem up to PAT, and return on capital I have to calculate. If dividend information is given, then from PAT what we have to remove? Dividend also. Then after paying the dividend to the shareholders, remaining amount is surplus to company only. In this question they are given any dividend information? No. So that's why we can stop the question up to PAT. And PAT based decision is worst. Please try to compute the return on capital. What is the formula? PAT divided by share capital. In which option we are getting the maximum benefit? Option 3. Now in the next question, please check the given dividend information also. Many students are asking, sir, why you are computing till PAT only here? In the next question you solved related to dividend. The given dividend adjustment in the next question. That's why we can solve only dividend related adjustments in next question only. Shall we start, ma? Now, please lead the question. Virat Limited. Ma, the given Virat Limited means what? Company. So don't expect the tax rate. Even though they are not given also, you can apply 30 plus 4%. Generally 30% rate plus 4% surcharge. Sorry, health and education says. So major expansion, how many alternatives are there, ma? How many alternatives? 3 or 4 or 5 or 3? 3 alternatives. They want to pull the how much amount? 50 lakh. They want to pull how much amount from these options? 50 lakh. Expected rate of return. Akka, expected rate of return means what, ma? EBIT. Rate of dividend, please listen. Rate of dividend of the company since 1995 not less than 22% means nothing but they are given the dividend percentage also. How much? 22. Now which option is best we have to select? The same way, first extra decoration like what? How we are acquired the funds. On this, if you applied the percentage of expected rate of return, how much, ma? 30%, you will get EBIT. Please remove the interest, then you will get what, ma? If you remove the interest, you will get what, ma? EBT. Sir, interest, how we can calculate? 14% on this, 18% on this if you applied, you will get interest cost. After removing interest, what I will get, ma? EBT I will get. Now, tax I can remove. What is the tax percentage I have to apply? 31.2%. Sir, in this question they are not given, but company related general rate is what? 30% plus health and education says what is it? 31.2%. If they are not given also, you have to calculate. Clear? Now, please remove the tax, you will get PAT. Sir, based on PAT, can I make decision now? No. Why? Dividend information they are given. Please remove the dividend also. Dividend rate they given in the question, how much? 22%. Array, dividend rate required to be applied on what, ma? Share capital value. Many students are applying on PAT. I don't know how they are making investments in future also, I don't know. Dividend always required to be calculated on the value of share capital by using the rate given. Clear? In foundation itself, you know that point. In flow also, you can't apply on PAT. Okay. Please remove the dividend, then you will get the profit after cost of capital. Means cost of capital means interest we paid, tax also we paid, dividend also we paid. That means the after every cost incurred, this amount is surplus to the company, right? Company, not shareholders also. We satisfy shareholders' requirements also. This is an amount available for company, in which option we have in more 3. So that's why which alternative is better? 3. So what is the difference between these two questions? Dividend information given, so that's why we can remove the dividend also. Then whatever that company can get after incurring all cost of capital related to debentures, cost of capital related to loan, tax requirement, payment of dividend, after that company having the surplus, that is more surplus in option 3, that is better. In previous question, why we are stuck with the PAT only? There is no dividend information. That's why we can make decision how much percentage of return to the shareholders. Done? Is there any doubt up to now, ma? Is there any doubt up to now? These two questions okay na? Attempt by attempt you will get these questions. These questions also students are doing mistake because overconfidence. Even if I am solved, you don't know before, how can I explain the FM questions? How can I explain FM question? But I learned everything. I will practice, and you don't know, in version 2, version 1, all are mistakes only. I will rectify and I will do everything. I will check. In break time also, I will check the soft copies of material. Next problem, what I need to tell. That is lie only, I don't want to check. I don't want to check. Even after completion of material, I will not at all open anything. Before finalization, every day I will do that work. Clear? Now, next. Shall we go for the next point, sir? Sir, I want to give homework, because I am not an SFM faculty. You can expect tax planning in the area of specific managerial decisions. Okay, that questions we have in our workbook. Question number, you can see and identify. Question number. Sorry. 24. Next one. Wait. Give me 1 minute. 24. 25. One more question, I think. 26. These 3 questions are related to tax planning in the area of managerial decisions. So please have some patience. And in your home, you have to solve this question. Simple, ma. Present value of annuity factors we have to use. PVIF factors we have to use. We have to calculate cost of buy, cost of lease. Whichever is lower, we can go. Here we have one more question. Make or buy decision. Newly this question given on a workbook. whether we have to make the product, whether we have to buy the product. Okay, sir, if you know these things, okay. Otherwise, I solved everything on my handwritten, because in regular batch I given in and out. Yes, question number 26, 24, 25. These questions I solved in my own way. Just I copied. Own way means nothing but the formatting changed. You can see and you can solve. Remember, I think you know everything better than me related to this sums. So that's why I am giving it to you. One thing, before giving it as a homework, I will tell you. Interest. What is it? Interest. We can take it as deduction in our PCBP. Depreciation also we can take it as deduction in PCBP. These two, if you are taking deduction, means on this we can get tax savings. If you are not taking this deduction, we have to pay the more and more tax. If you are reducing this from the PCBP, means we are getting tax savings. That point you have to remember. What are the expenditures or tax saving expenditures? Interest. Second one, depreciation. Because of these two things, our income will reduce, tax can be saved. So that's why we can save tax regarding how many expenditures? Two. What are the two? Depreciation, interest. Now, and if you are ignoring these questions now, you know in June attempt which will happen also. What will happen also? 2A, 2B, 3A, 3B. Totally these questions will come. Don't ignore these questions. If you have any doubt, you can ask me tomorrow. I will explain you again. How you can ask yes tomorrow? If you solve today, you can ask yes tomorrow. Directly don't ask me. And I given everything in this computation also. And I given the note points also. Everything. Please check. Now, I will go with the next area. I will go with the next area. What is that next area, ma? Tax planning in the area of what, ma? Employee remuneration. Ma, I solved these questions. I given as an homework related to these questions. Now I will go with the employee remuneration. For this purpose, we need to refer salaries chapter. So that's why I am saving some time. That's why I given this as an homework. Shall we go for the next concept? Tax planning in the area of employees remuneration. Shall we start? Yes. So income from salaries. Now I will start. Yes, sir. Employer can offer rent-free accommodation or house rent allowance. Anything also they can offer. I will tell you what do you mean by the rent-free accommodation. Okay. What is it? Rent-free accommodation. Now we are coming to Chennai for taking class. They are only given the one hotel accommodation, or they are only arranging the one house for staying. That is called as rent-free accommodation. I am not paying any rent. That is rent-free accommodation for me. This is perquisite, facility or benefit you can call. Okay, if we don't have any relationship much now, then simply they will give some amount in the form of cash. I need to incur on my own for accommodation purpose. That is an house rent allowance. This is called as what, ma? Allowance. Can employer will give two? No, anyone they can give. Simple. If they have an capability to arrange the house, that is rent-free accommodation. They don't have any resources, they can give money. You have to arrange a house on your own with the help of that money. That is house rent allowance. This is allowance. This is perquisite. Most of the MNCs will offer this. If your employer is very crucial for you, then they will offer this. Clear? Now which one is perquisite, facility or benefit? RFA. HRA means allowance. Simple. Allowance means always they will give cash to us. Here they are providing facility to us. Clear? Now okay, they provided both the options. I have to select which one is best. How can I decide? I will calculate tax liability in this case. Here also I will calculate tax liability. Wherever I getting the least tax impact, I will select that one. Now, taxable value of rent-free accommodation I will discuss. Then after, taxable value of HRA also I will discuss, and we can do some problems. Shall we do? Now. Now they given one hotel accommodation example. Now I need to find out what is the taxable value of that facility. They given just one facility. I am using that facility, but I need to find out what is the taxable value of that benefit. If you are a government employee, you are enjoying the rent-free accommodation given by the government. Now what is the taxable value? Listen and tell me. What is the taxable value? License fees fixed by whom? Government. Government will give the license fees. You have to apply the license fees into number of months. You will get taxable value. Now other employee. This is very important in exam point of view. Now. So now we got an accommodation from Case Academy example. Please let me know. They're given the accommodation from own sources or hired sources? Hired sources. They provided accommodation from hired sources. Now, if they are providing accommodation in own sources, what is the taxable value? If they are providing accommodation from hired sources, what is the taxable value? We have to discuss. If that is an own accommodation, they have an own buildings. From that own buildings, they give an accommodation. Now, this taxable value depending upon the population of the city in which they providing the accommodation. Definitely in exam they will provide you population details also. If population less than or equal to 15 lakh, 15 to 40, more than 40, we have to calculate the taxable value. 5% of salary, 7.5% of salary, 10% of salary. Here taxable value directly license fees they will give. Here you have to calculate salary on that 7.5. Remember, it is taxable value, not tax. In our salaries, I have to include this value. On that, I have to calculate tax liability. Many are saying this is a tax amount you have to pay. No. This is a value of that facility. That is an income for you. On this, you have to pay tax. Now, sir, if that is an hired accommodation, we have to take taxable value is nothing but, yes sir, first rent paid by the employer, 10% of salary, whichever is higher or lower. I don't know, please check and tell me. Whichever is higher or lower. If to be honest, I don't know, please verify and tell me. Yes, sir. Okay, we can keep that. We can keep that. But here, what do you mean by this salary? Don't verify the concept book. In concept book, we don't have that. Okay, I will check while writing also. Please listen carefully. I will check and I will inform you. Okay. Sir, what do you mean by the salary? Here, salary means we have to compute everything separately. There is a salary definition. A, basic salary. B, dearness allowance forming part of retirement benefits. C, bonus. D, fees, commission, other taxable allowances. Next, monetary benefits. So these are all the things you have to include for knowing salary definition. On this salary, we have to apply these percentages. Please repeat along with me. What is the definition of salary? Basic salary, dearness allowance forming part of retirement benefits, bonus, fees, commission, taxable allowances, taxable monetary benefit. Here, if allowances are given, out of this allowance, some allowance is taxable, that taxable portion only we have to include. Some monetary benefits they are given, So out of that, some is exempt, some is taxable. Here we have to include what are taxable portions only. Clear up to know? Sir, here highest percentage 10 ra. They continued this 10% also in hotel accommodation. Sorry, not hired accommodation. Clear up? Wait a minute, I will check the ICI material. I will tell you. Lower, where you verified old book? Huh? Okay, I don't want to believe you. Sorry. Until I am getting the confirmation, I don't want to believe. Even though you are saying right also, but in night time I will get this doubt again. What is our point, ma? Hired accommodation. Okay. Yes. Where the accommodation is owned, lower. Now I will be very happy. Whichever is lower. Dana. Whichever is lower is beneficial for SSC. Whichever is higher is beneficial for department. That's why I have this doubt. If it is lower, then taxable value is lower. Tax also will be paid by the SSC is lower. So that's why I have a doubt. That's why I will get confirmation. No problem. Whichever is what? Lower. Understood? Now, remember again. Now, so this salary definition, if you forget now, you can't do the problem. Basic salary plus DA forming part of retirement benefits, bonus, commission, fees plus taxable allowances, taxable monetary benefits. Now, this is an unfurnished accommodation. Just they are given the house for staying purpose. Some cases they can give the furnished accommodation. Furnished means what? First, unfurnished value we know how to calculate. For this we can add the what? Furniture value. So this value already we computed. If it isn't provided from own sources, how to calculate? Hired sources, how to calculate? We computed. But here what we have to add? Furniture value. Simply own furniture 10% per annum of actual cost. If this is an hired furniture, whatever the rent paid by the employer, they provided AC own 10% per annum of actual cost. They are given the TV that is hired. How much higher charges they will pay, that you have to add. Then finally you will get the value of furnished accommodation. Now, some worst employers also will be there. Now, they are giving these facilities, but in return they will collect some amount. So here you got 20,000. What is the taxable value? 20, yes. But they are asking, please pay 3,000, sir. See, how much amount recovered by the employer from employee? 3,000. Now what is that net effect? 17,000. That's why 17,000 only taxable. Whatever that amount recovered by the employer from employee, that is reduced from the taxable value. What is the taxable value? 20,000. Now please reduce how much benefit we are getting from employer. 17 only, because I paid 3,000 to them. Remember, if any amount you paid that is not a benefit for you, please remove it. Finally, what is the net effect? 17,000. Done? Now, in exam, how they are asking questions also, I will show you nearly 3-4 questions. But first, remember these rates. Remember this salary definition. Remaining things will be easy. Now, sir, they given the HRA, sir. What is a taxable value? HRA. Yes, how much you receive? Within that HRA, the least of the following is exempt. Remember, HRA exemption is available if SSC opted which regime? Old regime. What is that amount is exempt? First, rent paid minus 10% of salary, 50% or 40% of salary, actual HRA received. Where we have to take 50%? Mumbai, Kolkata, Delhi, Chennai. Next, 40% is of the other cities. Sir, if in Hyderabad, sir, I am taking the HRA, what is the percentage I have to take? 40. Next, actual HRA received. I will ask few questions. Right? I am receiving HRA, but I am staying with my family or I am staying with my friends. On that I am not paying any rent. So that's why rent paid will be 0. Then it will be what? Negative figure. That's why HRA exemption is not available for you. When HRA exemption is not available, if you are staying with your family members, if you are staying with one house, you are not paying any rent, then rent paid will be 0. Yes, negative figure you will get. So that's why there is no exemption on such case. Yes. Now, here we have to use the salary. What is the salary definition? Simple. Don't use a salary definition only. Yes, for all the sections, same we can use no. We have to use different. So for HRA purposes only, basic salary, DA forming part of remuneration, mentioned commission as a percentage on turnover. Fixed commission if they are given, ignore. Commission if they are expressed as a percentage of turnover, then only you have to consider. They will give fixed commission in question. They will give commission as a percentage on turnover. Which one we have to include? Commission as a percentage of turnover. Done? Now, how they will ask questions? How they will ask question? I will tell you. Question number 21, MQP question. At any time you will get this in your exam. Shall we? 1/10/2025 saw offense Surat offered an employment by the Vimal, who is an employee, and who is an employer, Vimal. Yes, basic salary is how much? 55,500. Other allowances, dearness allowance, that too not forming part of retirement benefits, 50,000 per month. Medical allowance how much? 10,000 per month. Bonus given 1 month of the basic salary. Super. In package, how many payments are there? Basic salary, dearness allowance, next one medical allowance, next one bonus. Now, company given an option to this. What is that option? Either you can take the RFA, rent free accommodation. That rent free accommodation house value how much? 20,000. Or you can accept the same amount in the form of cash. This is what? HRA. But they give an option, but a hero selected directly HRA. Directly he selected HRA. Whether his decision is correct or not, you have to tell. Yes, remember, he taken the house also in Surat and he is paying how much rent to that house? 20,000. Whatever given by the employer, we are paying to the house. So now how we can do? Simply, If he opted the HRA, what is the tax liability? If he opted the RFA, what is the tax liability? Whichever is lower, we can select. Shall we do? No. First, remember, we'll discuss about the HRA first. Okay. Here main twist is there. Can you calculate basic salary per annum? How much, ma? Per month they given 55,000. Per annum how much? 55,000 into how many months we have to take? 6 months only. Because you joined in a job on October 1st. How much? 3,33,000. Ma, next dearness allowance 6 months. Medical allowance also, remember ma, medical allowance is fully taxable. Medical allowance is fully taxable. Now, bonus 1 month of basic salary. Now, what is that 1 month of basic salary, ma? 55,500. If you worked in a company throughout the year, you will get bonus 55,500. You joined in 6 months only. Sorry, you joined after 6 months. Now you will get bonus full or half. Here many students are taking the wrong amount. They are taking the how much? 55,500 because the bonus is 1 month basic salary. They are taken directly 55,500. If you worked in that company for that entire year, you will get 1 month basic salary as a bonus. You worked for 6 months. How much you will get? Half of that only you will get. Now, HRA you are accepting right now. What you are expecting HRA? Remember, if you are taking the HRA, how much ma? 20,000 into 6 months. Least of the following is exempt, right? HRA received. Next, which city is Surat? 40% of salary. Kolkata, Chennai, Mumbai, Delhi, only 50%, remaining 40%. Rent paid minus 10% of salary. Listen, HRA actually received how much? 1,20,000. 40% of salary. Now I have to calculate the salary definition. For HRA purpose, what is the salary definition, ma? Basic salary plus DA forming part of retirement benefits. But in this question, this is an not forming part of retirement benefits. Is there any commission given in the question? No. That means only we have one thing, basic salary. What is that salary definition, ma? 3,33,000. Ma, salary definition, basic salary plus dearness allowance forming part of retirement benefits plus commission as a percentage. Here, there is no these two things. That's why basic salary only the salary definition for RFA. Now, can you tell me how much we have to apply? 3,33,000. 3,33,000 into 40%. Please calculate. 1,33,200. Rent paid. Can you tell me how many months rent we are paying? 6 months. Means 1,20,000, right? 20,000 into 6 months. Minus 10% of salary. How much, ma? 3,33,000. How much you will get? 86,700, right? 86,700. Rent paid minus 10% of salary. Clear? Now please tell me whichever is lower. 86,700. It is exempt under section 10 subsection 13A. Finally, what is the taxable portion? 33,300. Now, ma, out of given HRA, what is it exempt? 86,700. What is the taxable? 33,300. Next, rent-free accommodation, you can't take it. Why? If you received HRA, you can't take the RFA. That's why value is still. What is that salary amount? 7,54,000. Clearly they given SSE following old regime. HRA exemption is also available if SSE is following old regime only. So that's why directly I calculated. Now, if he opted the, what ma? If he opted RFA, everything is same up to now. Why? basic salary, commission, bonus, dearness allowance is same. Now, HRA taxability, I will take it as a nil. Why? What is the reason? If I am apting the RFA, HRA I can't receive. Clear? Now, taxable value. Ma, remember, this is an provided own accommodation or hired accommodation, ma? Hired. Yes, sir. Accommodation is nothing but what, ma? Hired or owned, ra? Where they given hired? Huh? Sorry? No, that value of the house, if I am given outside persons, I can receive 20,000 rent. It is an own accommodation. Ma, it is own accommodation. Own accommodation. That rental purpose, I can generate rent 20,000 from that property. It is an own accommodation. If it is own accommodation, what is the percentages I have to check? Yes, ma? Surat city, definitely more than 40 lakh. That's why 10% of salary. Salary definition I have to check. What is that? What are the things included in the salary, ma? Please check it out. Basic salary, DA forming part. DA forming part is not there. Next, ma. Next, fees, bonus, commission. Bonus is there. Taxable allowances. Can you tell me medical allowance is fully taxable or not? Yes. Medical allowance is there, that is fully taxable. That's why I have to include. What is the salary definition I will get? 4,20,750. Again I am saying basic salary, DA forming part of retirement benefit 0, commission 0, fees 0. Next, bonus 27,750. Taxable allowances, medical allowance is fully taxable, so that's why 60,000. Finally, how much you will get? 4,20,750. Now, on this we can apply how much, ma? 20%. Now, please calculate the taxable salary. How much, ma? 7,62,000. I can make decision easily. Yes, here SSE is following old regime, ra? Same tax rates, right? Now, where you have a low income, if you opted HRA, you will get low income. SSE also opted this only. SSE decision is correct or incorrect? Correct. Hence, SSE taken the right decision. Dana. Again. Now, next question. Before going to the further questions, definitely they can ask this type of questions in exam. Rent-free accommodation is an perquisite. House rent allowance is an allowance. I need to know the taxable value of the both. Taxable value means that is income. On that I have to calculate tax. HRA exemption is available in both the regimes? No, only one regime. Now, so here I will open one thing, listen carefully. Yes, how they will ask questions, right? Yes, listen. Individual information they will give you, they will ask the tax liability, you have to calculate both and you need to suggest best one. Domestic company also information they will give you, you have to calculate tax liability by using both the regimes and you have to suggest best one. Now, whatever the differences is there between these two regimes, I will provide again summary. First, basic concepts related. What is the difference between these two regimes is there? One is rebate. We discussed it already. Remember, marginal relief under rebate is available only in which regime? 115 BAC, not in normal. Next, salaries differences. Now you have to buy it and you have to remember. Standard deduction, how much, ma? 75,000 in 115 BAC, here 50,000.
entertainment allowance deduction you can take only in the normal tax regime. That is an old regime. These three are deductions in salary chapter. From gross salary, in order to arrive the net salary, we have to reduce these deductions. What are the deductions? Standard deduction, entertainment allowance, professional tax. Yes, here 50,000 you can take, and this is also you can take. But these two things are not available in which section? 115 BSc. Remember, deductions related information is important. Next, retirement benefits. Leave travel concession exemption is available in the old regime, not available in 115 BSc. But directly they will give you what is it LTC exemption. LTC claiming amount they will give you, exempt they will give you, difference between these two only taxable. In which regime that is exemption is available? Old, not available in new. Next, allowances part will discuss. What is that? Allowances part. HRA exemption available in old, not available in new. Already we know. Next, very, very important MCQs. Children educational allowance, children hostel allowance, how much amount is exempt? 100 per month per child. Hostel how much? 300 per month per child. Maximum how many children? 2. This amount of an exemption we can take if you are following old regime. In new regime, these exemptions are not available. Again, I am repeating. Per month per child, you can take maximum for how many children? 2. Transport allowance. This transport allowance related exemption is available for the SSC who suffered with the disability. If company provided transport allowance for you, you can't take any exemption. If you are a disabled person, you can take exemption. How much exemption we can take? 3,200 per month. It is available in both the regimes. In salaries chapter, which thing is available in both the regimes? Standard deduction, but difference of amount. Next, what is that? Transport allowance is available. Next, helper allowance, uniform allowance, research allowance. If you are incurred for such a purpose, that is exempt. Sir, they are given 10,000. I use it for this purpose as 6,000. How much exempt? 6,000 is exempt. Remaining is taxable. This exemption is not available in which regime? 115 BSc. Next, tour, travel, daily allowance, conveyance allowance. That exemption is available in both the regimes. Whatever amount I use it for such a purpose as, I will get exemption in both the regimes. Truck driver allowance. 70% of allowance, 10,000 per month, whichever is what lower is exempt. Suppose they given 1 lakh, if I calculated this, whichever is lower, I got 70,000. How much is exempt? 70. How much is taxable? 30. 1 lakh they given, 70,000 I calculated here. Now, how much is taxable? 30,000. This exemption is not available in which regime? 115 BSc. I will repeat again, but you have to read these things also for doing the problems. I given summary, no need to verify from any other sources like searching of other materials also not required. I given everything now. City compensatory allowances, tiffin allowance, medical allowance, servant allowance, non-practicing allowance, entertainment allowance, dearness allowance. There is no exemption, fully taxable in both the regimes. Next, perquisites, there is a difference. Food and non-alcoholic beverage, here exemption is there up to 50 per meal. This type of exemption is not available in 115 BSc. House property differences, where we gone to? House property differences already we discussed or not? Yes. House property related differences already we discussed in clear way. Next, PCBP, normal depreciation you can take in both the regimes. Additional depreciation only you can take in normal tax rates. Scientific research in-house you can take in both. Outsources related, outsider contribution you can take in only one regime. 35 AD, yes sir, only one regime. 35 CCA, both the regimes. 35 triple C, one regime. 35 CCD, one regime. In PGBP, I will tell you again these things. Ma, in both the regimes, which sections are available? First tell me. Normal depreciation available. Next, which is available? 35 CCA is available. Remaining available only in normal rates. My income from other sources, just one change is there. Family pension, if anything is there, you can receive the deduction. Whichever is lower will be allowed as deduction. 1/3 of family pension, 15,000, whichever is lower. Here 1/3 of family pension, how much ma? 25,000. In new regime, how much you can take it as deduction? 1/3 of family pension or 25,000, whichever is lower. Income from other sources difference. Clubbing provisions, I will tell you only one thing. If any income of minor children is clubbing in my hands, I can take the exemption of 1500 per annum per child under this section. This is not available if parent is opting 115 BAC. You know this section already in your intermediate. Minor income is clubbing in my hands. Now I can take the 1500 per annum per child exemption. This you can take only if you are following which regime? Old regime. If you are following 115 BAC, you can't take this 1500 per annum per child exemption. Set off related already you know. Chapter 6A deductions also you know. Differences where you are going to take these. Yes, what are the deductions we can take in both the regimes? 80CCD, 80CCH2, 80JJAA, 80M, 80LA. The remaining all are not available in 115 BAC, BAA, BAD, etc. Yes, before going to that exam, this summary you should read. I can accept it. Salaries related, you have to remember lot of data. But I provided the summary, at least you have to refer this. Yes. Now, I will do one question. I will not do, I will show you how you can approach that question. It is study material question. If they want to test directly, they will give this question for 14 marks. Question number 20. If you have an time, you have to do. This is an intermediate question simply. Naresh offered an employment from one company. They are given one allowance they are given, another one perquisite. Allowance they are given, perquisite they will give. That means they are offering package 1 and another one package 2. Package 1 is allowances comprising, package 2 is nothing but perquisite comprising. Which one is best they are asking. This is not a difficult one. Simply both the options taxable value you have to calculate, then you can give the decision. And one more. One, can you tell me what is that question? Option 1 is talking about what? Allowances, right? Option 2 is what? Perquisites they are offering. But last, if you observe, rent-free accommodation, lease rent. That means RFA is in both the regimes. The remaining all are okay. But rent-free accommodation is common in both the regimes. Sorry, both the options. Can you tell me? Rent-free unfurnished home lease rent means hired or owned? Hired. If it is a hired, what is that? We have to check. If it is an hired, how to check the minimum of the rent paid or 10% of salary? But what is the salary definition for this? You have to calculate separately. This question is easy, but at least you have to do once. What is the difference in this question? First package always they are giving allowance. Second package equivalent perquisite they are given. But common thing in the both the options is what? Rent-free accommodation. You have to calculate both the options salaries. Yes. Which one is best? Which one is best? Package 2 is best. Which one is best? Package 2 is best. And one more thing, if I am given as an homework, please do it. If I am saying please do. If I am saying ignore, you can also, no problem. Lease or buying decision, make or buy decision, under this question you have to do definitely. Sir, maybe in this you have a motor car perquisite, etc. Just remember these adjustments. Okay. Sir, in this chapter, the very important thing is nothing but what is the differences between the regimes. What is the difference between the regimes? Okay, basic concept differences I told. Salaries, house property, PCBP, capital gain is same. Other sources difference, only family pension. Clubbing one difference. Chapter 6A differences you know. Then easily you can solve the type of questions. Clear? Now. One more. This is an I am taken from the last, I think 6 years back MQP question. Which question? MQP. Do you know arrears of salary concept? I will explain orally. Arrears of salary. Okay, simple example I will tell you. 2014-15, one company is not given my salary because of disputes we have. Okay, I am asking 12 lakh. They are given 8 lakh only. There is a dispute between the employee and employer. What is the due? 8 lakh. They paid also 8 lakh, but they are not given how much arrear? 4 lakh. On that year, how much amount already taxed in my hands? 8 lakh is taxed. 4 lakh they are not given. That is not at all due also because of dispute. Now they realized they are given the arrears of salary because of dispute, whatever is there on that year 14-15, now they are giving it to me. How much they are giving? 4 lakh. Now on receipt basis I have to pay tax now on that 4 lakh. Are 2014-15 tax rates are very low. Now tax rates are very high. How can I pay extra tax now? Because of arrears of salary received now, there is a tax burden on SSEs will be increased. So that's why on that occasion, Act is providing the relief under section, what ma? Relief under section 89 subsection 1. What is that ma? 89 subsection 1. Can you tell me what is the relief under section 89 1 ma? Because of arrears of salary received in this year, we have to pay the extra tax now compared to the earlier years. Now they will provide the relief. This question I don't know why they are asking also, but directly I can't explain this question. Okay, that's why in your handwritten clearly I given, wait ma, clearly I given one example. Ma, I given what ma? Example regarding the arrears of salary. Just check it out this example. Next you can solve this question directly. My concept first listen. 2014-15, how much salary due and received? 8 lakh only. How much arrears are there? 4 lakh. 14-15 time tax rates are different. Now different. When they are given these arrears of salary 25-26. Because of receiving arrears of salary now, I require to pay the more tax compared to those years. That extra effect you have regarding tax that will be provided as a relief under section 89(1). Yes, how to calculate the arrears of relief under and all the things you will get it out. This example, this question I given, this is a question first. In this space, whatever I given, this is a question and this is an answer. This question I am taken from cainter books. Self study only, easily you can understood, but use the calculator while solving this. In the same way, within seconds you can do this question also. What are the questions I provided as an homework today? Lease or buy, make or buy. Next, alternatives. One alternative is nothing but allowances. Another alternative perquisites. You have to choose best one. This is also, what is it? Areas of salary related concept. That's it. End. But you have to do it. Otherwise, don't expect that questions also, because basically easy. That's why I given one example also. Now shall we go for that MCQs related to tax planning? Remaining questions you can ignore, no problem. You can take as a choice, no problem. If that questions are came, no, don't ask me. Because of timing constraint, you can ignore even final day, before exam day also. But no. Please open MCQs, ma. Tax planning MCQs, please open. Very less MCQs only we have. We can close. And anyone can take the lead and please create an WhatsApp group. Anyone, if you want updates, if you want to get directions, then please create one WhatsApp group and face to face only, not online students. You can create, please add me also. Tax planning, page number 43 in your MCQs. Remember, now we'll discuss the MCQs related to tax planning. The first MCQ, company claimed the bogus salary expenditure for reducing its tax liability. Can you tell me it is what? Evasion. This is a falsification of records, fake expenditures they are recording. This is a tax evasion. Filing of return of income within the time. This is called as what? Tax management. A is used car for personal purpose, but he is charging it as a business expenditure. So can you tell me? He is using car for personal purpose, but he claiming depreciation as it is showing as an used for business purpose. It is what? Falsification of record, tax evasion. Now, countries, they are asking MCQ. Countries are there. They are designing some policies to attract the international trade oriented activities by way of minimization of taxes, by way of reduction of taxes, and they are ready to eliminate the other restrictions. That areas is known as what? Tax havens. So already I told you, many countries, territories or jurisdictions modifying their tax laws in order to attract the what? Investments from the foreign countries. That areas will be known as what? That countries is known as, that jurisdictions are known as what? Tax havens. Next, in respect of, already I told this MCQ, in respect of which our tax planning cannot be attempted at the time of setting up. At the time of setting up, you can do form of organization. At the time of setting up, you can do locational aspects. At the time of setting up, you can do what? Nature of business. You can't do at the time of starting of the business. It can be done at the end of the, or at the closure of the business only. Next, filing of return of income within the prescribed time. It is on what? TM, tax management. What are the objectives of tax planning? Remember, reduction of tax liability, economic stability, productive investment, maximization of litigation. Can you tell me? Minimization of litigation is an objective. So that's why which option is correct, ma? C. Sir, how I know, sir? These points already I explained at the time of theory discussion itself, because I know every MCQ. This is 200 or 300 times. Right? Okay. If the syllabus is not changed, I will lose interest. Right? So luckily, everything will change. I will also do hard work. If it is not changed, na, then I will become very lazy only, because everything, every question, every answer. If any new thing added, na, then I will take care. Okay. Next. It is an exercise by advantage of loopholes. If you are doing the one activity by taking that advantage of loopholes, what is that? Tax. Exactly in my class, I will insert into your mind these keywords. First, I will do that is only. The remaining things automatically you can remember. Loopholes, advantages, drafting mistakes, that words. Next, you have to tell me. An exercise, yes ma, minimization of tax liability we can do by using the all available allowances, deduction, exclusions, exemptions, etc. In order to reduce the tax liability, it is known as what ma? Tax planning. Whatever act contains the deductions, exemptions, and all the things we are using, we are reducing our tax liability. That is called as tax plan. Payment of advance tax on or before the due date, it is called as what ma? Tax management. Next, this is you have to take. Ma, we are deducting TDS from the employee's salary. Okay, but we are depositing also within the due date. Yes, this is called as what ma? Tax management. You have an obligation to deduct the tax. After deducting the tax, you have to deposit with the government. This is called as what ma? Tax management. Sir, maybe if you have any confusion regarding it, I will show you. In, okay, we can check this on 43 page. Okay. In this clearly I incorporated. That's why I taken much time for finalizing this content. Why you are taking that much time means I will show you one simple example. I checked every MCQs. I updated handwritten. So that value maybe you can get it out. In tax management, I written the example, TDS deducted, TDS deposited. Yes, after reading every MCQ, then I rewritten the handwritten. Written filing within the time. Advance tax installments. How can I write this? I read every MCQ, then after I incorporated. Return filing on time, tax management. Advance tax payment, tax management. Next, record of fake salary. I rewritten everything after reading MCQs. That's why this total process taken and everyone created. Yes. That's okay. I will take it now. Next, which chapter? 43 kada? Next, sir, motor car used for personal purpose, but they are charging this as an what ma? Business expenditure. It is called as what ma? Tax evasion. Yes, sir. We are selling the one residential house and we are purchasing another residential house for claiming one exemption, that is called as what ma? Section 54 exemption. Now this is called as what ma? Tax planning. We are selling one house, we are getting long-term capital gain, and we are purchasing one more house for claiming 54 exemption. This activity is called as what ma? Then after this MCQ already we explained, tax haven means no tax or low tax. Next, done. Thank you. We can meet tomorrow with the one more chapter. Yes, intentionally I given the homework related to what chapters, which concepts ma? Leasing decisions, make or buy decisions. So different alternatives related salaries question, you have to do it mandatorily. Thank you. Sir, I didn't understood what you are asking, Mahesh. Please message to my number. I will give a reply.
You can ask doubts within that particular Telegram group. Already we given Telegram group link in your purchase mail. So then it is an extremely difficult to see this desktop comments. So please try to understood. If you have any doubt, yes, you can tag me and you can ask the doubt. Array, this desktop is not showing the comments properly, otherwise I can see. Tomorrow timings also the same, 9 to 6:30.